Good morning. Morning, everyone. I'm your host, Cousin Fading, coming to you from theclosingprint.com. It's June 5th, Friday. Got about 8 minutes to go. 8 minutes to go. Stocks are off this morning. Some of you are starting to delve into semiconductor shorts. SOXS. Okay. SOXS. Looking for that to moderate a little bit as people take some profits to rotate into potentially the IPOs coming up, raising cash. Palantir, big gap down on Palantir.
If they go in to defend this here, they're going to have to sell more treasuries, right? What does that do to yields?
So, I would say a couple of things to that end. When we look at U.S. rates, I think the thing you got to respect today, you got the Bank of Japan that's raising rates, the ECB, the RBI, the bank account. So you're in a cycle today, and you've got a fiscal dynamic that I think you have to respect if you're the U.S. rates market. So that's one part.
All right, let's see what's going on. We got about 12 to 15 stocks advancing. The rest are either declining or unchanged on the NASDAQ 100. So that's a caution signal. Got Apple pushing up a bit this morning. Apple's trying to take out yesterday's high. We still need to get above Wednesday's high at about 317 or so. Apple's been holding that 9 EMA. It's been pointing up and to the right, along with the 21-day and the 50-day, pulling away from the 200-day. Tesla turning back up right now. Tesla. Okay, Tesla bouncing yesterday, as well as Tuesday and Wednesday. We've been inside this price action, Monday's price action. So we're looking for a bounce. That hasn't come yet. Futures are down. Futures are off. Okay. Really unusual price action. Yesterday, the markets rose unexpectedly. I didn't think that was going to happen. And here we are giving all of that back. Makes no sense. It is what it is, though. And non-farm payrolls. Construction was really good. Non-farm payrolls was actually a pretty good number. 172,000 versus a forecast of 89,000. Unemployment rate's 4.3%. Average earnings month over month has been growing. Forecast was for 0.3%, came in at 0.3%, as expected. Average earnings year over year is up 3.4%. Rick Reeder talking about non-farm payrolls numbers, so I'm going to listen to him for a minute. We got 4 minutes to go.
That obviously you gotta be sympathetic to on portfolio. I would say we built a lot of, what's happened recently, volatility's come down in the equity market pretty markedly. Not a single name, but in indexes, you can start to use volatility to protect your left tail, to protect the downside in the equity market. So, we've done some of that, particularly when you have, the news around it is just, we're not really going anywhere.
I'm looking at the forward curve on Brent. Anyone can do this on the Bloomberg terminal, by the way. Just type CT for the contract table on a commodity, and I see we don't get below 80 until 27. What about SpaceX? What about, an IPO that sucks that much liquidity out of the market, especially if you have 3 of them in a row? Does it matter to fixed income?
It definitely matters to equities. And, I was thinking our equity portfolio, whenever we think about, a name like this and it's a name we've been involved with and others are involved with. And so, you got to think about it within the portfolio about, how much, so obviously matters.
All right.
In the rates market, in the fixed income market, I think there's one thing that does. Equities have taken you to such an elevated position, a pension, a foundation, endowment, and now you get to a place where you're fully funded in some places. And when rates back up, your real rates, now we're at levels that are pretty darn attractive.
Let's see. Speaking of rates, let's look at what yields are doing. Okay, there goes Apple. Apple's on the move. Okay, let's keep an eye on Apple. Apple popping. Okay, let me get voice up and running here. All right. Okay, we got shorts covering going into the open. We got Amazon popping up. Netflix just popped up a little bit. Apple's popping up. Let me get ready to take some Apple off into strength.
Your most personal, intimate information is in the hands of strangers.
Let me just make sure I don't have anything here that I don't want to sell at the open. Okay. All right. That's all right. Let's see. Apple. All right. Let's get ready. And we're open. Okay, Apple. Apple just sold a little bit into that little pop. Apple. I'll sell some more if it keeps going. There goes Amazon. Amazon on the move. Apple on the move. Amazon. Tesla. Netflix. Apple. Okay, Microsoft turning. Okay, Amazon. Okay, Amazon will pop. All right, we've been waiting for this to bounce, push a little bit higher. STI batteries, that's up, looking really strong. Another gap up today. STI, thank you, Corey. Okay, Amazon's still going. Let me see what I want to do here. Amazon. Okay, there goes Amazon. Broadcom's down again today. Meta. Futures are trying to bounce. Okay, let's see what hedge flows look like. Okay, we got support right in this area. Let's see if we hold it or not. It's a 99 percentile at 75.40. Do we rally from here? 75.40. Okay, there goes Apple some more. Apple keeps going. Futures looking for that to turn back up. It's a little early. We need to get above 75.40 and see if anything else builds here. Okay, non-zero day. Okay, let's look at net open interest. Got a little resistance right at 75.50 and then 7,600. 7,600. 75.50, 7,600. Okay, S&P. All right. Amazon coming back in a little bit. All right, so S&P 500, 75.50 overhead. Sorry. Yeah, that's right, 7,600. 7,600 above that. All right, 75.50. We're gapping down. First level 75.40 is 99% right there. Okay, let's see if we can get above it. If we can get above it, we should rise. Okay, Netflix still pushing Tesla's up. So the sense is here, we got Rick Reeder and a lot of people talking about liquidity coming out of the market to fund IPOs that are coming up, several IPOs, namely OpenAI and SpaceX. There's a lot of money coming out, so people are taking profits off a lot of stocks, which should settle. Given we have purple or positive gamma, we should settle and start to move higher. Okay. Should we bounce here?
The companies that are tangential to AI, or not in our business actually, some of them has become directly top line revenue related to AI. Like that's where, quite frankly, the multiples are not as egregious today. And power, obviously power, and there is the demand function for those products. By the way, related to space, you look at the components there as well. Like those companies become pretty interesting today. People say,
Okay, let's see. Meta's still pushing here. Meta. Okay, we're starting to bounce a little bit. S&P. We're right at 99%. Okay, I'm going to shift over to Meta for a second. Meta's pushing a bit higher. Okay, we gave everything back from yesterday's gains. We do have 650 overhead is the call wall, so we could run up in that direction. Meta, let me just change the symbol here. Meta.
Size, NDX pulse, long dated, Meta pulse, deep core.
NDX they're talking about. NDX. Okay. All right, so the thought that we could pull back to the 21-day has been on my mind all week. This is NASDAQ, S&P 500. I was a little surprised about yesterday's price action, to say the least. We're in the lower half of yesterday's range. We started off the day pre-market minus 40. We wound up gaining 40 points on top of that. So we closed up plus 40 or 80 points total. Quite the reversal yesterday. It felt manipulated. I have no way of knowing that that's the case. It just didn't feel right. You know, we got a gap down and all of a sudden everything starts moving higher.
IWM pulse,
Apple, Amazon, Netflix still pushing.
Long dated.
Meta.
Deep calls. Triple Q's pulse. Avgo pulse. AMD pulse. DRAM. Don't forget deep puts. Zero DTE put strip.
And inflation is still way too high. You don't want to cut it, right? You kind of, if anything.
Okay, Amazon's still pushing here. Okay, Amazon had a pullback. We were looking for that bounce in Amazon off the 50-day over there on the right. Looking for this to bounce. Still early. A lot of people negotiating the open here. All right, so SOXS is a lot of you looking at this one as a short. SOXS.
Q's pulse. Long dated. Intel pulse. DRAM. Don't forget deep calls. Deep puts. Zero DTE. Call strip. Gamma. Avgo pulse. Gold pulse. Shenanigans. Spider pulse. Size. Zero DTE. Put strip. Zero DTE. Call side.
You gotta be anticipatory of, somebody said the other day, what happens with commodities, price.
SPX pulse. Long dated. Spider pulse. Size. SMH pulse.
All right. Watch semis. SOXS, semis, short.
Long dated. Deep calls.
S&P continues to pull back. Amazon, Apple, Meta still pushing higher along with Netflix. Tesla just reversed. Apple, Amazon.
Marvel pulse. Deep calls. Size. Tesla pulse. Long dated. Deep puts. Zero DTE. Put strip. Zero DTE. Call side.
It seems to be the only crack here that I see in finance.
Marvel pulse. Long dated. Deep calls. MBIS.
So is it a concern idiosyncratically? Yes, in some parts. We talked a lot about software, et cetera. Is it a systemic shock? No.
Okay, what are the banks doing? Let's see. Banks, are they following through? Okay. All right, a little bit of profit taking. Morgan Stanley, Goldman Sachs, Wells Fargo. A little bit higher, Wells Fargo.
Long dated. Zero DTE. Put strip.
Okay, Wells Fargo trying to follow through. Our little dip here. Looking for oversold conditions.
Q's pulse.
Less interested in taking a 1 minute oversold long setup at the moment as the S&P continues to drift lower.
Call side.
The Q's gapping down. Watch SOXS. Short semis. Semiconductors gapping down.
TSM pulse. Long dated. Deep calls.
Listen, I think that's really important, to think about, how do you think about, there's a lot of treasury issuance that's got to come to the market.
Amazon still pushing.
Zero DTE. Put strip.
Amazon still showing some strength here.
Financial velocity today, it's not really created by the overnight funds rate. It's out the yield curve toward finance, commercial real estate, residential, corporate. And that's a really big deal. Hearing, how does he
ASTS.
Okay, let's look at what is working on the NASDAQ 100. We got App 11 up this morning. Gapping up App 11, Dexcom. Okay, these stocks will likely continue to show strength if they're in the top 10 to start the day. Dexcom looks like it wants to follow through. Charter, CHTR. Charter coming off the low. Charter Communications Coca-Cola Europe, CCEP, looking like it might come out of this squeeze. That's number 4 on the NASDAQ 100. Costco, number 5 with a bounce. Costco looking good, defensive. Okay, what about what's Walmart doing? Walmart, WMT, Walmart.
Oracle Pulse. 0 DTE. Call side. Size. 0 DTE. Put strip.
Walmart. Walmart looking for the follow through. Let's see what my
SPX Pulse.
strategy there was to buy some more Walmart
0 DTE.
on a dip.
Call side.
Didn't hit my limit buy. Walmart. December should continue. Let's see here. What are these going for? About $3 actually. Buy vertical 120, 130. Oh, it's $4. $4. Okay, Walmart, Costco. What's Casey's doing? Casey's getting rejected at the 50-day. S&P still pulling back. S&P still pulling back. My apologies. Okay, so we're at yesterday's low and lower now. Tesla, Apple. I don't trust the markets. Anything that's up right now is probably going to be moving lower on the tech side. Let's see. XLK gapping down. All right, so Apple is up at the moment. Apple. Note the Bollinger Bands are coming together, so this could just stay right here. I would hold on to my cash for the moment. Okay. Don't immediately jump into the markets because we have a negative bias right now, even though we do have positive gamma below. All right, these are building. These weren't here a couple of minutes ago. Okay. The major level was right where prices started the day. Let's see, we'll go back here. 75.40, 75.25.
Deep calls.
Okay, 75.25 building. All right, we went right through that, and now we got 74.95 building. 74.90 is the gamma flip point. We don't want to go below 74.90.
Long dated. 0 DTE.
Google turning back up.
Size.
I would hold on to my cash right now. We started the week thinking that 10 weeks up, we've got to take a break at some point. You got this IPO next week. On Friday, I believe the IPO is Friday, right? June 12th. SpaceX. Next week is the 12th. SpaceX IPO. So a lot of money's coming out of the markets,
AMD Pulse.
getting ready to fund that IPO. So expect weakness to persist. Don't bite yet. It's still early. Got plenty of time left for the day.
Size. Long dated.
Okay, Walmart, Costco. Walmart and Costco. Walmart pushing.
Palantir Pulse. Long dated. Deep calls. Amazon Pulse.
That's very much how I save my money. So when I need it, it's just there.
Listen and watch on Bloomberg Television or wherever you get your podcasts.
Q's Pulse. Long dated.
All right, I bought some SOXS for a hedge. Okay.
Radio audiences, I'm Matt Miller. In May, the U.S. economy added 172,000 jobs, far exceeding exceeding all estimates. Let's bring in White House National Economic Council Director Kevin Hassett. And I mean, frankly, congratulations are in order. Kevin, this is an unambiguously good jobs number.
Big blue, long dated, deep calls, AMD pulse, Palantir pulse, ARM pulse, 0 DTE, call side, size.
Okay, I'm giving a few minutes. Giving it a few minutes to see if the markets can bounce here. We do have positive gamma. We know that. Okay, we do know we have positive gamma. So we're looking for dips to get bought. Don't need to jump in immediately into the markets. I was contemplating getting in early, and then I said, you know what? Let's just let it play out and see how all this positive gamma down below supports price or not. Okay, so I don't have the power to turn the markets like institutions do. None of us do. So we need to wait. We need to wait at this point, see if we get any kind of resolution at support. All right, so here is Walmart. Walmart's on the move. Okay, Costco. What's Costco looking like? Costco. Costco looks really good. Here's Costco. Costco. Costco with a bounce. This is good to see. Let's see. If BJ's is bouncing too, that would be a trifecta. Let's see. BJ's. It is. Okay, so BJ's is bouncing. Let's see. Dollar Tree. Dollar Tree. That would be a quad vector. No. What about Dollar General? No. TJ Maxx. Yes. Okay, so retailers look pretty good. Retail looks pretty good.
Nvidia pulse, long dated, SMH pulse, Tesla pulse, deep calls, triple semi pulse, Marvel pulse, deep puts, SPX pulse, Apple pulse, long dated, Marvel pulse.
Okay, Ross stores. Let's see what Ross is doing.
SMH pulse.
Ross stores for now.
0 DTE, call sign.
Casey's. Let's see. It was getting rejected before. Casey's. Casey's is holding. Okay, let's see what this looks like. It's trying to get above that 20 MA, Brother Bill.
NBIS, long dated, triple semi pulse, deep calls.
Not in a hurry. Not in a hurry. Okay, just sitting and watching. All right, S&P continues to fall off. I don't know. What do you guys think? Yesterday felt really strange. Almost felt manufactured, right? Like institutions want, if they're going to distribute, if we're going to go through some distribution and we pull back for a week or two and consolidate, what's likely to go first? I would say probably semiconductors. Those have been running like crazy. So I bought some SOXS. A couple of our members DM'ing me telling me they were buying SOXS before I did. So that looks pretty good, Ursel. Are you in Greece now?
Spider pulse, long dated.
You make it to Greece? Okay, Core 1M. It does take a few days. It takes a few days.
there, and an uptick in hiring in a lot of healthcare services.
Yeah, just Corey, just keep in mind that Core 1M, while it is turning, what it's telling you is that calls are getting crushed. It is a lagging indicator in that it takes time. It takes time for the markets to, all right, it's at 7 right now, 780. All right, so we are moving higher. That's a good sign. It's telling you that calls are getting crushed right now. It's not good if you have calls, but it's good for the overall market. All right, we should bounce here soon, I would think, right?
Silver pulse. 0 DTE. Call size. Size.
That kind of thing is, and then it gets offset in September. What's going on? It's all state and local.
I'm looking at it on TradingView, Corey. I see 786, 780 right here.
Soft pulse. Long dated. Size. Deep calls. Oracle pulse. Long dated.
Okay, starting to bounce. Watch trace. Looking for this to hook upward, trace. Do we get a manufactured move? Yeah, good point. Yeah, good point. TradingView is delayed. Okay, let's get. Let's see if S&P is going to reverse here. What's today's the 5th? Okay. Mm-hmm.
I think that's part of it, right? NASDAQ was incentivized to do this because they wanted the listing of SpaceX.
Okay, hedge flow is starting to turn up a bit.
Wouldn't have gone to them if NASDAQ wasn't doing this, but that's certainly part of it. The other part of it is even if
Watch for turn here, hedge flows.
0 DTE. Put strip. Gum.
30 days or something along those lines, they were going to keep it, relatively still long lasting. So instead of 6 months, it's back to 12 months. I am mostly surprised. I kind of thought S&P was going to, go with
Intel pulse. Long dated. Deep calls. Triple semi pulse.
they're the leader in the space and they decided they're going to keep things the way they are. And I think a lot of people are happy about it.
I just want to point out, James, that if you were here at Bloomberg, our style, our official rule is indexes. You have to say indexes, not indices. In terms of what happens this
Triple semi pulse. Long dated. Deep calls.
IPOs of all time, and although some of them performed well, most of them didn't.
All right, looking for a bounce. All right, we're starting to see some short covering.
Is this maybe a smart move from the S&P?
Well, who knows? Because again, they are likely. It's going to. Well, we don't know. It will be eligible for the S&P. You got to remember, the S&P is a committee. It's run by a group of people.
Bitcoin Ponzi pulse. Arm pulse. Shenanigans.
Okay, watching hedge flows here. Let me go to 5 minute. You know what? Let me just zoom into this. Okay. We got a lot of positive gamma down here, so it's possible for the bounce. Got to see it first. Okay, watch that hedge flow line. There's this level right here at 74.95. We want to stay above 74.90. All right, we're rolling over again. All right, NIMO is at
Shenanigans.
minus 18 as the markets consolidate.
0 DTE. Call sign. Size.
Okay, watching the S&P. NDX. IWM. Okay, all these are much lower.
Long dated. Nvidia Pulse. Deep calls. SMH Pulse.
Dad always said that laughter was the best.
Okay, everything is down a little bit right now. As you might expect, we've been up for 10 weeks straight. You got to leave room for the potential consolidation. Okay, so this is looking pretty cascading
Tesla Pulse. Long dated.
potentially, right? These candles are getting bigger and bigger. After that big run up we've had for 10 weeks, this is week number 10. So 9 weeks up, we're giving back all of last week. All right, S&P just made another low. All right, let's see what VIX is telling us.
Nvidia Pulse. Long dated. 0 DTE.
All right, VIX on the move. I got the 22 strike. We're still pretty low at 16 and change. Okay, what's working? Okay, that's great, Benny, but what's working? All right, so Walmart is working. Costco is working. Okay, Walmart, I was trying to get in at 3. I had a limit order to buy on a dip. It never happened. Okay,
Spider Pulse.
never happened.
Long dated.
Pre-market, it was down a little bit.
TSM Pulse.
I had to re-enter my limit order to buy. Never got close. Now we're just going here. So this is good. I want to add to Walmart. Costco looks good. I might start a position in Costco as well if it gets through the 50-day. You can see the 50-day is fairly flat for the last 8 weeks or so. So there's really no hurry on Costco, although it did move above the 20 EMA 60-minute.
Call sign. Size.
You know it's going to do well. I don't need both of these, so Walmart is good. Let's see what XRT looks like. XRT retail. Okay, so yesterday I talked about this. All right, so the markets tend to trend and consolidate, right? So in this case, we trended higher into the end of May, consolidated for the first few days of June. Now it looks like retail wants to go. I don't know. We'll see. It might just continue to consolidate. But if you look at Walmart the same way, Walmart pulled back. Now it's turning back up pretty decisively. Okay, 120. All right, that looks good. So it should add to Walmart.
WDC Pulse. Long dated.
All right, CBRX, that did dip a little bit, but it's starting to rally.
Tesla Pulse.
CBRX.
0 DTE. Call sign. Size.
S&P is still drifting lower. S&P. VIX is still rising. Okay, S&P is still drifting lower. Okay, let's see where else. 99 percentiles. All right, so this quickly rolled over just now. Okay. Okay, we got this level right here. That's a 99 percentile. It's 74.95. 74.95.
NBIS. Deep calls. 0 DTE. Put strip.
Do we bounce there? Hard to say. 74.95. Core 1M is driving higher, so that's good. 74.95. New 99%. We're at that level now. Tagging 74.95. Gamma flips below 74.90.
Soft pulse.
to negative.
DTE, call side. Size.
Okay, looks like we might bounce here. Okay. Okay, looking for 74. 99 percentiles right there. Okay, looking for a buy.
Triple semi-pulse, deep calls. Google pulse, long dated. 0 DTE, call side. Size.
And that's going to be a problem down the road, perhaps, for the administration, which is taking its victory lap on job creation, if people still are unhappy because they're not keeping up with inflation.
I was talking to NEC Director Kevin Hassett months ago. He pointed out, because I asked him about the manufacturing
Sandisk pulse,
jobs,
long dated.
that
Deep
we are
puts,
seeing a big
IWM pulse. 0 DTE, call side.
He
Size.
also said that real wages are positive, even though we have average hourly wages of 4%, and of course inflation is much closer to 4%.
Well, sure, it all depends on when you start measuring from, and they're starting to measure from earlier on. We're talking about the average hourly earnings taking a dip over the last couple of months. They were up above inflation, so now you're getting
AMD pulse, long dated.
but they were up earlier, so if you average it out, then Kevin's right, you get a number. The biggest thing that he was talking about that is something that you got to keep an eye on is, yes, construction jobs. Most of that for AI data centers. And when those data centers are completed, those construction jobs go away, and the number of jobs in the data centers is much, much smaller. So we may see a reversal there that isn't going to work in the administration's job counting favor.
All right, Mike, thanks so much for being with us today. I'm sure you got a much longer day ahead of you.
SMH pulse, arm pulse.
Okay, looking for the bounce here.
Deep puts.
Now, the S&P 500 set to start a record-breaking 9-week winning streak as the payrolls report fuels Fed.
Okay, so far we're bouncing right at this level, 74.95.
For equities, I've said it before, even though you're getting out of Congress a little bit of digestion, you have so much in the way of buyback that the net supply of equities is just not that large. So, I'm not saying you can't pull back on numbers like this or war-related issues, but the technicals underlying the equity.
Okay, the New York Fangs look ugly.
Meta pulse, long dated. Avgo pulse.
That we've seen, does this have more to do with, getting ready for a SpaceX IPO, or do investors take from things like Broadcom and CrowdStrike that
Size, long dated.
If you really look at the distribution of how the market has been performing, technology has been one of the best performing, and from a technical standpoint, is extremely overbought. Now, can you have some repositioning happening? Certainly, some people might be repositioning, getting ready for the SpaceX IPO, but tech was way overdue for a pullback, particularly
Just because it's a 99 percentile level does not mean it's a guarantee it's going to bounce. If the markets, if they keep selling,
Long dated.
we're going to go lower. All right. Remember, this is 10 weeks up, so there's that as well. The Bears are due. The Bears are due for something.
Marvel pulse, long dated. Deep calls. ASTS. IBIT pulse. Crypto is for real this time.
I love her. I love her sarcasm. Crypto is for real this time. Oh, that's hilarious.
Marvel pulse.
No bounce yet. No bounce yet.
Deep calls. Oracle pulse.
So I'm really looking forward to having the ability to talk about other companies other than the Mag 7, to be quite honest with you.
Yeah, that will be fantastic. And of course, we have trips to Mars to look forward to. It doesn't seem like this market is overvalued. I look at the median forward
Apple
PE on
Pulse,
the Nasdaq 100,
long dated.
and it's not low. According to AskB, it's at 27.2 right now. But if I look
Okay, what's SQQQ doing? Walmart looking pretty good here. Walmart, Costco, these are driving higher.
Size.
Okay.
Nvidia Pulse, long dated, deep calls. 0 DTE, call side. Size. Nvidia Pulse, long dated, deep calls.
What about a broadening out, Marion? Because the complaint or the concern has been a concentration, but it looks to me like a
Google
lot of sectors are
Pulse,
seeing
long dated,
expansion.
ASTS, 0 DTE, call side. Size.
Mhm.
0 DTE, call side. Size.
But we have much broader participation within the market.
0 DTE, call side. Size.
I think the life of this market is very, very sustainable. I like that we're finally getting a pullback. I think that's going to extend the life and the rally within the market.
Gonna ask about Bitcoin, as I know you're an owner, or at least you have been. We're looking at 60,000 right now. It's had an incredible decline. Is this investors looking to free up some capital?
0 DTE, call side. Size.
Certainly could be. If there are speculators in there and they haven't been making money in Bitcoin, I'm sure they've been chasing some of the hot stocks within the tech space. So I do think that there's some repositioning that's happening within the market. 60,000 is a very important support level for Bitcoin. If we really can't hold that level, I think you're going to continue to see the crypto market under pressure. And I think Bitcoin is a really
Size.
good
Long dated.
barometer.
SanDisk Pulse.
And as we're seeing the volatility within the market, I think Bitcoin is telling you that to expect continued volatility. Now, from a long-term perspective, I still think
Okay, watching for a bounce.
portfolio, but we always advise
Walmart.
very volatile asset class. Basically, it's still in a bear market.
Okay, 120.
And I don't see signs of
Looks good. All right, can we get S&P to climb here? Okay, S&P 500, S&P
Long dated.
starting to reverse now. Okay, S&P is starting to reverse.
Ponzi Pulse. Spider Pulse. Q's Pulse. Nvidia Pulse. 0 DTE, call side. Size.
Pump it up.
0 DTE.
Pump up the volume.
Gum. Meta Pulse. Long dated. Bitcoin Ponzi Pulse. Deep calls. Triple semi pulse. 0 DTE, call side. Size.
What do you do when you have a bad day?
All right, so far, trying to form a bottom. All right, so some shorts covering. That's about it for now.
Tesla Pulse, Oracle Pulse, Deep Calls, Avgo Pulse.
All right, more people join in. We'll see what happens here, but remember, we're 10 weeks up. It's a Friday. So this is likely to be the first week where we start to consolidate if we stay down here. I'd be shocked if we do what we did yesterday. I mean, yesterday felt manufactured. I don't know. It just, maybe it's just me. Having traded for as long as I have, it just didn't feel right. Markets, I mean, I like it. I liked it. A lot of stocks were able to rally. Just didn't feel right. You know, we're due for a pullback. The markets are down 40 handles pre-market, and then rallies all the way back up, and then adds 40 on top of that. Yeah, Vinny, but what about positive gamma? Yeah, absolutely. Positive gamma telling us what dealers would do in a circumstance. Okay, positive gamma. We should bounce here. Should be in the operative word. Guarantee, not a guarantee. So I'm just sitting tight right now. See what happens. If we get any kind of rally, we got all day long for that to work. So I want to start seeing some higher lows. Let's see what S&P looks like. All right, 1 minute chart looks good. 1 minute chart on S&P looks good so far. Oversold stochastic, oversold RSI. I like the setup. I just don't like the environment. Being 10 weeks up, retreating, knowing that there's a lot of people looking to close positions, gather some cash, get ready for the IPO next week on Friday for SpaceX. We got other big IPOs with, was it OpenAI or whatever the hell it is? A bunch of new IPOs. All right, let's see how far we go with this. Rip this back in the other direction would be really cool.
Crypto is for real this time. Deep puts.
Crypto led us lower over the last couple of weeks, right? Crypto hasn't been doing its thing except pulling back for the last couple of weeks. Crypto. All right, we're back down here at the low that we put in on February. Is that going to be enough to get some people interested? I don't know. I don't know. But we're starting to bounce. CBRX, blah, blah. Did that just gap up, CBRX? Let me see here. CBRX is through 20 now. CBRX is through 20.
NBIS, long dated, deep calls.
All right, so we're starting to move here. Okay, take some longs on S&P 500, looks like. Probably put a stop underneath 7,500 or 7,505, 7,510. Just keep moving your stops up. This looks pretty good so far. Hedge flows starting to turn. It's after 10 o'clock. Looking pretty good so far. Okay, well, more and more people start to say, okay, looks like the bounce is in. Looks like the 99 percentile has held. 74.95 held.
Nvidia pulse, long dated, Marvel pulse, deep puts, shenanigans, Nokia pulse.
About the slowdown that had concerned us from Joel. We saw a lot of job openings, right? But apparently, when you get a job, it takes much longer to actually lock that down, and nobody's creating jobs, right? It's a huge issue. I mean, in a very positive
Triple semi pulse, TSM pulse, long dated.
Hires and an increase in the attrition rate, the exits. And of course, the growth is just the inflows minus the outflows. But we're actually seeing declines in outflows, in attrition. So that's problematic. I think
TSM pulse, long dated, Google pulse.
What needs to happen for that to change? I mean, why is it frozen? I think the big story is AI.
Zero DTE, call side. Size.
It means it's what AI is doing. It's the way that people find jobs. Right now, there's a lot of new job boards popping up that are basically treating job market where they're taking candidates and saying, you can create a very custom
All right. 74.95. 9.
A lot of these slot applicants, and they don't really
45.
the utility of posting jobs is declining tremendously. And I think a large part of the decline
45.
and the search and match process is completely broken. So people are staying in jobs, they're just not looking for jobs, which is troubling for a few reasons. Another reason why that's troubling is about the unemployment rate. The unemployment rate is kind of stabilizing, but
AMD pulse, long dated.
Unemployment is a positive unemployment. That's the job search and match. People just kind of being between jobs, looking for stuff, and getting better matches, and that's declining. So I think the natural rate of unemployment is declining as well. What do you make of the for a long time I would talk to lawyers, investment bankers, and they were all saying we have no reason to bring any first years in anymore because we can do so much with AI. But now it seems like they're saying we need kids.
So far, so good.
So they can do stuff with AI. Yeah, it's interesting. I mean, we've seen a little bit of stuff in there. The story is still negative for entry level.
Zero DTE, call side. Size.
They're more high variance bet. So if there's more uncertainty, then all you can do is kind of optimize for the short term. I know you have young kids, so really off the beaten path reference in Frozen 2. When the path ahead of you is unclear, all you can do is the next best thing. And so what we're employing.
All right, so let me go back to current time frame. All right, that looks good.
NBIS, long dated. SMH pulse, spider pulse.
The other thing is the direct AI impact. So the issue is that you can think of the job as having two parts. One, it's a collection of tasks that need to be executed. Another, those collection of tasks need to be orchestrated. They need to be coordinated. So as we're seeing improvements in the ability to execute tasks,
SMH pulse, NBIS, long dated. Intel pulse, deep puts, shenanigans, SanDisk pulse.
I don't want to spoil it, but Elsa creates a horse from ice, and then she tames it and rides it forward. What a talent! What skill! Yes, what skills do the kids today?
Zero DTE, call sign. Size.
We added this month. It's like food services.
All right, so we're watching for a bear flag. Okay, watching for a bear flag.
Hardest to get. Right. I think that's right. It's the bill, I should say. Hardest to bill. It's a lot of small clinic type jobs.
Yeah. Apple trying to hold on. So is Amazon, Google. Everything else is weak at the moment. It's a Friday, folks. It's a Friday. If you're expecting the kind of reversal we had yesterday, it's going to be tough. So far, we've managed to bounce at 74.95.
Sandisk Pulse, Deep Puts, Shenanigans, SPX Pulse.
There are a lot of S&P 500
Russell Pulse,
action.
Nvidia Pulse.
Okay, here's the S&P turning back down now.
DTE, call side, size.
Walmart, little dip there. Costco.
IBIT Pulse. Crypto is for real this time. Long dated, deep calls. Tesla Pulse. TSM Pulse. 0 DTE. Call strip. Bitcoin.
Okay, I'm just sitting here
Pulse.
watching. If we make a higher low here and then a higher high, pretty good odds that we're going to continue. Right now, it just feels like a bear flag. Feels like a bear flag, looks like a bear flag, smells like a bear flag. You know, people looking for the same kind of action that happened yesterday. Is it just shorts covering at the obvious level, 74.95?
Holy cow. SPX call.
Still got the whole day ahead of us. I'm going to take a 2-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, June 5th, 10:24 a.m. I'll be right back.
Zero DTE. Call side. Size. Meta Pulse. Long dated. AMD Pulse. Size.
A fad to some, FSTZ, the future of money to others. You may rest in 10 seconds crypto's $1 trillion swings. Will others follow the noise?
AMD Pulse. Holy cow. SPX calls. 0 DTE. Call side.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on stocks. We are an hour into the session after a blowout jobs number and ahead of
AMD
just 1
Pulse.
week away from a SpaceX IPO. It's the largest IPO in history. They're going to raise $75 billion. So investors may need to take cash from other places. You can see the S&P 500 down almost 1 full percent, and the NASDAQ 100 down.
No follow through yet.
I should mention also that yields are rising. So if you take a look at
Got the whole day ahead of us, but there's no follow through yet.
Nokia Pulse. Avgo Poe. Long dated. Shenanigans.
Because the market is now pricing in 1 full rate cut. Brent crude, fortunately down 1%, 94.04, but it's not helping any of these big tech stocks. Nvidia is down 3.25%. It's a more than $5
Holy
trillion
cow.
company.
SPX calls. 0 DTE.
SPX calls, you heard that? We'll see what that entails. Remember, calls can be, whenever you hear these trades, you got to look at price action, because that holy cow SPX calls could be just dealers closing positions. Somebody goes short, the dealer has to go long, the opposite side of the trade. And then if we continue to drop off, the dealer's going to start selling futures. We're very close to a gamma flip point, folks. So just keep in mind that if we drop below 74.90, if we drop below 74.90, that would become more bearish territory. Okay, why is that? Why is that? Because let's go look at the indices, and you can pretty clearly see what happens when we start to drop below this level. Okay, 74.90 is down here, but we get a lot more negative gamma. It's not a whole lot of negative gamma compared to positive gamma overhead, but it does get negative down below, which means we could consolidate a little bit more. Let's look over here.
Deep puts.
7,500, 74.90. You can see we start to drop off, and more negative gamma, the blue is what I'm looking at down below. Okay, so we need to stay above 74.90. And hedge flows continue to point lower right now. So
Progressive understands first times can be challenging. That's why we created the Uppayment Program, down payment assistance for first-time home buyers. Because first times are easy with a little help. Learn more at
Sandisk Pulse.
progressive.com/open-the-house. I swear this game is weird and just until mid-June like RGTZ. Then suddenly it just pops off. Like I was barely paying attention. And boom, bonus, bonus, bonus. Didn't even realize how fast it stacked. I kind of like that unpredictability. They give you a welcome bonus so you don't start from zero. I'll try it for a minute. And nothing happens, just leave. But when it hits, it hits. GG may rise in 10 seconds.
This is it. The trade that will name your number. SPX Generation Speed, Innovation, and Integration. This is the fixed income EMS that will make sure you win. Expect more from your execution management system. Bloomberg Trade Units.
CRCD. Some see heroes. Others only heroes. CGCTM represents athletes. MSTZ to some, the future of money to others. We see crypto's trends, the end of jobs, or the end of human struggle. We see the endless funds fueling the AI. Others follow the noise.
Size. 0DTE. Put strip. Gamma.
We're a veteran-owned company, and we've been building custom submarines for over a decade.
Ensures high quality efficient work on every project. No subcontractors involved.
With 3 custom designs to on-site project reviews and permit assistance, we make the process stress-free and easy for you.
Our goal is to bring your vision to life. Come see us at our showroom and let us build the perfect submarine for you.
MLACU may resume in less than a minute. Only on
Spider Pulse.
Join me each week on Wall Street Week for stories of capitalism, business, markets, economics, tech, and climate. More than what you know, it's what you need to hear about.
SPK may rise in 10 seconds.
Cybersecurity firm Rubrik reported its strongest quarter on record and raised its outlook as AI boosts demand for its products. However, shares are lower this morning amid a very broad sell-off across tech stocks. Rubrik has 30 buy ratings on the terminal and 0 sells, so it's safe to say the street loves the stock. Also this week, the company announced it joined Anthropic's Glass Wing project with access to Mythos. Here to discuss its Rubrik co-founder and CEO. It's great to have you on the program.
Q's Pulse.
It's a tough
Long dated.
week to announce
0DTE. Put strip. Gamma. Spider Pulse. 0DTE. Console. Size.
Yet the market sold the stock. What's happening right now?
Matt, thank you for the opportunity. Look, at the end of the day, we created an amazing watch. If you look at our top line, we grew 32% year over year at 1.57 billion in subscription ARR. And not only that, we generated 74 million
Q's Pulse.
of free cash
Long
flow,
dated.
90%
Size.
margin. Look, market is market. I mean, AI trade has been very strong and it continues to have this feeling of up and down. It'll all settle down. At the end of the day, if you have a great business, market will come to recognize it.
All right, so it is, as I said, a tough day, tough week. for tech earnings, especially related to AI. We talked about your connection with Mythos and frontier AI models. That, as you have said, is driving more customer conversations, I can imagine. Are they actually converting into bigger contracts today, or are you still in the education phase with these, old and new logos?
If you look at like what is happening with Mythos and AI frontier models, it has really brought this reckoning.
Crypto is for real this time. Long dated.
You need to be ready for the attacks that comes to you. And you need to cover or restart your business upon an incident. And this is a significant customer demand. Which you
All right, so dipping again. I was just thinking while I was making coffee.
Shenanigans.
Probably a lot of you have, maybe not a lot, probably some of you that are new traders were not heeding the concerns that I was putting out there for you, that the markets were up for 6 weeks, up for 7 weeks, up for 8 weeks, up for 9 weeks coming into this week. And I kept saying that maybe you should take some profits off, bring your stops up and tight. If you had done that this morning, you probably got stopped out again. But the point I'm trying to make is next time Core 1M gives you a good signal. All right, I got a couple of DMs. You know who I'm talking about. Next time Core 1M gives you a signal below 8, start taking profits. I'm talking about short-term profits. I kept saying over and over and over, if you're going to trade options, make sure anything that expires in the next 2 weeks, I said that several weeks ago, you want to roll out to at least June. Okay. And then this week, we're talking about rolling those June options out to July. The reason is because the markets are still pretty strong. We do still have positive gamma as long as we stay above 74.90. But we're up for 10 weeks. This is the 10th week, and it looks like this is the week that we're going to take a break. So next time Core 1M gets down below 8, please listen and take some profits off. Okay. And it's great to just say, okay, I'm going to give it one more day on Micron. One more day. It just keeps going up. One more day. Well, guess what? One more day ended on Wednesday. We never know for sure when that's going to happen. But when you get Core 1M below this level, we know to look at the scanners, right? We know to look at the scanners. If we look at the big cap tech names, they're all congregated over here on the right side. That's telling you calls are super expensive. So even if you're going to hold on to your calls for longer term swings, roll out to August, September, October, towards the end of the year. Okay. Because short term, this is probably going to come right back into the left side of the screen and then right back to the right side of the screen over the next several weeks. In the meantime, you've collected cash. And when it gets down, when these stocks pull back a little bit more, we'll have an opportunity. All right, so I hope that addresses some of the DMs I had this morning and over the last few days. Concerns about, not listening. Should have listened. Should have listened. It's a learning experience for you, right? So just chalk it up to experience. The market's going to go up. Long-term stuff, I'm not really that concerned about. When it comes to, investing time frame, even Bitcoin's probably going to bounce pretty soon. If you're still in Bitcoin from up here when it touched the 200-day, yeah, you're probably pretty disappointed that you didn't sell when it dropped below the 9 and 21-day or the 50-day. 4,000 point range right there, but it's not like holding on and capitulating now at 60,000, which a lot of people do. I can't take the pain anymore. I'm going to throw it away. And it's right in the area where you're going to start to possibly see a bounce. What else? So the S&P 500. Okay, so this is week number 10. We're still up, No, we're not. We're down for the week, right? Okay, so the week is down. Okay, so the week right now we're off, not even 1%. Not even 1%. But you've been collecting cash, most of you. Right.
0 DTE.
If you look at the longer term stuff like TRBCX, this is still looking pretty good. It needs to drop below the 10 EMA for me to get concerned. Now you can enable the 5 EMA or the 4 EMA, 4 weeks a month, right? So you could enable a 4 EMA,
Q's pulse.
and that would account for short term. So let's say we lose the 4 EMA next week. Okay. So I'd probably reduce my exposure here a little bit. Not 100%. I wouldn't sell everything, but I would probably maybe reduce a little bit in my long-term stuff because we come up for 10 weeks. And this is the first week where we might pull back. But this strategy, you want to stay long above the 10 EMA, short below the 10 EMA weekly.
Inferior pulse. Long dated.
Same thing with the 50-day, basically the 50-day.
Q's pulse.
So if you look at TRBCX from that perspective, we got long in the end of 22, right? TRBCX, we got long at the end of 22. That was the end of the bear market. End of 22, we got long, so we're up quite a bit, over 180%
Long dated. Sign.
on the core position. So long term, not to worry. Short term, calls got super expensive. Core 1N dropped. That gave you your signal. Okay, so 184%
Long dated.
from the 22 low.
Triple semi pulse.
Now, granted, that's a nice 4-year span, but the signal works nonetheless. Okay, so why is this down here? Why is that way down there? The signal was there. Okay.
Triple semi pulse. Long dated. Deep puts.
Okay. Okay, momentum is starting to turn up, though. That looks pretty interesting. S&P bouncing. S&P. All right, so core 1M's turned back up again. So calls are getting crushed. That's good for the markets. Not good if you have calls short term. Hope that makes sense. Hope it makes sense. If you're a new trader, let me share my experiences with you. I'm not always right. I get clobbered sometimes. Broadcom right now is down. I got to manage that one. Not looking forward to it, but I got to manage it next week, right? The put side probably going to be fine, but still got to manage it. Zscaler, that's another one. Not too happy with Zscaler, but we offset it with taking positions when it looks like they're ripe for the change in direction, right? Walmart, Costco. Retail wasn't looking that great a few weeks ago. All right, here's Walmart. Walmart. Okay, so a few weeks ago, well, a couple of weeks ago, Walmart was dropping off. Retail in general, XRT, was just chopping around, still chopping around. Certain outliers like Costco faded. So even though we have some stocks that need to be managed or are not working right now, we got plenty of time. I got August and September options that I'm dealing with. So those can bounce. In the meantime, Costco, Walmart, these are working the opposite. So these are giving us some gains. So looking for Walmart to follow through. Okay, what's Apple doing? Apple's kind of bucking the trend. Apple's hanging out. The thing with Apple is it's probably going to consolidate. It's not going to move much, I don't think, beyond 315. Certainly not that upper Bollinger Band. It looks like the Bollinger Bands are coming together. It's about the time that we need to consolidate a little bit, into June, and then out of June, from the end of June into July, tech tends to outperform. You've seen that chart before, right? All right, so let's look at seasonality. So coming out of June, here's June right there. Coming out of June, okay, into July tends to be stronger. July tends to be stronger overall and for tech. Now let's look at the Qs. Okay, and go back. Let's use 20 years as our benchmark, 20 years. On average, June tends to be a little weaker, and then into July tends to rally. So we're looking for that rally. That's why we have options that expire further out in time.
0DTE. Call sign.
As Core 1M keeps telling us that we're still kind of expensive. Just because we're above 8 doesn't mean it's all over and we can start buying like crazy. We still want to see this start to rally. What this is telling you is that you should see weakness, and anything that was in the right side of the screen, okay, you should see weakness. So these calls, if you're holding on the calls, hoping that these are not going to pull back, if they're short term, you're going to lose value because this is moving higher now. This is telling us exactly what we want to see. We want to see those calls losing value so that they're not overextended. It's kind of counterintuitive when you think about it, but all right, S&P, we're looking for the bounce. Can we get above VWAP? Okay, we could have a flat day today too, right? Stay above 74.90, 74.95, 99 percentile level. We could stay above this level and just let me see what up down volume looks like. Up down volume is probably 1-to-1. What's this? What was that? CBRX trying to get back above 20. Cerebras, CBRX, the derivative, 2 times ETF.
Shenanigans.
And say, like, hey, we have a fantastic product for you, and then organize a government contract. That's a whole different kind of.
Imagine if you had bought, when I'm talking about CBRX, this is a new IPO everybody knows about. A wafer AI chip. I'm not exactly sure of the technology. So before I beat it up, let me see here. Cerebras technology. Compare.
Tesla Pulse. Long dated. Bitcoin Ponzi Pulse. 0DTE. Call street.
Okay, so here's the difference here. Cerebras challenges NVIDIA's AI dominance by shifting from traditional graphics processing units to wafer scale engines. So that whole wafer that the CEO was holding up compared to GPU units that are chained together the way NVIDIA is doing it. So these guys are up and the funny thing is they're building alliances with everyone except for NVIDIA. I wonder why that's the case. Obviously, because NVIDIA is their main competitor and vice versa. So a single chip the size of a dinner plate.
0DTE.
Whereas NVIDIA chips are stacked, right? And they're made by ASML. Let's see how ASML is doing, by the way. ASML pulling back a little bit. It's trending though. Okay. So short-term options are going to lose some value, but longer-term options are going to be just fine. Theta won't kick in as much. All right, here's ASML. What about Taiwan Semi? Taiwan Semi. Okay, that gap down or a move lower, I should say. Looking for a bounce there. Longer term options, I have August options, so I'm not that concerned. We could pull back a little bit or consolidate. Looking for higher though. My options are just above at 450. Markets are just sitting here, probably frustrating people that are looking for that move that we got yesterday. Yesterday, pre-market, we're down 40 handles. Let me just go to SPY so I can show you the comparison. Here's SPY. SPY, let me go to 10-minute. Okay, here's today. Yesterday, here's SPY right here in the yellow. Okay, down pre-market, rallies all the way back up, only to give it all back into today. So a lot of people are looking for this bounce right here,
0 DTE.
hoping
Call sign.
hoping that we get a bounce. How does that help me, Vinny? It doesn't. It doesn't in the sense that, you shouldn't be doing anything right now. In my
Nvidia pulse.
okay, well, it'll look a little better here. Let's see what some of these stocks are doing. Okay, I'm just rambling right now. Dexcom, so it looks like some sectors. Dexcom is moving. Okay, that looks all right. Amgen, all right. So we saw some shifts towards
Nvidia pulse.
biotechs, XBI, IBB,
0 DTE.
IBB.
Call sign.
Okay, these are not moving, but individual names like Amgen are moving, coming out of a squeeze. Remember what App Lovin looked like 2 weeks ago. It's coming out of a squeeze 2 weeks ago. It ran up to 622, 100 points. Okay, from the squeeze, it ran up 100 points, 522 to 622.
0 DTE.
Okay, it's trying to bounce today. What's Nike doing? Nike's still fading. All right, so it looks like it's moving back into the range. SoFi fading again. Okay, the banks, Wells Fargo continues. So I might add to Wells Fargo. Let's see, Goldman Sachs and Morgan Stanley, the dips probably get bought. They are the lead on the IPO next Friday.
Nvidia.
All right. So people have been building positions for the last several weeks once they found out. Frano's known about the Morgan Stanley piece
Micron pulse. Q's pulse.
from, I believe, back in January, right? You mentioned it back in January. So it's cup and handle, little base there, breaking to the upside. So Morgan Stanley buying dips has been working. Okay, looks like it's going to move back up. Okay, we know what Wells Fargo looks like. The banks look good. So maybe you don't want to buy an individual name. Then look at KBE. KBE is a possible trade there. KBE
Shenanigans.
doesn't move a whole lot, $1 a day.
Intel pulse. Deep core. 0
Or FAS. FAS is the leveraged. Okay, this is starting to break higher. FAS. 3 times long. Financials. All right, what else is working here? Okay, S&P 500. Cody, penny stock. Texas Roadhouse. Good barbecue. Ollie's. Got one near our house. That's a competitor to Casey's and, these discount retailers. I can't speak for Casey's. I've never been to a Casey's, so Brother Bill would have to tell us. But I imagine it's similar to an Ollie's, right? You ever been to an Ollie's, Brother Bill?
long dated.
Well, I've never been to a Casey's. So
Oracle pulse.
Celsius, AXTA, that one's breaking higher. Coatings, that's moving higher. $30 stock. Bollinger Band's opening up. You see that lower band just opened up the last couple of days. So this is probably going to keep going. Look at RSI showing strengthened trend. MACD stochastics pointing. Volume shows institutions. So while I wouldn't buy at the high of the day right now, that looks pretty good. AXTA. Wait for it to pull back first and then buy. That's what I'm doing with Walmart. Looking for Walmart to dip a little bit so I can get a ad. Walmart's trying to climb up the list. Okay, let's see. What's up down volume look like right now? Up down volume. Survey says. Well, it looks a little worse for where? Okay, so we're 2-to-1, at least 2-to-1 on everything.
Meta pulse.
New York Stock Exchange made a new high this week. It's 3-to-1 down. So let's look at the New York Stock Exchange. NYSE. All right. So very interesting. It's recovering right now. If this is recovering, this is 2,400 components. What do you think the S&P is going to do? If the New York Stock Exchange is rallying, what do you think the S&P is going to do? It's a subset. It's 500 stocks. This is 2,400. 70% are American companies, U.S. companies.
0 DTE.
25% are American depository receipts. So that's telling us that we should look at maybe Canada. Canada was trying to break out this week. Didn't make it. Didn't break out yet. Canada. What about EWS? What about Singapore? No, that pulled back. What about EWQ? Spain? No. What about Greece? Greece is the word. Turkey? No. Okay. EWC. What about South American companies? EWZ? Brazil? Nope. EWW? Mexico? Nope. Okay. So these are taking a break right now. What about ACWI? This is all world index minus the US. There's no US. That's pulling back. All right. So EWU, the UK, flat. All right. So American deposit. So think about that for a second. All of the European countries are either moving lower a little bit or flat, right? So the international markets. All right. So look at the NYSE. Think about this process of deduction, right? If Europe is moving lower and it makes up 25% of the NYSE and the S&P makes up 70%, this is rising. What do you think the S&P is going to do? Make sense? Now, I know I'm getting into the weeds here, but looking for the S&P to bounce. The only problem we have is that 37% of the weight of the S&P is being held back by the New York FANG components. 37%. That's not fair. Yeah, so let's look at the equal weight. Equal weight. All right, equal weight is still holding the highs of the week. Number of stocks above the 20-day are still rising. So barring these stocks over here, you got the New York Stock Exchange moving higher. S&P is flat, but being held back by these stocks. Yet, if you take the weight off, these should be moving higher. So I'm looking for a pop to the upside. Number of stocks above the 20-day, number of stocks above the 50-day. And if we go to the next chart, number of stocks above the 200-day in the lower panel are rising. Higher highs, higher lows. Let's look at junk bonds. Junk bonds, JNK. After a while of listening to me talk about this stuff for weeks and weeks and weeks, it'll all start to make sense. My mind is all over the place, but it'll start to make sense that, money flows. Junk bonds are down, so this is a negative signal. So this is another thing that's holding us back right now. So the S&P, let's see what the dollar is doing. US dollar, USD. Okay, that's moving a bit higher. Okay, so a higher dollar is going to put a little pressure on stocks, U.S. companies that sell products overseas, internationally. U.S. dollar. What about the 10-year? 10-year is going to put some pressure on IWM if it's moving higher. It is. All right, so for the past couple of days, it felt like this was going to move lower. Now it's moving higher. So that's going to pressure IWM. IWM should be lower. It is. Shoot. All right, so bottom line, you got to wait. You got to be patient because the markets reward patience. This level is still holding. Okay, 74.95. So we'll just sit on that for a few minutes. All right, I'm going to take a couple of minute break. I'll be right back. I'm going to grab my coffee. Just made a new pot of coffee. Be right back.
And this is something you are going to see continue through the rest of the midterms and beyond, because ultimately here, when it's the executive branch versus the legislative branch, it's the judicial branch that comes in and tries to figure that out. And that process is not quick. It takes a long time, and President Trump wants to take advantage of that.
All right, Nathan, great talking to you. Really appreciate you joining us. Nathan Dean there of Bloomberg Intelligence. I look forward to listening to you still with Joe and Haley.
Google
You're much better
long
at
dated
doing these interviews.
deep
On Balance of Power, they do
zero
some on Bloomberg
DTE
Television at 1
puts
o'clock, and then
down
early edition at 5. on the markets right now. We do see a sell-off underway with the S&P now trading at 75.08. So it's 70 points off.
Tesla
It
pulse.
closed
Long
levels
dated.
last Friday. That means this will be the first week in 10 that we don't see gains for the benchmark index. The Nasdaq off more than 2%, 29,784. I guess it's really a perfect day for Tom and Scarlett to kick off Bloomberg Money. The inaugural program begins at 12 noon today. This is Bloomberg.
Tesla pulse. Long dated. Deep calls.
Okay, the New York Fangs are all off. All right, I'm going to go stick my head outside. Watch the markets here. It looks like it might lift a little bit. Trying to lift a little bit.
SPX Fading. Zero DTE. Call. Start.
This is it. The trade that will make your day. This is what it's all about. The daily community sell, the endless marketing, and the
Soft
trace of
pulse.
patterns,
Long dated.
auto coffee crushing, working orders. This is the trade you've been waiting for. Next generation speed, automation, and integration. This is the new fixed income EMS.
SMH pulse. Long dated. Deep calls.
Execution management system.
With ServiceNow's AI Control Tower, we've got eyes on all our AI in one place. Yep, I've got total visibility, total security, zero blind spots. Watch that. Blind spot.
Spider pulse. Long dated. Deep calls. Soft pulse. Intel pulse. Shenanigans.
Built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research by
SMH
hundreds
pulse.
of global experts,
Long dated.
delivering benchmarks driven by
calls.
the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
A fad to some, the future of money to others. We see crypto's trillion-dollar swings. While others follow the noise, we follow the money.
Nvidia
Under
pulse.
the ServiceNow
Long
AI
dated.
Control Tower lets you see
Deep
global
calls.
AI.
Zero
Tracking all our AI.
DTE. Call sign. Start.
Sorry, talent.
SPHL. We help reimagine Cushman & Wakefield's global IT from the ground up, achieving over $35 million in savings and a happier workforce, transforming their IT to match sky-high goals.
Bloomberg Tech is live from coast to coast. With Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Elon Musk enchants investors with his vision of the future as questions about the SpaceX IPO are brushed aside at an investor event. Plus, coming in hot, jobs surge in May, but tech stocks are under pressure as investors reassess the path for interest rates. And three of the biggest names in AI at Bloomberg Tech San Francisco. We're going to bring you those conversations throughout the program. SpaceX's IPO is absolutely dominating the news cycle, but there is so much happening in financial markets and a lot of the tech sector. The S&P 500 is down a percentage point, but really the underperformance is in chip stocks. We're down 4.7% on the stocks. Interestingly, we're still positive on the week, but everyone kind of talking about chips and saying we are due a correction. Actually, outside of chips, the rest of the AI trade is getting hammered. Those jobs numbers for May were hot. US 10-year yield, 4.5%. So bad news, guys. I'm sorry, I know it's Friday. The S&P 500 is down on the week, and that means that it will not, as it stands, hit a historic 10th week of gains. It will stop short at 9 straight weeks. Again, The SpaceX IPO, the imminency of the pricing next Thursday and the trade following, that is a big factor in the markets. It is going to be some form of catalyst, and volatility is being very closely watched. Let's get to our top story. Elon Musk enchants investors.
Why SpaceX public now? Because you had choices and you have to.
GoPro.
Why now?
Long
We're
dated.
embarking on a massive new growth phase, and we need capital for that.
Okay, number two.
The revenue, like, I still feel pretty good about
Yeah,
it.
just like you were fucking shooting up after yourself yesterday.
Before, like, the revenue was a little unstable.
Elon Musk still has the power to sell a vision that a SpaceX investor event yesterday hosted by James Gunn and
GoPro.
Morgan stakeholders.
Long dated.
The company's
SPX
overshadowed questions about the IPO itself. The absolute latest this morning. Subscribe. There are a number
All right, S&P is just sitting here below VWAP, not doing anything.
last night you were manning the desk.
Looking for the follow through.
What is new in what Elon Musk is saying?
It took time for Musk to get through his answers, and he was quite. I think also, you know, Musk was pretty forthcoming about
Zero DTE.
that he needs capital.
Stop.
And, you know, we saw this week as well, you know, even at Alphabet, this notion that a company of that size that is that cash generative still is going out to raise $80 billion with the backing of Berkshire Hathaway. So I think this is part of, you know, this broader, you know, movement
Zero
by
DTE.
tech companies and by, you know, AI
Stop.
hyperscalers to raise absolutely as much money as they possibly can, given just how intensive this race has become.
If you're watching Blue Tech and you're coming to this story fresh, that's a surprise. But basically, SpaceX is on a roadshow right now, and they plan to do final pricing of the IPO next Thursday. They've already
Zero
said
DTE.
$35 a share, raising more than $75 billion at a $1.77 trillion valuation. This will be the biggest IPO of all time. Craig, you're the managing editor that kind of leads coverage of the company. I appreciate that. But there is some kind of market mechanics that are really important in the news.
Shenanigans.
One
Zero
being that,
DTE.
SpaceX and these other IPOs waiting in the wings will not get fast tracked into the S&P 500. Can you talk a little bit about that and why that matters?
Yeah, I think that's a setback, but I think it's also the case that the S&P, you know, is deciding differently from some other indices, and so you know, the Nasdaq has taken a different approach, and so perhaps
Bitcoin
there will be you know, some indexes you know, where you and I, if we're in invested in index funds, you know, we'll get a piece of this company, and it's just a matter of some sort of spacing out of when. Investors, and perhaps that's actually for the best, given.
Anything else moving? No, not really.
Sort of market mechanics.
S&P.
And just how disruptive this will be, given how small a float you know we're seeing this company this year.
Another quick story for me this morning: China and Hong Kong investors are being told, or the underwriters being told, that they can't take orders from investors in China and Hong Kong because of security.
Bitcoin
Tesla moving a bit lower at the moment.
It's fascinating to me.
I don't know. It just feels like the markets are going to lose it here. That said, we got to keep reminding ourselves of the New York Stock Exchange. New York Stock Exchange. Buyers, they're still there. These New York fangs are not helping the situation. That's the problem. That is the problem. Okay, let me go to the New York Fang.
NVIDIA long dated.
All three vendors have been qualified. All three vendors are in production. And
All right, so the New York Fangs, weak.
Q's pulse. Long dated.
Production ahead of third quarter deliveries with systems combined CPUs, GPUs with those HBM4 memory chips. Again, today, right now in the market, chips under pressure. The labor market keeps refusing to crack. Today's jobs report came in stronger than expected. But in the market, tech stocks are under pressure. Investors basically reassessing the path for interest rates. For more, we're joined by Martha Gimbel, Executive Director at the Yale Budget Lab. I always enjoy having you on the show, Martha. I think you make what's happening in the US economy understandable, digestible for a broad portion of people. What did you see in the data this morning? What was the story it was telling you?
I mean, it's interesting. This is one of those reports where, as an economist, you kind of open it up, look at it, and go, wow, this is really great. Not a ton going on here. And then
CRM pulling back a bit. CRM. Okay, most stocks are off at the moment. AAOI starting to push a bit higher. AAOI, what is that? What's going on there? AAOI. Back to even. Okay, back to even. These are trending ever so slightly higher. Weekly time frame. Okay. Let's see. Again, the stocks that are performing this morning. Let's look at those. Marriott, that's interesting. Marriott's moving higher. Marriott breaking out. Hotels. Marriott. All right, hotels. Okay, so we got hotels. We have banks. WFC. Banks.
0 DTE. Call sign.
XLP, consumer staples, healthcare. See these? Utilities. All these are defensive. Real estate's moving. Interesting. Real estate. In a range. Let's see. Real estate. Let's look at some of the AI-related real estate REITs. Digital Realty, nothing there. The builders, Toll Brothers, flat. Airbnb, flat. Yeah, I don't see it right now. Financials, yeah, financials look good. For the week, financials higher. Okay, so potential areas to add for me personally are Wells Fargo, Walmart. I'd like to start something on Costco. Okay, I'd like to add to Morgan Stanley and Goldman Sachs. These are dipping but starting to bounce now, like yesterday. What are the pharmaceuticals like Merck doing? Merck is up again today. Merck. Okay, Amgen. Biogen. BIIB. What about J&J? J&J, looked at that yesterday. J&J, okay. J&J. Some of you were talking about some of the biotechs, if you want to throw those in the room. Some biotechs have been looking good. Okay, medical device makers, Joel. All right, so Medtronic, MDT. MDT, yeah, that's a go. MDT is a good one. They do heart-related MDT. Nice bounce. These could do really well. MDT, I like it. Okay, medical devices.
Shenanigans. 0 DTE. Call sign.
Yeah, so medical device makers, this is probably going to trend. All right, so last time it did something like this, let's go take a look at the weekly. It did falter, but it rolled over, made a new lower low, and then turned up. Okay, let's look at the weekly. That is the weekly, right? No, here's the weekly. Weekly. Okay, so the weekly trended from 23 into 25 into the highs of 26, pull back. 50% retracement would be about 92. That's about 12% from here. Yeah, that looks pretty good. I like it. MDT and other device maker. Let's see. Let's go down here and see medical device makers. Medical supplies. C. Cencora, COR. Boston Scientific. Is that what you're looking at? BSX, Boston Scientific. Oh, yeah. I mean, that could keep going. Needs to get above BSX. Needs to get above 60-minute. Then
Zero DTE.
Ask the questions shaping capital, policy, and markets. Visit BloombergLive.com/invest-hong-kong to learn more. Bloomberg Invest Hong Kong.
yeah, okay. So first thing it needs to do, Joel, it needs to get above the 60-minute. Okay, 60-minute check. The daily BSS needs to get above the 50-day. So it's got a ways to go. It's got a 10% move, 20% move to get back to the 50-day. Okay. CRML continues lower. These rare earth metals companies, they move for a few days and then they just get clobbered.
Zero DTE.
Okay, so we're right back down to, okay, looks like we're going to lose it here. Looks like we'll lose it.
Triple seven pulse. Long dated. Deep calls. Deep puts. Zero DTE. Calls. Size. NVIDIA pulse. Long dated.
Yeah, that's right. OpenAI was really early to making some splashy announcements about how big they wanted to go on compute, spending up to $1 trillion, or around that on these massive projects.
NVIDIA, big move yesterday thanks to dividends and giving it all back, NVIDIA. And then some. This is the part where I was talking about doesn't feel right.
That's right. So Brian Chesky, co-founder and CEO of Airbnb, starting a new AI lab, sort of neo lab, if you will. He will remain CEO of Airbnb, and resources say he will
So not the CEO of the C Lab, but this is a sign of
Bitcoin,
trend we're
Ponzi
seeing where
pumps,
some of the
long
existing
dated,
tech founders
deep
who
puts,
still want to go all in on the AI race, if they're not directly doing an AI only company, maybe you get involved in sort of side projects or side companies. So it's an interesting one, and it may end up having a design and UI focus, which is something that Chesky is quite passionate about.
Shreen Dafari, top conversations, top reporting. Thank you very much.
gold
Take a quick
pulse,
look at shares of
long
Broadcom
dated,
over 5
marble,
days. But remember,
deep
Broadcom
quartz.
reported its earnings Wednesday night, traded into Thursday. We're down 10 reaction.
All right, so the big the big draw down on the S&P right now is the New York Fang. Watching the New York Fang. The reason I say that, obviously, we're talking about the New York Stock Exchange, trying to make higher highs and higher lows. Daily looks okay. It's trending 921. Excuse me, 921.50 or up and to the right. It's above the 200-day Bollinger Bands. They're running the upper Bollinger Bands. Dow Industrials. Okay, we're at the highs. We're in the upper half of yesterday's range. S&P. Back to the 21-day. Is this the place where we're going to bounce? Will we bounce here? We lose this level, we're going down. We're going to at least test 73.33, I would think. Are you prepared for that?
0 GT, call sign.
Mentally, are you prepared for that? Yep.
Meanwhile, organically, this phenomenon we call generative AI and our ability to ship them picks and shovels the compute capacity into this demand, which is almost insatiable, makes it very hard to choose M&A over focusing and succeeding in generative AI compute.
Is there any area where you think you might want to sort of make an exception to this, whether it's maybe photonics, just to name one area?
All right, let's see. CRML, these. All right, these look like they could go lower again. I can't get these to do anything right. USAR, they go up for a couple of days. Look at USAR. Highly volatile. MP. All right, so you have to offset these more volatile stocks with stocks like Walmart, Costco.
0 DT,
They're going to make money. Whether or not it's going to be enough to keep the stock, the PE rising, hard to say. But people need consumer staples, right? They need toilet paper, tissue, food. Definitely need food, right? Utilities, that's starting to see a bid. These are all traditionally defensive names. XLV, XLE, trying to bounce. Materials, pulling back. Communications, pulling back. Financials, looking okay. Breaking above the 200-day. Okay, so we trended up in April. Financials, we went sideways for all of May. Pushing higher in June. Yeah, that makes sense. Wells Fargo, looking good. Wells Fargo. S&P is down here again. S&P. This is going to snap. It feels like it's going to snap, right? Hedge flows continue to move lower. We got all this positive gamma down below now. 74.95. Another one, 74.75 now.
long dated, NVIDIA pulse, micron pulse, deep calls. 0 DT, call side. Side.
Talent and technology, turning global shifts into a catalyst for institutional equity indices built on opinions. That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
Listen to AI, right? What are they unleashing right now? They're unleashing incredible capex boom.
Sandisk
And
pulse.
to this audience,
Zero
they offer
DTE.
the
Put
show,
through.
and created
Gum.
an incredible wealth effect, right? So when you see that, that is leading to a higher degree of economic growth than anybody expected from those two facets, right? You've got an incredible surge in investment spend coming out of this AI demand for investment and a wealth effect that's powering consumption.
That was Jeffrey Rosenberg of BlackRock speaking with Tom Keane and Scarlett Fu in an exclusive event to
Outgo
Bloomberg
Pro.
subscribers
Long
in New
dated.
York earlier
Marvel.
this week. That conversation coming out of
Shenanigans.
the launch of
Micron
Bloomberg Money
Pulse.
today. A
Deep
new
calls.
weekly show hosted
Deep
by
puts.
Tom and Scarlett, airing every Friday, 12 p.m. New York time.
Yeah, Joe, my guess is the New York Fangs, these have been pumped up. People have chased it. Everybody was chasing. I won't say everybody, but you know what I'm saying. People were fearing they're going to miss out. Let me buy it. Let me buy it. And then all of a sudden, the legs come out from the stools, and we get these stocks pulling back like Micron, semiconductors. These are all pulling back.
I talked today to a gentleman who owned a company in Bismarck, North Dakota, which is directly
Triple semi pulse.
All right, everything is sitting just above the 20-day or very close to the 21-day. Last time we pulled back a few weeks ago, we bounced. I don't know. If I'm correct in assuming that institutions are using this push higher and collecting their cash gains to get ready for the IPO next week, they've sold, are selling, taking their gains while the street gets left holding the bag, hoping for the best, buying options that expire within a couple of weeks and see those implode. I hate to sound so negative, but that's what I'm just thinking of this scenario, how that all works together. Junk bonds have moved lower, so that's telling you the risk off. Risk off is the call right now. The 10-year is higher, so risk off on IWM and small caps. Okay, so VIX, I did buy VIX calls last week, VIX 22s for July. I doubt these are going to make any money, but we might get a spike if this gets any worse. I don't think the fact that VIX is just sitting here tells me to assume that the S&P is going to be fine, that we're going to come back to the 21-day or right in this area. This could be a head and shoulders top, okay, as well. A lot of people will be talking about that, whether it is or not, I don't know. But that being the neckline right there and the left shoulder right here, head right there, and then get a bounce into July. Okay, so we come down for the next few days. That's a possibility. I'm not saying that's what's going to happen. I just keep pointing back to the New York Fangs. That's the problem. New York Fangs. Okay, New York Fang is the problem because the New York Stock Exchange doesn't look that bad. It actually is trending. Okay, we're losing a little bit more here. Inside 50% into yesterday's price action. Plus, you've got international markets are not doing much right now. So institutions that have money in foreign assets, maybe they're selling some of that as well. This is speculation on my part, but it just makes so much sense. Selling some of their foreign assets, Canada, Europe, Asia, South America, take some profits from there, have a cash hoard ready for the IPO. I don't think it's going to be a dud, the IPO. The powers that be are going to want to pump this up.
Long dated. Deep calls. 0DTE. Calls. Stocks.
Part of this is the post-Broadcom earnings story, where their outlook for the current period for AI chip sales was below consensus.
74.75, 74.75. A new 99%. 74.75 Mondo. See it right there?
Tesla pulse.
You don't see it.
Long dated.
Here's 74.75 right there is a 99 percentile. A new one. Okay, these keep shifting lower.
When control of Congress changes, entire sectors like energy can move with. On interactive brokers prediction markets, Republicans have about a 23% chance of keeping the House as of May 15th. In fact, if it's too high, by no, for 70%. Each correct prediction pays exactly $1.
Soft pulse. Long dated.
Interactive brokers, you can trade that prediction market with hundreds of other candidate prices. Trade prediction markets alongside your stocks now.
Look, we've been up for 10 weeks. Within week 10, we've pulled back 1%. So don't let it get to you. You know, it just means that we need to take a break. And that makes total sense. We need to take a break. Okay, here's the weekly. Okay, we're off 1%. We're taking out last week's low. Okay, 7,400 is the next level of support down in this area. Aside from intraday, 74.75, 74.75.
The delicate active ETFs can shift and transform as markets do the same. They can cast a wide net, explore and uncover new opportunities, adapt to risk, and leverage the full power of fund managers and research teams.
Bitcoin Ponzi pulse. Long dated.
Markets can change in real time. Make sure your ETF.
Yeah, we're up 20%, 19%. If you subtract the 1%, we're down right now. Okay, is that horrible? No one wants to lose money, you know. So if you're everything is long and you've got options that expire in 2 weeks, you probably got some anxiety. If you did as we started doing, which is to roll your calls out. I know a lot of you did, like Anthony, I know, rolled out to August, September, some of the options that we were talking about. If you did that, you probably have no issue. Yeah, the market's going to pull back a little bit and you're going to lose a little intrinsic value, but theta's not going to be as bad. So, yeah, we gotta address the point that we're not going to go up every single day. I don't think anybody expects it, but I do know that when it does happen, you still get that negative emotion. I know I still do. I mean, I've been doing this nearly 40 years. I don't like the markets to pull back. You know, if it was just me, I'd take a walk. If I wasn't addressing the room and, all the membership, I'd just take a walk. I go play some golf or whatever. The markets are going to resolve itself. We generally don't gain 20% in 1 year. A 20% gain.
Deep puts. Shenanigans. 0DTE.
Yeah. A 20% gain in a year is normal.
That's the annual AI compute capacity SpaceX says it ultimately wants to deploy in orbit. A lofty goal training networks of thousands, even millions of these specialized spacecraft
Oracle
in harsh,
long date
volatile environments.
0
What does
DTE
space-based data
call
center look like? Bloomberg did a
size.
mock-up of how these craft would
Yeah, yeah, I hear you.
inside radiation-tolerant AI chips, right in here.
Apple's starting to turn. Apple turning up. All right, I'm gonna take a few minutes. I got to take a break. I'll be right back.
Absolutely massive solar array panels, as well as batteries to store that energy when the sun's not there, right, when it's blocked. This is the radiator. On Earth, data centers use air, or they use water for cooling. In space, radiators disperse the heat into deep space, and they're going to need to handle far more heat than today's current designs. How does this work?
Long date
Our next
deep
guest
calls.
has already started down this complicated road. Philip Johnson is the CEO and co-founder of StarCap, which launched the first NVIDIA H100 chip aboard its satellite this past November. Put myself on the spot here. You tell me, what was my explanation of the basics of orbital data center life? Did we get it right?
Excellent explanation.
So, for you, this is real, right?
Tesla
An
pump.
H100
Long
inside
date
the form factor
deep
of a
calls.
satellite. Explain how we got to that point, the engineering challenge, the deployment.
Yeah, for sure. So we, as you already mentioned, we launched the first NVIDIA H100 in November last year. Actually, we launched a satellite which has 5 GPUs, 3 from NVIDIA, 2 from ARM, but the H100 was the most important and interesting one. And the way we got there is we started the company about 2.5 years ago, and we had a very quick development cycle for that first spacecraft. I think on the screen here, actually, you can see one of our early renders of a very large 4 kilometer by 4 kilometer solar panel with a 5 gigawatt cluster in the middle. That would be for something like training.
SMH pulse.
Things like
Long
right now
dated.
we're very focused on these small inference nodes. So we'll be launching. We just started with the FCC for a constellation of 88,000 of them, which enables us to deploy about 20 gigawatts of compute.
And then, Philip, we're zooming out now that this is a case study of a 5 gigawatt data center. Can you just reiterate what you said about the scale of the solar arrays? What were the numbers on that?
Yeah, so this solar array on the screen is about 4 kilometers by 4 kilometers with about 1 kilometer by 4 kilometers radiator down the back there. I would say that I read this from a couple of years ago when most AI workloads were for training, and it seemed that a more, we wanted to show that if you wanted to do any kind of workload, you could, and so we showed the hardest thing. Actually now, it looks like 99% of all AI workloads will very soon be inference, and so we don't need to dock together a large structure like that, and that's the reason we're now doing this distributed constellation
Micron
of small
pulse.
satellites.
Long dated
So, Philip,
deep
I
calls.
want to be honest,
Deep
with my tech audience.
0 DTE call
This is
size.
SpaceX's pitch, right? A vast network of orbital data centers. And I guess that in SpaceX's case, we're still waiting for the designs. And Elon Musk has said that, in the coming weeks, he will
0
show his hand on
DTE
that.
call
You're a company that
size.
is already doing this, yes, at right now a limited and small scale. I just wondered if you'd account for that, the idea that SpaceX plans to do this, and how StarCloud will fit in with that.
Yeah, for sure. I mean, I think we really are talking about potentially the largest market opportunity ever. We're talking about trillions of dollars per year of capex will be deployed in space, and so everybody's going to have a solution for space compute. Some of that will be using SpaceX, but certainly lots of other people are going to want more independent clouds, and so that's the customer base we're going after.
0
Initially, also
DTE
will be
put
serving
Gamma.
workloads to
NVIDIA
other
pulse.
spacecraft,
Long
providing
dated.
edge and cloud services for other spacecraft.
What about the deployment of your satellites? Are you a customer of SpaceX on the rideshare program, or how does that work?
Yes, we are a very happy customer of SpaceX on both the rideshare program and potentially for dedicated Falcon 9 launches. Don't want to speak too soon, but we should have some interesting things to say about that soon.
you come back on the
Micron
show when you're
pulse.
ready. Let's end
Long
here.
dated. Deep
What's the ripple
calls.
effect of this
Shenanigans.
SPX Fading going to be?
DRAM. Don't
Right,
forget
is there going to be a
Marvel.
trickle down?
Yeah, we're already seeing it. I mean, there's just enormous interest in the space industry that wasn't there before. So we raised actually the fastest unicorn round coming out of YC ever. So in 17 months, we went from basically zero to $1.1 billion valuation with $170 million raise. I think a lot of that is fueled by people now understanding space, realizing there's a huge market opportunity there, and that's in large part because of
SMH
SpaceX.
pulse. Q's pulse. Long dated. Deep puts.
Really grateful for your
AMD
explanation of the technology, but also to hear about what you guys are working on. Come back. Thank you. The challenge of satellites reaching orbit has mainly been solved through reusable launch vehicles, i.e. SpaceX. But one critical bottleneck remains: scaled satellite manufacturing. That's partly what SpaceX needs cash for. Not just SpaceX. Startup Apex has just raised more than $200 million as it works to increase production of its satellite platforms for commercial firms and government work,
NVIDIA
including
pulse.
an involvement
Long
in
dated.
President Trump's Golden
Deep
Zone
calls.
missiles.
Zero
defense.
DTE.
Shield,
Call
Apex CEO Ian
Stop.
Simmons joins us to talk more. Ian, congratulations on the round and thank you for being here. It's interesting what we're doing. We're trying to encompass all of this future economy. The bottleneck of satellite manufacturing. How severe is that bottleneck? Try and quantify it for me.
Satellites have been around for some years, right? Satellites themselves are not new, but to your point, SpaceX has really solved the key part of the space ecosystem, which is how do we deliver
Long
the satellites from Earth to
Nokia
space.
pulse.
And to give you a sense of how severe
Triple
the
semi
problem
pulse.
is, which is
Zero
actually the
DTE.
spacecraft production,
Pulse.
that this
Stop.
I'm standing in right now, Apex factory is capable of producing about 200 satellites per year. That is more satellites than the U.S. government launched last year. And the demand is growing sky high. So for us, we are seeing an enormous shift in the market away from saying, let's launch one large, bespoke, exquisite satellite, and shifting to how do we launch constellations, fleets of satellites that are actually able to work together. And that has led Apex to becoming really that go-to spacecraft platform company in the industry.
AMD pulse. Long dated.
The regular
Deep
audience of Neurotech is kind of
Spider
understood before. There's a company in Bulgaria called Endurosat, which basically pitches itself as like the TSMC of Bulgaria, but similar. Contract manufacturer for satellites of third parties. Is that an accurate way to also describe what Apex is doing right now in the United States?
So Endurosat is a great company, but fundamentally a different business model from us. So what we do is if you want to make an analogy here, right, I would actually say we're the Ford of satellites. So we go ahead and we say we're going to have a set number of products, a small satellite, a medium one, a large one, think a sedan, an SUV, a pickup truck. We design that up front, so we're not contract manufacturing someone else's design, it's ours, and we go and produce them in the factory I'm standing in right now ahead of any customer demand. So when somebody says, I need 100 satellites, or someone like StarCloud wants to go launch a constellation, we're able to rapidly supply them in a matter of weeks or months instead of years
Spider
with a
pulse.
standard
Intel
off-the-shelf
pulse.
design.
Deep calls.
Let's talk about money. $200 million raise. What is the priority for you to get scaling here? What is the thing you're acting on most quickly?
Space is expensive, right? Space is
And
full of
I
hardware,
see
it's
you
full
less
of
than a minute.
expensive launches, buying Falcon 9s, buying other launch vehicles, and so on. But Apex is in a very fortunate position where we're actually able to operate as a real long-term sustainable business. We have now raised 3 back-to-back $200 million rounds over the last 14 months, and we've raised all of them from a position of strength where we don't actually need the capital, but it's simply a way for us to speed up and actually go faster. So for us, that means increased hiring, increased production, and more deliveries to our customers from programs like we announced earlier this week with our partnership with Northrop Grumman on space-based interceptors.
Ian, next week, SpaceX will conduct the biggest IPO in history. How is that going to impact you in the immediate and also in the future?
It's incredibly synergistic, right? SpaceX has really opened up the space ecosystem and really paved the way for different customers, whether it be U.S. government, allied nations, commercial customers, to shift their architectures from large, expensive bespoke satellites to meet some proliferated systems.
We supply those proliferated systems. So for us, SpaceX has been a massive tailwind in our favor that's actually helping the industry move forward at a faster pace. We are a great customer at SpaceX. We have a wonderful relationship with them, and we are very excited for their IPO next week.
IREZ.
Ian Simon, CEO of the company, raising its latest $200 million round. Thank you very much indeed. Coming up on the program, we're going to hear from Thinking Machines Labs CEO, the former OpenAI CTO, Mira Murati, on what her new startup is trying to achieve. That conversation from the Bloomberg Tech event coming up next. I have to check back on markets. Look, this is where we're at. There's a lot of red on that screen this Friday. Tech is underperforming, and that's probably putting it mildly or lightly. NASDAQ 100 is down now almost 3%. The Philadelphia Semiconductor Index is down 6.5%, its biggest drop since October. There is a lot of chatter out there that while we're kind of due a correction in chips, the index up more than 80% year to date anyway. The S&P 500 is snapping as it stands in 9 straight weeks of gains run, and yields are higher on the eco data. We're going to keep checking that. It's important. This is Bloomberg Tech.
Matteo, one of the things that really struck with is how focused you are on the customer.
The more data you have, the better service you can give to your client, and the new best product. Essentially, it's helping us analyze the data in the best possible way.
What about what's next?
Better of the same. It's not more of the same, it's better of the same.
Marble long dated, SanDisk pumps, deep puts, shenanigans, 0 DTE put string, gums, 0 DTE call sign, size, 0 DTE call string.
That's because many banks have employed multiple AI agents that don't speak to one another, producing a disjointed customer experience. According to IBM research, customers are 20% more likely to move their money to a bank that delivers higher quality customer service at a time when replacing a customer costs more than keeping them. To truly understand the customer's full banking relationship,
Oracle
banks
pumps,
must connect
Amazon pumps,
so agents
long
can
dated,
collaborate
AMD
across the
pumps.
enterprise. That's how AI becomes a competitive advantage, not a customer liability.
SMT.
Hood pumps, 0 DTE call string, size,
This is it. The trade of the big number. Next generation speed, automation, and integration. This is the perfect state of the units that make sure it has changed. Expect more from your execution management system. Bloomberg Trade Units.
The game we're playing right now can do a jackpot in 10 minutes. Just pick it. And comes out 10 months. You have a chance to win big. No ads, no tricks. Every price you win can be cashed out straight to your bank account. Just log in and claim your free daily bonus.
This weekend, bringing a little Bloomberg into your weekend routine.
0 DTE call string, size.
Join me each week on Wall Street Week for RMSG capitalism for business, markets, economics, tech, and climate. What you need to know, what you need to think about.
Humans should stay in the loop for AI, says Thinking Machines Lab CEO and founder Mira Murati. She spoke at the Bloomberg Tech event last night with Bloomberg's Emily Chang. Listen to this.
The most advanced AI systems are the most
Bitcoin
incredible
Ponzi
tools
pumps.
for thought that humanity can ever have. And so how can this change the way that we think? and where we're still thinking, and it's changing the nature of thought, what we're thinking about. And this part, I don't think is actually, this part is familiar to us. You know, since the beginning of time, like technologies have, deep technologies have changed what we think about, like language, writing, numerals. I think this is the opportunity
Zero
for us,
DTE.
this possibility to
God.
expand what we think about, and have new tangible things that we think about. And this requires this requires very intentional research work and product work in this direction.
When I interviewed you, it was early 2023. ChatGPT had just changed everything. You were CTO of OpenAI. A few folks I talked to said you basically ran the place. When you left and founded Thinking Machines, were you running towards something or away from something?
I most definitely was running towards something once I figured out what the thing was. But I had an incredible, I had an incredible experience at OpenAI. I was so incredibly lucky to work with some of the most dedicated and most talented people in the world, and that's incredibly
Zero
special.
DTE.
And, I'm very grateful for that
Stop.
experience. And you know, eventually I had my own view of and very strong view of how I think this technology ought to be developed, and it's very rare to start something from scratch once you have developed such a strong perspective on it, and that's a rare privilege to have. And I think having
SMH
a company
pulse.
like Thinking
Hughes
Machines gives us an opportunity
Long
to
dated.
focus on where we have the highest conviction and build and orient the entire company around that conviction.
That was Thinking Machines Labs CEO Mira Murati along with Emily Chang. Okay, coming up on the program, we're going to speak to Nina Chajin from Index Ventures on how AI is remaking the physical world. It's a really big conversation that we've been looking forward to for a while. This is what markets look like. Tech stocks are getting hit, and the market is
Low ticker at -800.
boosting its Fed bets, and yields are higher. Eco data, post-earnings digestion, and a little bit of giving back after a hot run to share stocks. We'll keep on it. This is Bloomberg Tech.
If you haven't heard of me yet, that's exactly why your bank account's empty. Join Grand Fortune Club. Spin the reels and watch the big wins keep rolling in. Get up to 20 SC plus 300 free spins. No ads, no deposits required, instant on-the-rotos. Come try your luck. The jackpot is waiting for you.
I'm Adam Murder with Home Buyers, and I want to buy your house. I can make you a guaranteed cash offer, and we can close paying cash in as little as 7 days. Total fixer-upper.
Micron pulse. Long dated. Deep calls.
I'll buy your house at any price range, any condition, any size. There's no fees, no commissions, and no stress. When I buy your house, you choose a closing date, you move on your schedule, and you never have to make any repairs. If you want to sell your house fast at a fair price, please call me.
Okay.
Pretty good, right?
For over 500,000 investors, the pennies dropped. Pay a low flat fee instead of a percentage and keep the money you make. Interactive investor. I think, therefore I.
That you reopen by the end of June, and then if you don't get the supplies back soon, then within the next 2 months, you should start to see macro weakness, not just in Europe, not just in China, but also in the US.
Don't miss the opening trade live every week. Pre-weekly will request a spotlight on a different aspect of global finance. Flows, funds, and forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg deals.
Zero DTE put strip. Dumb. Tesla pumps. Long dated. Deep calls. Sanders pumps.
Every weekday, only on Bloomberg Television.
Brings you everything you need to know as markets open across Europe. I'm Curtis. Hi, I'm Ken. And I'm Tom Rex. This is your opening show.
Spider pumps. Long dated.
Software has dominated venture capital for years, but as AI moves beyond the digital world and into manufacturing, robotics, industrial systems, investors are betting that that next $1 trillion opportunity is wrapping software into the physical world. There's also the small matter of SpaceX's IPO and the ripple effects for builders in and outside of Earth's atmosphere. Joining us now is Nina Jardin, partner at Index Ventures, an early backer of companies including Anthropic, the physical intelligence service Python, and so very good at thesis. We just point out there's a lot going on in public markets right now, but actually, you know, private markets are quite active in
Long
this
dated.
way. You know, I was tracking
ASTS. Deep calls. Deep puts. Zero DTE. Calls. Size.
And of course, Index and other folks in the Valley have been spending a lot of time investing in the fundamentals of AI. Model of Anthropic to inference layer of Fireworks and then a bunch of application companies. But if you take a step back, actually most of the disruption in software has really been around the knowledge worker, and that's where a lot of the investment has gone. But there's a big white space, which is what is the active.
All right. So today is a give back day. There goes Google, starting to push a bit higher. Google.
Zero DTE.
Google.
You're basically saying both, you know, they are joint.
Google trying to bounce a little bit here. Google. Watch Google. Day traders active. Okay, Google. Day traders are active. Wouldn't expect it to do much more than just push back up to this 369 zone. Unless the S&P catches a bid. Okay, New York Stock Exchange. Okay, that's pulled back to the lows of the day, New York Stock Exchange. So much for that. That did move lower. Of course, that includes the New York Fangs as well.
The VCs that come on the shows would say, we have conviction about this because there's a public market proxy. An example we can point to on how we value this company or the market opportunity for it. Robotics and other physical AI domains much harder to do. Is SpaceX going to be a good proxy for that?
Well, I think that's why all eyes are on the SpaceX IPO, and I think that it's really opened the eyes to folks of just how compelling this market is and how lucrative it can be. And that's drawing a lot of dollars into the private sector in companies that
Soft
are doing
pulse.
similar things.
Long dated.
Yesterday, I was
Deep
on stage with
calls.
Trey Stevens from Founders Fund. He made a very simple outline of the thesis on why SpaceX is going to work. Just we'll play the soundbite.
We have SpaceX investment in almost every fund, both across our venture funds and our growth funds. So there's a ton of exposure for LPs that were with us since the very beginning, and even the ones that joined us very recently. I think, you know, the core lesson that everyone has learned from this experience is never bet against Elon. It's just a bad idea.
Pretty simple. Don't bet against Elon Musk. It's a bad idea. I don't know like how deeply you read the S1 and you were and the world that is envisioned for the future or out of this world, and how much that gave you
Micron
conviction in your own
pulse.
thesis.
Long dated.
I think
Deep
the way
calls.
that we have played it
Triple
is
semi
that
pulse.
Elon is a
Deep
huge
puts.
talent attractor.
Shenanigans.
So actually two of the
Zero
most recent
DTE.
investments I've made
Call sign.
are both in
Size.
former SpaceX founders. So one is Scott Morton from Revel. He spent 10 years at SpaceX
That's right.
doing launch control, and his role there really exposed him to how big of a need there is for better software for hardware, which is why he's now built Revel.
And then Sergey Nestorenko, who's the founder of Quilter, spent 6 years at SpaceX, where he was really frustrated that he had to wait for a human to manually lay out a printed circuit board. Of course, printed circuit boards.
Now
are really
pulse.
important at
All right, we continue to move a bit lower. New York Stock Exchange.
We just have 30 seconds. You know, I think that we've made the point that whatever happens with the IPO, it will cause some volatility in public markets one way or another. But from the venture capital industry standpoint, I won't ask you to speak specifically on Anthropic. How much do you guys need some big IPOs to get the world moving?
Well, I think VC is always rooting for the IPO window to be open. It creates more options for our founders for capital and liquidity. And it's really exciting to see the ones that are lined up
Bitcoin
today.
Ponzi
Folks will
pulse.
be watching them very
Long
closely.
dated. Deep calls.
Deep
Deep
puts.
puts.
Really appreciate the thesis on software into physical AI and hardware. That does it for this edition of Bloomberg Tech. A crazy week. This is what markets look like.
Now
Tech is
pulse.
down. Part of it is eco data. Part of it was coming. Recap the show on the podcast. You know where to find it. Really top conversations from the last 24 hours. iHeart, Spotify, and on Apple. This is Bloomberg Tech.
Matteo, one of the things I want to scrap with is how focused you are on the customer.
The more data you have, the better service you can give to your client in terms of the new best product. Essentially, it's helping us analyze the data in the best possible way.
AMD pulse. Long dated.
More of the same, better of the same.
Just watching with trepidation. Let's see. Coca-Cola Europe is rising. All right, these aren't moving much, but they look good. Amgen had a nice little pop this morning. AMGN, Amgen. I apologize. The stock charts is really bugging me. AMGN. All right, so it's not at the high of the day. If you're thinking about long, wait for it to pull back intraday. I like the idea. What's Walmart doing? Walmart. Okay, trying to consolidate in this area. We thought it might consolidate or follow through. Costco, same thing. Looked like it was going to follow through. Now it's just consolidating, so it's pulling back. This is your better entry ABCD pattern. I'm not really that interested in doing a whole lot. It is a Friday. We don't know what's the weekend has in store. I'd rather come in on Monday and see Costco sitting in the same spot and get an idea of what the markets are going to do for the week ahead. I don't like buying too much on a Friday. Only day trades. Okay, so this is Costco. Costco, I'd rather, if you're going to buy something, buy it on a dip. Don't buy it in the, at the top of the high of the day after a run up in the morning. That's usually a losing proposition. Watching the S&P, see if it's going to do anything. No, nothing yet. Google popped up a little bit. Probably just some shorts covering. What's Chevron is down. Just about everything is lower. Got a few things moving higher. A few things are moving higher here. Let's see. Amgen, Dexcom we talked about. Top of the S&P 500. And the NASDAQ just kind of hanging here. These don't really incite a lot of interest at the moment. Intuitive Surgical, medical devices like Medtronic. These are starting to push. It's a doji right now. Okay, so you got the dip, Medtronic. Maybe I'll buy some Medtronic here. Let's see, trade. MDT. Let me see what the end of the year looks like. January. There's some open interest at 90, Medtronic.
Spider pulse. Long dated.
S&P still drifting lower, futures.
Spider pulse, long dated. Q's pulse.
Okay, let's see. Broadcom at the lows. At the 50-day, does it bounce there?
SMH pulse.
618 would probably be about the 200-day. Okay, so we got the high. We got the high and the low. 618 would be shy of the 200-day. 50% would be right in here. The 50-day for Broadcom. Looking for a bounce next week. Let's see the other stocks that are doing. Even the stocks that look good, I'm not really keen on jumping in. Marriott had a nice run up in the morning, looked really good, as I told you, and then it just faded. What's Las Vegas Sands look like? All right, that's pulled back. Okay, MGM gapped up and still fading. Cisco, moving back into this week's range. Looking for Cisco to continue trending. RSI a lower high, so there's some divergence there. Cisco making a higher high. Cisco. Amgen, Starbucks, and the NASDAQ 100 bouncing a little bit, but it's sliding lower, so it could come all the way back to the 200-day. What's Nike doing? Nike, all right, below the 21-day. Not a whole lot here that looks that great. CSX, as far as starting new positions. CSX rails look okay. AppLovin, that was the top of the list this morning. It bounced a little bit, but faded. AppLovin. Maybe it runs up end of day. S&P 500 up for 9 weeks. Week number 10, we take a break, down 1.4% for the week. 20% gain from that 63.16 pivot. 20% gain. We're giving back 1.5% basically so far. So if you want to hedge this, you could always hedge it with SPXS. So basically what this will do is it'll keep your position neutral. If you even want to do that, if you have longer term swings in mind. You got SQQQ for the NASDAQ, the Qs, SQQQ. Okay, that's turned up. S&P continues to move lower. Okay.
Particularly since they moved so much today on the job. Can I ask a question? Is he tireless now because of Chairman Walsh? Is this like a new cue? Howell never would have done this, and now he's doing it worse. That's right.
I like it. I like the tireless look for McKee. David, also in the introduction to our show, you saw that I paid for coffee and it's didn't get any change. This idea of rising prices and inflation, this is going to have massive implications for the midterm elections, isn't it?
Absolutely. It's what Galston calls the political power of affordability. And I think we've said at the top, we're all focused on what the CPI data is going to be, PCE data. I think Americans are focused on things like that cup of coffee. I think there's a limit to how nerd we can get to paying $6, $7, $8 for a latte, and $20 for the customer card outside.
Yeah.
I think we're reaching a point in which people are acknowledging that. Obviously, we've seen the spending trends here over the last few months start to change. We hear the administration touting how Americans are relying on or still using their credit cards. Not sure if that's a wholly positive thing.
Administration's talking points on inflation. Well, Kevin Hassett, the head of the NEC, go on TV to address the public about inflation the same way he did to take a victory lap on jobs today?
I don't think he will, and I think this administration is still struggling with this issue. And I think you've heard in recent days Republicans on Capitol Hill expressing their displeasure with the fact that the president has other things that are attracting his attention, the word chief among them. As this pain really hits Americans across the country, they're looking, I think, for some indication from this White House of what the plan is. That's true lawmakers, it's true American people as well.
Some of the voices of Bloomberg on inflation. Let's listen.
In the pre-COVID world, no major economy was able to get to even 2% inflation. In the post-COVID world, every major economy is hanging out at 3 or 2 plus.
The reason why inflation's in the focus is because we've been running above target for a while. There's only so many times you can say, well, this is a function of this idiosyncratic factor. This output pressure is a function of tariffs. Everything is idiosyncratic, but nothing is.
We've seen disinflation go up and remain up over the course
Okay, so you got hedges, SPXS, SQQQ. You could buy SPY puts. The VIX is still pretty low, so puts are going to be relatively inexpensive compared to back over here when it was 31. Okay, so S&P continues to move lower. Walmart looking okay. Walmart. WMT Walmart. Okay, Walmart.
Well, that is absolutely great. We will be back here next week talking about the SpaceX IPO, which happens on Friday morning. But right now, we're looking at this as a huge moment for retail investors. Elon Musk has reserved about 30% of the SpaceX float next week for retail clients. That is absolutely huge and represents, it's a flipping of the order. Usually Wall Street gets in first and then the rest of us get a chance, but this is really opening it up to this fan base.
Says way overpriced. He's coming in $30 underneath. Who's going to protect inventory in this pricing?
Well, that's been a real debate. So we're seeing that there's a lot of FOMO. There are some traditional places like the NASDAQ 100 that are only waiting 15 trading days to put SpaceX in. However, last night we also saw the S&P trading.
All right, New York Fangs, neutral to lower, obviously pretty decent pullback in the New York Fangs. Okay, yeah, that's pretty ugly. Maribozu candle, okay, no wick top and bottom. People, maybe some capitulation. We still got a ways to go. Stochastics get down here to 30. Could bounce at 50 too. 50 as well. Okay, all of these are rolled over. All of these rolling over. Okay, MACD's turned down. Using the whole strategy of recycling the oscillators, it takes 6 to 7 days for oscillators to reset. So you can see we're only on day 3, technically day 4, I guess. Day 4, so another few days lower would reset stochastic, RSI, MACD. We could be down here near 16,250, whereas the 50-day is, okay? Or this low right here, right along this area where we broke higher early, not too long ago. S&P still drifting. All right, we're below 74.90, right? So that's the level that gamma flips. Google's still hanging in there. Google, some stocks are working. The SPY puts I bought last Friday, I took those off. Okay, so we're back down. We're below that 750 level. I bought the SPY 750 puts last week. I took those off yesterday near the low of the day, just given the strength that we saw in the markets. And then here we go, another down day, right? So we're at the 21 day. Doesn't look like we're going to stop at this point for now. I would probably look at SPXS. This might do something for you for a hedge, or do nothing and just wait for the markets to bounce. You don't have to catch every nuance up and down. My son's looking for an opportunity to buy on the long side, and he's finally going to get his opportunity now. So that's good for him. 9 weeks up, 1 week pause now. We'll look for a consolidation up here. Hopefully it doesn't turn into more than that. S&P still drifting lower. Okay, where is that last 99 percentile? 99%, 74.75. 74.75 right there.
This is it. The trade that will make your day. This is what it's all been for. The daily commutes, the endless market monitor, tracing patterns, tracking flows, auto quoting, coffee crushing, working orders. This is the trade you've been waiting for. And with next generation speed, automation, and integration. This is
Okay, bear flag at the bear flag. Breaking down.
And that's the concern that we continue to have because we're starting to see a little bit of fragility in the consumer. If we look at consumer inflation expectations, they're much higher than what we've been expecting. And don't miss Bloomberg Live every weekday.
Welcome back to Bloomberg Money. Tom Keene and Scarlet Food here. The market's charging forward. We'll have to see on that into the weekend. We talked about inflation. There's a lot of other things to talk about. Gabby Santos coming up in the next half hour.
Yeah, really looking forward to that, especially as whether you're going to stocks, whether you're going to bonds. Inflation means we need all our investments to work harder for us.
When we look personal finance, we look retirement, we look wealth management. You just hit the bar, raise the dialogue. She's been doing it for
Tom Keene. He's been around since I first started watching the markets. It's crazy. 40 years. This guy's, I think he retired at some point. The good thing about people that have been trading for so long is that they have that experience. Some of these people they have on Bloomberg in their mid-20s, they've never seen a bear market. They may have heard of it, but they didn't trade it, they didn't see it, they didn't experience it. Or printing money like there's no end, like we did back in 2020, creating inflation. If Milton Friedman was still here, he'd be giving Congress a hard time. All right, so we continue to move lower. All right, so these levels are not holding. We're below 74.90. That was the gamma flip point that we talked about. Brent's been talking about for a while now. Below 74.90. Okay, things get negative, very dicey. 74.90, 7,500. Okay, as we move to the left, you can see these big strikes here at 7,000. You know what's really interesting? I just thought about this. The JP Morgan collar, we had gone so far above it. JP Morgan collar. Okay, we're starting to move down. Okay, that's 68, 65. They were JP Morgan short like what, 40,000 contracts? Short the 68, 65 call. They're long puts. So this is a dead trade.
And making sure that the financial literacy component is front and center. And I think that's what's lacking in some of the marketing associated with this is that financial literacy, that education.
Okay.
component. So I'm happy to be one of the voices alongside the founder, Chuck, who has just passionate about this subject.
Let's talk about some of the investors in the market because more people right now own stocks than at any time in history. The pros who are seen as the smart money used to belittle individual investors as the dumb money, yet it's often the so-called dumb money that's leading the way here. So is that a false distinction then?
All right, so
The labeling has always been unfortunate. Smart money.
SOXX continues to move higher.
Equipped that maybe sometimes it's considered the dumb money because they tend to be the contrarian indicators. Not or leaving aside the short client base who are all smart money. But you're right. That contrarian indicator nature of what retail investors used to be seen as, they've been more right than not.
Right.
What's interesting right now is they just represent one, and now speaking specifically of retail traders, not long-term individual investors. Very important distinction between those two. But now you have other short attention span money that's dominating day-to-day trading, the commodity trading advisors and the systematic funds and the long-short hedge fund community. And they're keying off each other and the positioning associated with it. That's why there's so much more research out there now on how everybody is positioned. And then social media has added volume to that kind of conversation.
And then you add prediction markets to the mix. I know that Schwab, along with other firms, is considering launching prediction markets tied to financial events as opposed to sports and pop culture, right? Staying away from that part of it.
How is that different? How is
Exactly.
Help me. I'm the dumbest one in the room. Oh no, Cortland's the dumbest one in the room. Help me on this. This is important stuff. How do we separate what you call them?
Prediction markets?
Prediction markets for betting on GameStop.
It's a good question. I can't weigh in on what we eventually will do with prediction markets because it's still early in the thought process, and that's not something I'm involved in on a day-to-day basis. But I will say that as a market strategist, I am often interested in what the prediction markets are saying about certain types of events.
The wisdom of the crowds.
Yeah, because it's a way to gauge sentiment in a unique way relative to many of the classic ways to gauge sentiment. So I don't dismiss that as something purely on the dangerous side of things. I think as a market observer, I think there's some value.
Oclo, you're looking at? Okay. Oclo, okay. Everything's pulling back right now.
Trying to do that as an individual investor.
The first thing I remember to go down in flames on this was on the Doge.
Doge coins?
The Doge.
Oh, they called it just the Doge.
They were shocked. Let's be optimistic. Are our children in this stuff, the laptops on the couch and all the jokes, are they going to learn from losing money? After they lose money the third time, maybe all of a sudden,
Oclo, let's see what that looks like. It's oversold.
About a 95% loss rate and a 5% win rate across the betting markets, particularly in sports betting. And the reason is that when you are betting, even if it's something that reads investment-like, you're just a spectator. You're not a participant. You're not a participant in wealth creation. You're not.
Okay, I'm not doing much today. I'm going to take another break. The markets just keep moving lower. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 12:21 p.m. I'm going to take a couple of minute break, just make some lunch. I'll be right back.
he was having with his Schwab financial consultant. And he was ruling the fact that he agreed to trim 5% of the position, even though the financial consultant had said trim back 10 as he's planning for retirement, lessening that concentrated position. And he said, so I split the difference. I sold 5% of it, and the stock went up 20%, and I'm mad.
Listen, we got a problem. I just got an email that they want a 2-hour show.
No, we can't do that right now.
We already come back with Lisa and Sanders with Charles Schwab. We want to talk a little bit about our personal view of personal finance. Later on, Gabriela Santos at JP Morgan, you've seen her out on LinkedIn talking about so much out there in financial planning.
Are you still in Bitcoin, by the way?
I am not in Bitcoin. I'm looking for a value opportunity.
Well, it's fallen below 60,000 for the first time since October of 2024.
Exactly.
As stocks in recession mode.
Maybe that's our show not next week. SpaceX will do that the week following.
There's plenty of room to see.
We'll see.
At CapTrust, we understand the value of having a financial partner who helps you visualize your future and reach your goals. Whether you're preparing for retirement, selling a business, or managing multi-generational wealth, we provide the depth and personalized guidance you need. If you're ready to see what's possible, we're here to help you move forward with clarity and confidence. Contact CapTrust to get started.
Fidelity active ETFs can shift and transform as markets do the same. They can cast a wide net, explore and uncover new opportunities, adapt to risk, and leverage the full power of fund managers and research teams to pursue outperformance. Markets can change in real time. Make sure your ETF can too.
This is it. The trade that will make your day. This is what it's all for. Daily commutes, the endless market monitoring, tracing patterns, tracking flows, auto quoting, coffee crushing, working orders. This is the trade you've been waiting for. Next generation speed, automation, and integration. This is the fixing of deals that make sure you lose. Bloomberg trade units. And special for execution maintenance.
Is Asia leading the next growth cycle? How are central banks setting the pace for global markets?
What is the Chinese plan for continuing economic growth?
How will demographics redefine the future?
What is the secret to facing off against the Trump administration?
At Bloomberg Invest Hong Kong, Bloomberg journalists ask the questions shaping capital, policy, and markets. Visit BloombergLive.com/Invest Hong Kong to learn more. Bloomberg Invest Hong Kong, where intelligence meets capital. Vote Melanie Wetlands for Horry County School Board Chair. Election Day is Tuesday, June 9th. Vote early now or on Election Day. Melanie will provide strong leadership, transparency, and fiscal responsibility.
I'm voting Melanie Wellens, Horry County School Board Chair.
Paid for by Melanie Wellens from Horry.
Bloomberg money, Tom King's going through. We're not leaving the set until the NASDAQ goes up. Now down 3.7.
At session lows. All right. We have Lizanne Saunders here with us. She's Chief Investment Strategist at Charles Schwab. And Lizanne, a lot of people working in finance are so busy talking to clients like you are that they don't spend very much time on their own finances. What would surprise other people about your own personal investment strategy?
Well, the philosophy that I think about that's most important, and I think is lacking in some of the conversations I've been saying, I've always applied it to myself. And it ties to perhaps my love of jigsaw puzzles. And I know you might think, where is she going with this? But I often ask audiences, what's the most important part of a jigsaw puzzle? And the corners are hand, they'll say corners, you know, the last piece. And I always say it's the picture on the box. Because try doing a 1,500 piece jigsaw puzzle without having any sense. So that's the plan. So have a plan. I don't trade. It's not that I'm not allowed to. I just don't have the time to focus on it. So there's people managing my money. I'm very involved.
Mm-hmm.
But I take a long-term approach. I only make adjustments based on sort of lifestyle changes. I don't try to time the market in the short term.
How often are you checking your balance?
You know, it varies. Yeah, I mean, if I go on to pay bills, then I'll see what, you know, it's flashing right up there on my Schwab statement. But I'm not, I don't have a quick trigger. I think that, and I think too many investors, by the way, individual investors solely tie their risk tolerance to their age. Yes, and that's a problem. You could be young, but if you're going to panic at the first 10% drop, you're not a risk tolerant.
Very well said. Lizanne, thank you so much for being on our program today. Lizanne Saunders, Chief Investment Strategist at Charles Schwab. Coming up, a conversation with JP Morgan Asset Management's Gabriela Santos. This is Bloomberg Money. On your side for this, right?
I was trying to hear the website. Across South Carolina, we're more than a dealership. We're family.
Cheers, you watched our place for a while, and we're still here for you.
So thank you for your support.
We're here with the same commitment in 2026 as
Before you
give life a try.
When control of Congress changes entire sectors like energy, on interactive brokers prediction markets, Republicans have about a 23% chance of keeping the House in 2015. Think that probability is too low? By yes, for 23
They will hold that order in. In other words, they want to sell it.
Each coin
Then they lose their commissions and they get dinged on the next hot deal. So we did that consistently. Now, there's a little difference here. If this is truly a hot IPO, then the book stabilizers, so Goldman, and I'm sure Morgan and JP Morgan also be stabilized.
You mean when you say truly a hot IPO, are you using that word to mean something different than like a big demand?
If it trades up in the aftermarket, I should say. If it trades up meaningfully in the aftermarket, they're going to want some volume to come in. So they'll take the shackles off. And the reason, because they're going to want to see the true demand so they don't have to short the stock to institutions that want to buy it. So institutions want to get filled. They want to control it. They don't want to be like a lunatic trade to a certain extent. Obviously, you want to be a big trade because you want to win the next mandate. So there are lots of different things. So it's not as easy as saying we're going to penalize you if you sell. There's certain times they want to sell, and some brokers also have, if it's up more than 10% or 20%, as it's trading, you can sell it. We'll take those shackles off.
Doesn't it mean though that there's just going to be increased pent-up demand to sell the shares?
Yes.
Once the lockup period comes for institutions, insiders.
It means they're concerned about a trading down.
Well, I know that.
That's why the
But in theory, like if there's a lockup, it just kind of cools. It puts a speed bump in the way. It cools the process of when.
And this is a different kind of
the ones that
lockup as well.
the private market are locked up for 6 months. Now, the banks can take them off the lockup if the stock's moved up significantly. Then they'll release them.
But this is totally different to me. It sounds like this is like mom and pop trying to buy this thing on their, in this case, Fidelity account, and then having to some degree, now I don't know all the rules around typical IPOs on Fidelity's platform or not, but prohibiting mom and pop investors from potentially reaping the benefits of a higher move in the stock.
I'm not sure it's legal.
Now, there are as many brokers that we listed here. There are just as many brokers, from my contacts, from my understanding, they're not going to hold to these rules, and they're going to allow people, almost immediately to sell this thing if they wanted to. So I think it goes both. Yeah. I think it goes both ways. So I think there's definitely the Fidelities, the Schwabs, whoever we highlighted there. They may be locking up, but there's just as many other, because there's a lot of brokers involved in this. So I think there's a lot that are going to allow people to move, and the brokers themselves are not going to get dinged. Now, I've had conversations with people about this, and that's my understanding.
Anti-flipping has always been there institutionally. This is just the first time that retail is getting exposed to it. Steve did a great job defining it. So my concern isn't how's this thing going to trade the first day. You and I talked about that earlier. I don't think we have a clue. But there's 4.3% of the shares that they're distributing day one. The lockups should be way more concerning, not to the respect of can we get out of it, but all of this money that's going to flood into it. This has been a private company for 24 years? Yeah. All of these people want to sell their shares. They might not be able to do it day one. They can't do 6 months, 9 months, 12 months.
But they can hedge.
No, Well, depending upon what the documents say when they bought it. $1.75 trillion worth of stock. I don't know how you can hedge that, but no, I'm talking about individual positions. I'm saying it's hard, but it's not all it's going to hedge. But it's 75. It's going to hedge. But
Kevin, one small correction though. When you said that, this is new for retail to know that they're locked up, it's not. But it's new in the past 30 years. So I started at Goldman in 1997, and in that time period, this was everything I did. Right, we just were managing this. We were dealing with this huge IPO calendar. Our clients were almost all retail. It was a wild time, and so now here I am at Gilman Hill. You know, and at Gilman Hill's 20 years now that I've been there. And you know, the last time I've had clients actually call me about an IPO before Gilman Hill. It's been over 20 years since I've had a single client call me and say, "Hey, can I get in on this IPO?" Which I think is really telling about the sophistication level and the breadth of who wants to get in. But I wonder too, if this thing's so hot and expected to do so well, why do they care if retail is being popped up? Like, it makes me worry more. Do those who are distributing it know something about the truth behind it than we do? I saw that headline of the $3.4 trillion.
Full-on conspiracy theory.
It's pretty wild. But it's pretty wild when you say, okay, we're projecting out 14 years for what revenue growth is going to be to make it look attractive. It really, like, I've been telling my clients maybe buy it in the afternoon.
There's another element to this. The other element is the bank. So we talk about all the fees they're getting. But as part of those fees, they've agreed to support the stock. So should the stock, we have one
S&P 500 continues to move lower. Path of least resistance right now is lower. is lower.
But here, if this trades down, it doesn't have to trade down a lot relative to float. But these banks could possibly get tattooed if they have to support it and buy the shares in.
Well, it's going to be an exciting week from today. We know that.
I'm excited.
And there's more news. I mean, the other big news, and I suppose it's somewhat of a surprise based on maybe where speculation was or expectations started to go to, that SpaceX, it turns out, will not be added to the S&P 500 on a fast track basis. It could have broad implications, of course. Leslie Picker's here with that side of the story. So were you surprised based on, you've done more reporting on this upcoming IPO than anybody else that I know?
Well, thank you. No, I was surprised. And as you guys were talking about what could be supportive of this stock, well, in fast track inclusion into the S&P 500 would certainly be in that category. And this was a surprise after the NASDAQ and FTSE opted to change their respective rules ahead of the SpaceX IPO and other mega listings in the pipeline to fast track those big market cap companies. But in a statement last night, S&P Global said that based on the committee's review of the markets and after consideration of responses received from a wide range of market participants, no changes will be made to the eligibility criteria for the S&P 500, among other indexes of theirs. S&P said that companies with large market caps will still need to wait a year after going public to be considered for inclusion. And if by June of 2027, SpaceX is not sustainably profitable, it still won't be granted inclusion. Now, SpaceX will have a relatively small weighting in the NASDAQ 100 at first, but as it increases its float, once the slew of lockups expire, if it doesn't other offerings, it will garner more influence and more forced buyers. However, it could also create some performance divergence between the indexes that include SpaceX and those that don't. SpaceX is expected to be quite volatile, especially in its early days and months of trading, as is any IPO, but especially this one, and that could make the disparity even more pronounced, Scott.
It takes a piece, I guess, of guaranteed demand out of the equation.
Exactly.
Right? If nothing else, at least at the beginning.
Exactly. And just to kind of, tie a bow around the conversation you guys were having earlier, traditionally, IPO 101, the most price insensitive investors are passive index funds and retail investors, especially in a deal like this, where they say $135 a share. Great. That's the price. And so all of these dynamics will have a role in this debut and the days and weeks ahead, because there are just a lot of structural forces at play here that don't have anything to do with the fundamentals necessarily, but they do have a lot to do with the way this stock will trade.
Can't wait for you to help us, lead right up to this next week, Leslie. Thank you. It's going to be an exciting week, and we'll be riding with you on that for sure. It's Leslie Picker. Coming up, more committee moves. We're back right after this.
When actually things aren't near as bad, and their numbers look fairly impressive. Megan, is this overall sentiment about Netflix, are they getting it wrong? Because your data says that it's way overdone.
Yeah, that's what we're really looking at right now. When we look at this and we say, advertising, as you mentioned, is expected to reach $3 billion in 2026, which is doubling last year. So they're really cranking up this lever that they were kind of late to the game, and now they're getting it right. They're monetizing users better. This is really how they're driving that revenue. And last quarter wasn't a terrible quarter. So we're looking at this. We know that costs are expected to fall heavy in Q2 and kind of ease at the end of the year. This is just the natural schedule. And so I think it'll be very interesting to watch into earnings, because we do see signs that maybe the stock is a bit oversold at these levels. And we're starting to see signs on the investor front that investors are taking a look and saying, wait a minute, this stock, this company, as you mentioned, has a massive user base. When you look at consumer mind share, I think according to Nielsen, even Netflix commands about 8% of total TV viewership. That's not just 8% of streamers, but total TV viewership. The only streamer above them is YouTube at about 13%. So I think Netflix is still a massive captive audience as it has. And for us, I would say the most promising metric is just that we're not seeing those signs of churn. We talk a lot about the middle class being squeezed and consumers being forced to make some decisions. And at least in our data, Netflix is one of the last subscriptions to go when you start to cut those subscriptions. I know in my household, Netflix is the carrier of Paw Patrol and Peppa Pig. So that subscription is never going to leave the household. And a lot of users likely feel this way. And so while we have seen some shifts of consumers who have kind of dropped down into the ad tier, long term, this is an opportunity for Netflix to still continue to monetize and grow that advertising business.
Disney's been trying to grab some of that market share. I know you mentioned YouTube, but Disney would certainly like people to come on over to, I suppose, some of the material they have for the young kids, and they're always positioning themselves as family friendly. How much of a threat is that to Netflix? If you think about, because you mentioned
Walmart, high of the day.
costs are going up, and there's the question: if consumers are cutting the cord,
Walmart higher, Costco.
Potentially, the biggest thing that Netflix is missing, at least in our data, that consumers really want to watch when you talk about content is live sports. They have some
Walmart taking off to the upside, looking good.
You have some baseball exposure in Japan, but at large, when consumers are really engaged and when advertising dollars are the most valuable, tends to be during these live sporting events. And that's just an area where Netflix is playing a bit of catch up. Disney certainly has exposure there through its ESPN Plus, and even you can watch a lot of live sporting events through Hulu Live, through Disney Plus, underneath that same app umbrella. So that's a bit of a leg up that Disney does have, but I would say at large, just from a content perspective and overall viewership and original content perspective, Netflix is still really good at what it does. It's really good at creating original content as well. And so far, as I mentioned again, I know I keep coming back to this, but really the most promising point in our data is just the lack of churn. And also the bar is getting very, very low heading into earnings. So this could be a very appealing setup for long-term believers in the company that think this is kind of a baby getting thrown out with the bathwater.
Megan, I got one more quick theory that I wanted to run by you. And I want
All right, what are the banks doing? Wells Fargo.
This competition between Netflix
All right.
TV. I think
Wells Fargo.
winners, while linear TV is the loser. And I throw Amazon in there as well.
Excuse me.
Big winners going forward, while the loser is linear TV and anything that you would watch on your TV. Is that the way you're seeing it, or do you see something different? Because once they go full load into live sports, I think linear TV is on life support.
Yeah, I don't think you're wrong. personally, I don't think I've ever been a linear TV subscriber in my adult life. I've always leaned towards streaming, and you see this a lot, especially with younger consumers and what they're talking about and how they prefer to receive their TV. I think overall now, if you look at the Nielsen gauge again that I referenced, that's about streaming comprises about 47% of overall TV viewing time. That's down a little bit just because of the massive influx of live sports and things like that a lot of people still prefer to get linearly. But as that shifts,
All right, CRML, I just got stopped out. CRML.
I think it is a case of linear TV is certainly the bigger play there versus these streamers, and Netflix has certainly carved out its own niche there and still commands a very massive audience. So I think that Netflix at these levels, again, it's just starting to get very interesting for us because we're starting to see that divergence and what the consumer demand and investor sentiment.
All right, let's see what Merck looks like. Merck, Merck, J&J. Okay, these are all moving higher. Amgen. Okay, breaking out to the upside. Biogen. CRML. I got just got stopped out of CRML. It took out this low. All right, USAR. I don't have a position anymore in that one. I did reduce my risk into USAR when it hit that upper Bollinger Band.
They've got the WWE, they've got some other things, Major League Baseball, a few games also, but not enough. And that's where the money's going right now as far as advertising dollars to live sports. Once they get that figured out, yeah, I mean, the stock slid pretty far from those all-time highs. Remember, we hit $134 last summer, and so far this year, down to about 13%. So it's been sliding. We're at levels that we haven't seen for about 3.5 months now, since mid to late February at this point. So the bar's getting pretty low in here, Kevin. When you take a look at this stock and the moves that it's had, it hasn't kept up with tech at all. It's kind of on an island by itself. How do you want to look at this one from an example trade?
Yeah, Tom, this is one, it's oversold on a relative strength. It's sitting there listless. It's now under $100. It's close to $80. So the move to zero is not that substantial. And why am I saying that? Because my paper money trade is a cash secured put and an aggressive cash secured put. And so what I did, I went out to the June 18th and I sold the 80 put, right? And so that gives you what, 13 days or 2 weeks where you're, even if you do get the stock called, even if it breaks below 80, you're I sold it for about $1.15. Your entry point would be $78.85, and so there is how I would look at something like this. And by the way, if the market allows you, you can continue to extend duration on this. Move the strike around if you feel the need to, Tom. But the risk is all the way to zero. That's assuming that you take the stock. And if you don't, you can always extend duration on this stock, but you do have risk down to zero because you're short a cash secured put. So if you don't have a margin account, the margin could be $78.85 in this case.
Yeah, that's if the stock were to somehow go to zero. But let's take a look at Kevin's cash secured put. It's neutral to bullish. The idea here is you either want to keep the credit that you're collecting on this, and that'll be your profit, right? Now, in this case, if you sell it for $1.15 credit, you can make $115 only. It doesn't sound like that much, right? And you've got a lot of risk in this trade, but it does, as Kevin mentioned, take your break even down to $78.85. That's where you would purchase the stock if you get assigned on it. And so this is a twofold type of position where you either want to keep that credit that you collected, or you're willing to buy the shares if the stock continues to move to the downside, but you're buying it at a discount to where it's currently trading, which is about $81.50 at this point. 13 days to expiration on this one. Kevin mentioned you got $7,885 in risk on this if the stock were to somehow go to zero. Probability that the 80 strike will be out of the money at expiration over the next 2 weeks, about 62%. So not that much, but there's not a lot of option premium in these. I think one of the keys on Kevin's trade is the fact that we are at levels that we haven't seen for about 3.5 months. So if there's a way that you want to either buy the shares at a cheaper price than we're currently trading, if you put a bid in for the stock at $78.85, you may never get billed on that, right? This gives you that opportunity to participate if the stock does continue to fall and you get assigned on it that you'll be buying the shares at $78.85. So keep that in mind, but neutral to bullish cash secured put here, Diane, in Netflix for an example trade.
All right, good stuff, guys. We've got the breakdown coming up. We're taking a look at Qualcomm.
Okay, we got a level down here at 7,400. Another 99 percentile. Maybe it bounces there. Got a pretty good feeling about that level. Okay, another new level. They just keep rolling this down, it looks like.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I programmed that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference. He's someone that actually cares.
Hi, I'm Alex.
I'm Jane, and I'm his mom.
I love that commercial. And I'm his mom. That would flip me out if that was my mother.
Level up and invest smarter with Schwab.
Welcome back, Cash Mark here on Schwab Network. I'm Diane King Hall, live on the board, the big board. Before we get to the breakdown, let me give you a check of where markets stand as we get closer to the bottom of the lunch hour on Wall Street. We'll start out with equities. We're looking at the S&P 500 lower by nearly 1.9% right now. So we're seeing that acceleration there of weakness in equities. It's definitely risk-off day today. The Dow lower by 0.8%. NASDAQ 100 even lower, off by about 3.5% right now. This as the yield on the 10-year Treasury ticks higher. Russell 2000 off by 3%. Yield on the 10-year Treasury up 5 basis points right now. We're sitting at 4.52, almost 4.53 at the moment. As we see that move in the bond market, we're watching Bitcoin buckling as well. Lower once again today. It is around 61,000 right now, but it has fallen below 60,000 for the first time since October of 2024. So it's finding a little bit of support here right now, but we're off about 4.25% in Bitcoin futures. You're also seeing Ethereum take a big leg down more than 10% right now. Solana lower as well. Qualcomm is getting a much more optimistic look from JP Morgan Chase ahead of its investor day later this month. The firm raising its price target to $265. That's up from $160. Puts the stock on positive catalyst watch, citing expectations that Qualcomm could lay out ambitious data center revenue targets. That is a notable shift from just a month ago when the firm downgraded the stock over concerns about weak smartphone demand and slow diversification progress. But the stock is still down even despite the price target hike. Time now for the breakdown for that. Let's welcome in George Sillis, senior markets correspondent, taking a look at Qualcomm. So Qualcomm is under pressure, even despite this price target move from JP Morgan Chase. It doesn't mean they're obviously completely on board with this, but the tone does seem to be changing. What's your take, George?
Yeah, it is changing the tone, at least for Qualcomm. I mean, clearly the market is pulling Qualcomm lower. It's down over 9% right now, or 220. It's actually had a phenomenal run since the late March reversal of the markets. And there's also the element in Qualcomm's business that is tied to AI as well as PC CPUs. But there's a couple things to be noted for Qualcomm. First off, if you just look at the earnings estimates going forward, they're expected to be down this year relative to last year. And sales also are expected to be around $42 billion this year and next year. So right now, the analysts are pricing a lot of growth for Qualcomm. The reason being is the business business with Apple in terms of their technology licensing, essentially, that Apple utilizes Qualcomm's modem technologies. That's going away, and some estimates have that around 13 to 17% of revenues for Qualcomm. This has been known, and that's why if you look at Qualcomm's stock price, it had been underperforming the S&P over the last year. Now the challenge really lies as the price has been moving higher. I know it's down today, but nonetheless it's been higher the last 6 weeks. Is what's going on going forward outside of the Apple modem business that Qualcomm is losing. Now, if you look at JP Morgan, they increased their price target to 265 from 160. But they do maintain a neutral rating on the name, but they do place it also on the positive catalyst watch list.
Looks like shorts covering a little bit here, S&P. I would just anticipate shorts will cover a little bit. Probably rolls over.
Essentially is data center revenue because Qualcomm is very big in CPU technologies for mobile, automotive, and they're trying to make ground up in terms of losses for Apple's modem business, and they're moving into the hot areas of the market, which is data center. Now, based on projections, the company is estimated to start selling data center chips in 2027 to the amount of around $3 billion, but even into 2031, which is, again, 5 years out, they're expecting $35 billion in sales. But what JP Morgan is saying with their neutral call is they're waiting for evidence of this planned execution of this data center business that Qualcomm is moving into. But nonetheless, I do think that the big catalyst for Qualcomm as of the last couple months is first the market, which was higher. Not today, it's down, but still, it's the CPU narrative versus GPU narrative. We talked about this quite often in the past few weeks, that companies like AMD, Intel, Qualcomm, ARM, these companies seem to be gaining traction as CPU demand is increasing substantively relative to GPUs for inferential data versus large language training models.
Being called, and you had a degree of concentration in every one of those past periods around the 40% level. And right now you're at about, remember we've been talking about how concentrated and narrow the market's been, that the AI Big 10 in the here and now was about 40%. And that has traditionally, a chart doesn't necessarily tell a definitive story about where the next chapter may lie, but nonetheless, if you're looking at past patterns, things that may rhyme, it's an interesting thing to look at considering some of these other periods of time in which bubble concentration was extraordinarily high. The numbers would suggest we're in one of those similar periods.
Yeah, and I talked about
Man, that was word salad. Jeez. I thought I'd put together some word salad.
And I was very clear. I was greedy, and greedy always gets you into trouble. Now, in stocks, even though, Micron's down 100 today, down 10% or so. That's what it was over the last couple of weeks. So where are we? So I think it's a great chart, a great point that Jeffrey makes, and there are lots of parallels to bubbles here. Even though everybody always says when you're in a bubble, everybody says it's not like the last bubble, but there are shared characteristics.
And by the way, it remains to be seen as to whether this is a bubble or not.
I agree.
But it's critically important to mention that.
No, it is. The demand is not slowing down. All the companies you cited, the earnings are still there. These aren't companies that are built on websites with no businesses. These are companies that really
Like John Walton was telling me on his desk the other day that by price action alone, there are things to be concerned about. In his words, the microeconomic effects of all of this outlay and infrastructure build and spending by the hyperscalers is real. The microeconomic impacts of all of that are real. Don't try and make the case that this is 90 whatever, because there are differences between then and now, at least as it relates to that.
Taiwan Semiconductor has been very good at controlling the supply that's going out. And then this is not just AI. There is the power, the electrification, the infrastructure that needs to be built out. So it's really touching everything. This isn't just one little pocket. Real quick.
From the bigger picture, you know that famous investment quote, right? The four most dangerous words in investing are "this time it's different." So you have to look at that and say this time probably isn't different.
Well,
and if it's not different,
things rhyme. They don't necessarily. It's
right.
the first inning.
But
Okay,
it's not,
we'll just
no,
see.
it's
We'll
not
see.
different in that it's new technology. It's revolutionary. Usually, technology doesn't actually replace jobs, but there is disruption. There's over and under supply.
See, the main difference is there's a bubble in valuations, not a bubble in demand. The bubble in demand and strength was in the internet.
Someone, the market multiples 20. Someone said there's no bubble in valuation and all because the earnings have been amazing and the projections continue to go up. We'll do finals next.
So what is unique about Schwab coaching is the community.
There's a lot of energy, like-minded people are learning with you. You can just see and feel all the excitement around.
Oh boy. All right, so we were overdue for this kind of a pullback, right?
Some clients like the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience. They help me fill in those gaps as an educator. People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress. And so that means
VIX making some progress. The VIX calls that I bought. Okay, nice little move today. I got the 22s for July. It's just a hedge, so hopefully we don't need it and we get the bounce in the S&P. For now, the VIX is up quite a bit. Still pretty cheap relative to at the moment. SPY's trying to bounce. The prevailing trend is down. VWAP is pointing down and to the right.
Is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram. I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at SchwabNetwork.com.
The 10-year yield off a little bit off the high of the day, but this is not good for small caps. If you're trading IWM, this is not good. This is a headwind, IWM. The 10-year pushing higher.
The Dow and S&P, that's sectors like healthcare, which has been super strong this month, staples, even utilities adding a smidge, while Bitcoin is now below $60,000.
lowest level since 2004. It's just a hair back above that now, 61 and change. Semis, memory, most of the Mag 7 is down. The semi ETF, look at that. SMH is down nearly 7%. 584, it's down 43 points today. SanDisk and Micron, SanDisk down 10%, similar for Micron as well. So why this sudden reversal in the trade that has absolutely dominated the year? Well, investors are pointing to a few notable events this week. Google doing one of the largest capital raises of all time. The concern? Why can't a behemoth like them fund their own AI build-out? Then Broadcom reporting a less than stellar outlook in its earnings report this week. And investors start to question and they start selling. We saw a deep decline yesterday. That's continuing with a 5 or 6% drop today. Concerns are now building about the market's ability to absorb these massive IPOs as well and where the funding may come from investors. Finally, the jobs report today may solidify the narrative that we'll see no rate cuts this year, maybe even a hike. Here for our opening exchange is Drew Mattis, the Chief Market Strategist at MetLife Investment Management, and Adam Crisafulli of Final Knowledge. It's great to have you both here. And Drew, prior to today, you were saying there's only a few areas of the stock market you still liked.
Yeah, I think what you're seeing today is, first of all, there's a lot of narratives that are kind of intertwined right now, and I think it's interesting, right? You get a good jobs report, which, if people talk about AI, they typically talk about like labor savings, and then we're seeing jobs being added, which has kind of been our thesis all along. And I think, though, maybe it just causes enough people to rethink kind of, what they're thinking is going to happen over the next, 12 to 18 months. And certainly with the Fed, it's not enough to kind of, I think, prop the hype, but it's certainly enough to kind of get people thinking that maybe it comes out on the table anytime soon.
You saying that I'm not really comfortable with most equities right now. If I had to pick something, healthcare, the needs not going the way. Real estate is starting to look more interesting. I mean, does this really mean to you that investors should look to those areas and not towards the areas that have generated multiple 100% returns up to this point?
Well, everything has a time and place, so it's a question of, are you comfortable taking risks right now? And I think what the market's showing us right now is that a lot of people, are maybe trying to take some chips off the table and make sure that, they've got cash on hand, and I think that's what you're seeing right now today.
Adam, what would you add here about this kind of breakdown that we're seeing?
Yeah, I definitely think that, there's been very thin leadership over the last several weeks, so some of the groups that have been not participating, and you're seeing them kind of catch up a little bit today. I suspect that those barriers are going to start to behave better, than the white hot tech stocks that have just been massive outperformers for the last, month and a half, 2 months right now. So today's sell-off has to be put in context of kind of what's happened before. These tech stocks have rallied enormously, and you can barely even see today's sell-off in a multi-month chart of some of these names.
Right, but Adam, we were speaking with a guest yesterday. His firm is called the Uniform Momentum or something to that effect, and they do a lot of tracking of momentum moves. And I asked him if we are seeing a break in the momentum of the tech space. Now, maybe today the answer is yes, but yesterday the answer was no. He said the medium-term sort of strength is still there. So when you say zoom out, does zoom out tell you stick with the AI build-out that has years to go, or does the zoom out tell you that market action like we've seen in those areas up to this point was uncalled for?
I definitely think for the next couple of months, you can see tech consolidate and lag a little bit behind the rest of the market. I definitely think that the boom AI is a very real technology. It's going to have profound implications going forward. But that doesn't mean that the parabolic price action that we saw throughout April and earlier this month, that is sustainable. So I definitely think that at best, you're going to see a lot of these regions consolidate, and then some of the other.
When people, check their apps, Drew, turn on the TV, look at what's happening today.
All right, a little bear flag on the S&P. Looks like we're going to move a bit lower. It's only the first day below the 21-day. We could bounce back up there by the end of the day, so we'll be watching for that. But right now, the bias is we know why a lot of the selling is occurring. I mean, we've been up for 9 weeks straight. This is week number 10. Taking a break. People taking profits.
So where does that tell you to go? I mean, is this an 8 or 9% pullback in some memory leadership names in an area for entry for a sector that's supposed to be leading the charge until we are told otherwise, forget the price action? Or does that tell you to go elsewhere in the market?
Well, I mean, as kind of the investor who can kind of go anywhere, which is kind of our framework.
space. Look back a week and that's where we are again, right? So that's been actually the sell-off that we're talking about in the last 3 days. You go back to where the last time we were here, and it was last Wednesday. So it's kind of important not to make too much out of a short-term move.
No, but the question is, if we're only back to last Wednesday, do we need to correct more in some of these overheated parts of the market?
I think what we could simply be seeing is that there's a lot of volatility. There's been volatility on the
All right, looks like we're going to push a bit lower here.
sharp movements to the upside. And usually the pendulum has to swing both ways over the course of any period of time. So I wouldn't make too much of any of the moves around, and I wouldn't necessarily rethink everything. It's just a matter of being comfortable with where you are. How much risk have you taken? How much risk do you want to be taking? And I think what we've seen today, some people are saying, I have enough risk and I still have enough exposure, so I'm going to take some off the table so that I have an opportunity for later.
Adam, are people, I'm getting a lot of questions about this. Do you think investors are selling to make room for putting SpaceX in their portfolios when it IPOs next Friday?
I think to a certain extent, I think it's something this came out of nowhere. I think markets have been preparing for this for a while. I definitely think the news from S&P overnight, we're not changing their index inclusion rules, is spooking people a little bit, raising some concerns about how the market's going to be able to absorb some of these mega cap IPOs over the coming months. Now, that had been one of the mechanisms by which people thought the market would be able to kind of take in some of this extra supply. And so with that not happening, I definitely think there's a little bit of anxiety within tech, just from a technical, mechanical supply and demand perspective. So, you probably are seeing that, not just in equities too, but that's probably explaining what's happening in crypto to a certain extent as well, where investors definitely are creating SpaceX in particular is going to be allocating a big chunk for retail investors. And so that's probably playing a role as well, what we're seeing.
Drew, you want to give a final comment on that?
No, I mean, I basically agree with the view. There's a lot of movement right now, and it's not one factor. So we're all looking for the reason. It's not the reason. There's multiple reasons why this is happening over the last couple of days, and I think there's reasons why it could continue, and there's reasons why it could stop. And I think it's I don't necessarily think the labor market's kind of the big story here today. Obviously, I don't think it drove this, but it was certainly a factor.
All right, gentlemen, really appreciate it. Thanks for joining us to talk this through a little bit. Drew Mattis and Adam Crisafulli. Let's turn now to SpaceX. As we were just discussing, we learned from S&P Global last night that they will not change the rules of entry for it to go into the S&P 500, meaning they will not get fast access into this important benchmark. The decision means that before being considered for inclusion, a number of requirements for SpaceX will still have to be met, such as companies have to wait at least a year after going public. They have to have reported some ongoing profitability, which SpaceX doesn't have right now. And the stock needs a public float of at least 50%. That decision is in contrast to the NASDAQ, which has decided to fast-track newly public companies into the NASDAQ 100. And it's not just those major indices making some changes here to accommodate SpaceX. Retail brokerages are also changing rules for once SpaceX goes public. Moody today. They want to clarify SEMA, that in some cases they can always move things around. So in what areas are we seeing something we've never seen before to accommodate this IPO? And in what areas is this a reminder of, sometimes these rules can move around?
Right. So because, Kelly, there's a 30% retail allocation, the brokerages see this as a huge opportunity. They're incentivizing investors to buy into SpaceX by lowering the minimum account balance needed to participate. That's for a couple of them. They're also issuing guidelines to discourage retail traders from trying to flip the stock. So here's Fidelity's message. If you sell SpaceX shares in the first 15 days of trade, you will likely be blocked from participating in future IPO deals for 6 months. If you make a second attempt to sell within that time span, you'll be blocked for a year. A third flip, that's a lifetime ban. Other brokerages like Robinhood and SoFi define flipping as selling in the first 30 days, which is in line with watchdog FINRA. So the key thing here is to check with your brokerage what rules are in place once SpaceX goes public next Friday, because there are implications on your ability to potentially get an allocation in future deals, including Anthropic, which filed confidentially last week. There's OpenAI, which is expected to be in the near future. We're told these guidelines in general are in part motivated by underwriters that want to avoid big swings in SpaceX's stock, because again, Kelly, there is a big retail allocation here for the steel. 30%, that is much higher than the 5 to 10% that we typically see for IPOs.
Yeah, I mean, so Fidelity's an interesting one to use as an example. They are going to lower the account minimum.
Yes,
to
it's
buy.
typically 100 to 500,000. Now they're saying
Big
it's
number.
2,000.
Right.
So they're really trying to get exposure to a retail investor that typically isn't in the market or is interested in space, and they see this as an opportunity to get in because they do have that allocation.
Yeah, and Fidelity says this isn't a rule change. We've moved it down to 2K before. I haven't yet heard from them what case is for. They can move those numbers around, so there is some flexibility there. I don't have a problem.
AI stocks have become the market's dominant growth.
All right, looks like we're going to push a bit lower. I'm just watching the markets. Stocks, for the most part, look like they're going to continue to move lower. Check out defensive names like Walmart. Those look pretty good. Walmart. The banks fading a bit. Wells Fargo faded a bit. Starting to move back up now. Wells Fargo. Morgan Stanley also pulled back a bit. You can wait until next week. Maybe we'll get a better entry. Walmart. Nice bounce on Walmart.
He blames it on what he calls a capital rotation mode, where capital markets are moving into AI, as I mentioned earlier. He, on social media, he showed the significant Bitcoin outflows that's happened since May 14th, more than $4.3 billion worth, according to data from Farsight, as evidence of the rotation that is driving down the asset. Again, Mike Saylor's kind of been seen as like this poster boy for Bitcoin. He even was like, maybe it's time to sell.
Yeah, and I think if you zoom out, it's still impressive that this Bitcoin phenomenon has grown the market cap it has. And so we'll see going forward if it stays stable around this price and it continues to drop or if it goes up more.
Let's move on.
All right, we're trying to hold this level.
James Dolan, who before was arguably quote the worst owner in pro sports, a marker given by Bloomberg at some point, is actually now 3 wins away from owning a championship team. Since taking over in 1999, the Knicks lost their way, making the playoffs only 7 times over the next 23 years. They actually had the worst record in the NBA in 2019. And it wasn't just the team's performance on the court. Dolan publicly battled the fans, his employees, city officials, and even his own players. He once fired an employee after she reported being sexually harassed by Isaiah Thomas, the team's president of basketball operations at the time. She sued and was paid millions in a settlement after a jury ruled that she was improperly fired. Then there was the feud between Dolan and Knicks fan favorite Charles Oakley. In February of 2017, he was asked to vacate his courtside seat at MSG. Now, reports varied as to the reason why, but it was publicly known that his relationship with Mr. Dolan had been strained for years. But if the Knicks bring home a championship, could all be forgiven? The Knicks have been on a tear lately in the playoffs, winning their last 12 games and hoping to extend it to 13 straight in Game 2 in San Antonio tonight. Kyle, despite the flack that James Dolan gets, it's done little to hurt his businesses where he owns Radio City Music Hall, the Beacon Theater, the New York Rangers, and, of course, the Las Vegas Sphere.
He's doing all right. Well, first I have to say, when someone moves from Minnesota to New York, good things happen in Ray. No, I'm not talking about me in this podcast. I'm talking about Karl Anthony Towns going to the Knicks from the Timberwolves. Shout out to my guy, Cat.
I knew the story. He's sneaking a Wolves.
I got to find the Minnesota link somehow. But let's get back to business. It is Dolan's world right now, and we're just living in it. The Knicks are expected to generate more than $140 million in revenue during this final runs at about 55% profit margins. The MSG sports stock is now at an all-time high, up 45% this year. Obviously, Dolan owns the Sphere in Las Vegas. It's making 7 figures a day with this AI-enhanced Wizards of Oz on the big screen, and he's looking to bring more really popular IP to that production. And the Sphere's stock is also skyrocketed, up 125% since last April. There's plans to bring another Sphere to Washington, D.C. And so he's making.
All right, looks like we're going to push a bit lower. The bias is lower, so I'm not looking for any kind of retracement type of trades at the moment. Hedge flow is still looking pretty negative as we continue to drop here.
There's also this potential Knicks-Rangers separation, which actually has Wall Street excited about it because soaring NBA valuations can be had in a single stock. So there's this thing apparently that I learned called the Dolan discount because the private valuation of the Knicks and Rangers have traded below the enterprise value of MSG Sports. So separating them at breakup can actually boost the franchise's valuations because now you have this idea that they're worth more separately than they are together. And lastly, I do want to highlight Leon Rose, who's actually the team's current president of basketball operations, who was hired in 2022, and he's formerly an NBA agent. And a lot of people believe that was kind of like the turning point for the team. Over the past 6 years, Rose kind of carefully constructed the current rosters that's playing in the finals right now. And then, of course, in 2022, he signed none other than Jalen Brunson to a four-year, $104 million contract, who also happens to be his godson. So he also hired Brunson's father as an assistant coach. But basically, a lot of people are saying Leon Rose was this pivotal figure in the team's success.
We got to give Rose his flowers.
Yes. All right, let's take a quick break, and when we come back, we'll talk about movie theaters making a comeback.
President Trump gives Pamela Abbott his complete and total endorsement.
Another warrior, Lieutenant Governor Pamela Abbott.
Pamela Abbott will fight hard to grow the economy, cut taxes and regulations. President Trump says Pamela Abbott is a good friend, fighter, and winner.
Pamela Abbott is fantastic.
Pamela Abbott for governor.
Meta lower,
Endorsed by President
Oracle lower. Everything is lower today. Intel.
Pamela Abbott is hiding her liberal views. Let's rip off the mask and look at her record. Pamela Abbott's a northern liberal pretending to be a South Carolina conservative. Abbott got rich pushing woke DEI policies in the workplace. She even funded drag shows. And the company Abbott founded helped hire foreign workers over Americans. Pamela Abbott put herself first and South Carolinians last. Pamela Abbott, more AOC than GOP. She can never, ever be our governor.
To dream the impossible dream.
The A&M AgriLife Extension, among other things, as well as the acting commissioner of the Department of State Health Services, Garcia. Room right now, but we had with us earlier for briefing and consultation State Senators Perry and Flores, as well as Representatives Guillen and Don McLaughlin. At this time, I turn things over to Dr. Digis.
All right, S&P just sitting here at the low. Number of stocks advancing. Believe it or not, we got 240 stocks advancing out of 500. About 50-50, about 30 on the NASDAQ. So about 66% of the NASDAQ are decliners or unchanged. So the Qs taking it on the chin today, below the 21-day moving average. Headed lower. We could stop right around this area, around 700 maybe. Definitely a different look than it was a few weeks ago when we pulled back and then bounced. This is like outright selling. Walmart pushing higher. Safety trade, Walmart. S&P 500 also looking very different than it did a few weeks ago. So my guess is that this is going to continue. If we bounce here at the 21-day, that would be something. That'll screw up both the bulls and the bears. The bulls who sold and the bears who cover. If we wind up opening up on Monday and we're even lower. So I'm going to keep hedges on. You could use SPXS. Okay. You could use SPXS. for a hedge if you need it. Maybe you don't need it. Maybe you just want to sit tight and hold on to the cash that you've accumulated over the last few weeks. As we suggested, reduce your exposure. I think I said that 1,000 times, 100 times at least. Reduce your exposure, bring your stops up and tight underneath current price action. Over the last several weeks, that was our suggestion. That's what I was doing. And for option trades that I want to hold on to, I had options that I rolled out to July or August or even later, like Walmart. I have Walmart December calls. Okay, you know Walmart's going to be fine towards the end of the year. Is this a good location to buy? 200-day seems pretty obvious, but we do need to hold this area. So Walmart's an initial position. I haven't added to it yet. All right, S&P looks like it's trying to bounce here. Trying to hold this level. Let's see if there's anything here. There's really nothing right in this area. There's a 99 percentile negative gamma zone. It's 74.15. This was 99 percentile prior to this little pullback at 7,400. So it looked like there was a spread here at one point. The negative gamma is still there. $7,400 and the 74.15 negative gamma. We could head down there. Okay, Charlie Pellet. It looks like we're trying to bounce here. I would assume it's just shorts covering. Assume this is just short covering. Apple's starting to bounce. Apple, the body is inside of Thursday and Friday price action and Tuesday, Wednesday. Did I say Friday? I meant to say Wednesday, Thursday price action. Tuesday was a pretty big day for Apple, and then we're just kind of consolidating here. Just seems suspicious that this is institutions up here. Some distribution at highs. We are starting to bounce, so shorts are most likely covering right now. Shorts are most likely covering. Okay, Apple starting to bounce.
Whether or not that's actually going to pay off. So today, as you really factor in that strong surprise jobs report that we got today, and you also think about the earnings
Apple.
out of Broadcom and some of the peers, you're really seeing a crackdown right now on the tech sector. If you dig into the S&P 500, information technology, that sector alone, the worst performing group in the S&P 500, no surprise there, down more than 4%. So what I'm hearing from my sources is, yes, we are seeing an acceleration of this sell-off, but it's really focused on the tech space. It's a rotation that we're seeing out right now because, as you mentioned just a bit earlier, we do still have some green shoots in this market. Taking a look at consumer staples, healthcare. So you're seeing investors on Wall Street.
NYSE still at the highs. It's off the high of the day, obviously. Are we going to get some buyers here at the low of the day? Looks like they're starting to buy down here. Shorts are covering. Just assume this is short covering for now. I don't think this is a trend reversal. Think being the operative word, I have no idea. All I can do is look at what you're looking at and see the same thing. Okay. I don't think this is going to be a big retracement like we saw yesterday. If we did have that, I will say this, I'd be reducing my exposure more aggressively. Okay, we've already had this one big move down. I suspect we're going to see more downside, but that's just what I'm thinking. So I am hedged. And the bottom of the watch list, there's suggested hedges if you ever need them. That never changes. Okay, Microsoft looks like it's going to roll over again. Let me look at Microsoft. I haven't looked at that chart all day, Microsoft. So Microsoft, yeah, back into the range. This really sucks. I will say this, though. The pullback is on lower volume. Okay, you notice that? Microsoft, the pullback is on lower volume, so that's good to see. Okay, so long as if Microsoft can manage to hold this area, this is where we found buyers before to start this week. Thursday, Friday was above average volume. We popped up, and then Monday we gapped above the 200-day and just transitioned right back down on Tuesday. But I do notice the volume, right? The volume, pretty obvious. Lower volume on the pullback, that's good to know. The opposite would have me like this over here. The opposite, like back in late January, would have me more concerned that more downside is in store. The fact that this is tapering off, this pullback just seems like traders that are not getting what they were looking for on Monday capitulate as we push lower. There's not a whole lot of people selling. Let's see what IGV looks like. Oracle, and see, hopefully we see the same thing on Oracle. Same thing on Oracle. You see that? So we're easing back to the 200. And let's look at Walmart as a contrast. Walmart, not much there. Costco, just looking for some. Okay, Costco looks like volume. Okay. A little bit above average volume. 2.5 million is more than normal. Usually you have about 1 million shares trading on Costco. So for Tuesday, Wednesday, Thursday, we had a slightly above average, not a big deal, but we have been rising, so that's good to see. The consumer staples, volume tapering off. Financials, volume was above average yesterday. We're trying to stay above the 200-day. So we're about half of yesterday's volume, almost. Semiconductors, SMH. Now there's a difference. See the difference between this? Look at semiconductors. It's pulling back. Volume is increasing. That's not good. Conversely, Microsoft is okay. Volume tapering off. Semiconductors, volume increasing. 2 days in a row and way above average. So this looks like institutions selling or taking profits. SOXS is one way to hedge it. Okay. Just the opposite. You got above average volume on the buy side. All right. Just watch these little nuances. Okay. So Apple trying to bounce a bit more. S&P, spiders. Okay. Spiders trying to bounce. Okay. I'm going to take a little break. I'm just looking for another markets to roll over again. VIX to continue moving higher. Watch the VIX too. Okay, VIX is starting to fade from the high, but that was a big move on the VIX today. It's Friday. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is June 5th, Friday, 1:30 p.m. We got another 2.5 hours to go. Okay, I'm going to take a couple of minutes and just chill, looking for the SPY to hold this level, maybe. Okay. I'll be right back.
pressure going to potentially be on him to hike rates, or is the data not strong enough for that?
It's hard to know what the president is because it seems like he's back on the most important the markets are moving through this, and they want to know is Kevin Warsh, regardless of what he said in the past, to take this job, to give these confirmation hearings, in plausible and other than realistic expectations.
I guess you have the markets on his side, but when you read Truth Social this morning, I don't know how comfortable Kevin Warsh should be. With a great jobs report, the president writes, like just announced, stocks should go up, not down. That's the way it was for 200 years. Growth does not mean inflation. How would you respond to the president?
Well, I've been a portfolio manager for a long time, and when you start saying, oh gosh, the markets are just wrong, you really have to look in the mirror and ask yourself if you really understood what's going on there. The president has his own particular lens to all of this, of course, but I think if you're an investor today, you clearly see a price shock coming from the Middle East. It may or may not last, but it's a shock that comes on top of inflationary pressures that they were still trying to wring out of the system. I don't think this is a moment for the Fed to hike right now in response to what's going on in the Middle East. It's really a moment to stand pat, to see how those dynamics play out, to see how the global balance of supply and demand really levels out in the next several months, even with the straits not opening or not opening much, because even if there's a deal, it's going to take a long time for them to fully. And so if you're the Fed, this is a great time for you to say, look, there's a lot going on right now. We're going to
Well, on the Strait of Hormuz, Christopher, you have a new op-ed in the New York Times, which is entitled "The Strait of Hormuz is getting less dire by the day." You write that with every passing day, the world is learning to live without the Gulf's seaborne exports. You argue, obviously, that this hasn't been painless, but I guess my question to you is, have we been able to live with it thus far because there were inventories to draw from? Those are being depleted now. Could we not still reach a breaking point when there's no more inventory left?
Well, there will be breaking points in certain companies and certain countries, maybe in certain industries, or with certain parts of the hydrocarbon supply chain. LNG is a much more difficult commodity to reorient. You're seeing a variety of things, as markets always do, responding to those high oil prices. But you're seeing oil coming out of the pipelines from the Gulf. You're seeing a little bit of shipping coming through, tiny amount. You're also seeing a big response from other producers in the U.S., in Mexico, in Kazakhstan, and Brazil. And you're seeing some demand destruction in the sense that there are some rationing measures on the way in Asia. So all of those things put together help you. We're not headed for some big cataclysmic crash right now. There will be, as I say, a lot more pain ahead. But a lot of what you're seeing right now is the world adjusting to what is unlikely to be a Gulf Gulf supply anytime in the future. There's no way the world is going to rely on the Gulf anytime soon. 20% of its oil supply. So we're going to be looking elsewhere.
SEL Christopher may well be reflecting the market attitude on this and why we're not still in triple-digit territory. $90 a barrel today in New York. Christopher Smart, our growth group. It's always great to spend some time with you, Christopher. Thank you. I'm Joe Matthew in Washington alongside Candy Lyons. This is Balance of Power. It's 1:40 on Wall Street as you check markets all day long here at Bloomberg. We begin with a developing story headline right now off the Bloomberg Professional Service Group of States is preparing a lawsuit to block Paramount Skydance's acquisition of Warner Brothers. Now that is according to Reuters, which cites two sources. Shares are moving on that report. Warner Brothers Discovery down now by 2.3%. We got Paramount Skydance on a down day for the rest of the market. Right now, PSKY is tumbling by 7%. Wall Street's historic weekly run screeching to a halt. Stocks hitting by a tech sell-off and higher bond yields after this morning's solid jobs report added to bets that the Fed's next rate move will be a hike. S&P right now down 119. We are off the bottom, but still at 74.64. This in a week in which the S&P did close above 7,600 for the first time. Today, the S&P is down 1.6%. The Dow, after yesterday's record, down 360, down 0.7. Nasdaq Composite Index down 740 for Nasdaq, a drop right now of 2.8%. The Russell 2000 Index of small cap shares down 2.6%. The SOX, the Philadelphia Stock Exchange's Semiconductor Stock Index, down now by 7.3%. And the VIX on the rise, now just below 18. 10-year at 4.53%, the 2-year on this jobs Friday, 4.16%, the 30-year, 4.99%. Gold selling off down $130 the ounce, down 2.9%. Right now we've got spot gold, $43.42 the ounce. West Texas Intermediate crude, just above $90 a barrel, down 2.9%. Barrel of Brent, $93.12 the barrel, down 2%, and Bitcoin 60,800 on Bitcoin. It is down 4.2%, but it did break below the key $60,000 level. Again, recapping, S&P 500 index down 126, dropped there with 1.7%. Briefly, one sports note: Chicago Bears planning to leave Illinois and head to Indiana after over 100 years. Team intends to build a new stadium in Hammond, Indiana. Exact site yet to be selected. Joe and Kaylee, that is a Bloomberg Business Lunch.
There might be a little negotiating going on there. Charlie, thank you very much. Charlie,
that in DC.
Yeah, that's true. Boy, Charlie's had a day, huh? This market's having a day. He'll be back at the top of the hour, 2 p.m. Eastern Time, with the latest read on stocks and bonds. Of course, a week from today, we're going to be talking about the biggest IPO ever. That's SpaceX. The appetite for all things space has been remarkable. We stopped down for all the launches around here. Getting a rocket off the ground, though, Kaylee, is not always as easy as someone like Elon Musk might make it seem. As a matter of fact, this is company Launch on Demand that's preparing to break ground later this year. With the massive race underway in Latin America, specifically when it comes to space infrastructure, where do you launch these things?
Yeah, especially as we're seeing a widening in the commerciality of space. You want satellites up there. SpaceX is to believe this is going to play a role in AI compute. Going forward, you need to have the places for all of that activity to originate, to get up to space. And this is something that they looked at in Wall Street Week this week as Bloomberg Stayed West and explored this, and how it's not just a race for companies like SpaceX and Blue Origin to vie for space, but it's actually maybe a little bit bigger than that when we think about the global space race and the competition between the U.S. and China.
As Launch on Demand prepares to break ground later this year, a larger race is already underway in Latin America. Space infrastructure has become a new front in the U.S.-China rivalry.
China is aggressively making investments in our hemisphere, particularly in Latin and South America. Also, partnerships that they have made with Caribbean nations to have aerospace applications, satellite demonstrations, civilian applications, also with military application components to it.
A recent report from the Select Committee on the Chinese Communist Party warned about China's growing space footprint in the region, including more than 10 satellite tracking stations. Congresswoman Haley Stevens of Michigan is a member of the committee.
This is a call to double down on the way our system works. And so we don't want to be ceding ground to China. We don't want to see them continuing to eat our lunch with our neighbors. And we can win this race.
I guess you could look at it as a marathon or maybe an ultra marathon, but I don't see an end here. There's not a clear finish line.
Carrie Bingham is a director of CSIS's Aerospace Security Project.
Well, I thought what was really interesting in the decades that we were competing against the Soviet Union, so much of what was happening in space, it was fueled by government. I think what you're seeing now, which really sets this current era apart, is so much of what's happening in space is commercial. Over 80% of the satellites on orbit today are commercial systems. A lot from the United States, SpaceX, Starlink, but many other countries are now players in space. China has ambitions to be the world's space power. Their presence and their capabilities in Latin America are part of that strategy. They want access, they want influence. They want to be able to band together with these countries in bodies like the United Nations to start shaping where the standards are.
We started this program well before people realized that China was, very interested in taking over real estate in Latin America. As we have gotten the Trump administration and President Bolsonaro's administration together, they are aligned on what is being called, the pivot to the Western Hemisphere. So I would call the spaceport more of an artifact of the decision to pivot to the Western Hemisphere rather than, anything else. And we emphasize this is run by a U.S. company that is designed to be commercial, that is complementary, not competitive, with the spaceports in the United States. And we work very, very hard to make sure that they understand we're a friend, not a foe.
Really interesting piece coming up on Wall Street Week, which airs right here on Bloomberg TV and radio after the late edition of Balance of Power. It starts 6 p.m. Eastern Time. Haley, I have long said it, you've heard it repeatedly on this program. When Americans, if Americans, and it does seem to be a when, not an if, see a Chinese flag on the moon, the urgency of the story will suddenly materialize.
Yeah, of course, the U.S. is trying to make sure our flag is back on the moon.
That's right.
First, and we're 2 years ahead? NASA says 2028 is our goal. China's looking at 2030.
Got a few more stages on the Artemis before we get there, but that is something that we'll watch. Along with David Weston's great program, I think will be coming up at 6 p.m. Eastern. Kaylee, we haven't really had a chance to mention with so much news here and our focus on the markets today, what's happening in and with Iran outside of the market implications of rising energy prices that so many have touched on already. Iran most recently saying that no progress has been made in talks, and we have big questions about what's happening in Lebanon, where, of course, the conflict between Israel and Hezbollah remains a huge sticking point in our negotiations. It's something the president talked about in the Oval Office just yesterday.
I think Hezbollah, I will tell you, they called us and they said, how about stopping? And I think you're going to see things happen on there. It'd be really nice if Lebanon could have some peace. I spoke to Bibi Netanyahu about that. We're going to win one way or the other. It's going to be militarily or effective.
Earlier in the week, the president confirming in an interview some of the spicy language he used on the phone with Benjamin Netanyahu as that conflict continued to rage. Little has changed, though, this week when it comes to talks between the U.S. and Iran, and that's where we start our conversation with Melissa Tufani, the former senior advisor to the Secretary of State in the Biden administration, managing director and navigator research. Melissa, great to have you with us. Thanks for joining our conversation today on Bloomberg. We're going into another weekend here. There are questions about whether we should even be calling this a war. If it is a ceasefire, however, that's a curious word to use as we continue shooting at each other. Into a real kinetic.
All right, a little drift. You can feel it. There's hardly any movement in the markets. Not a lot going on. Hedge flows have flattened. They turned the sell program off, basically. You can see hedge flows are starting to flatten to maybe move a bit higher. There goes Microsoft pushing back up. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, June 5th. I just took a little walk outside. It's gorgeous. A little warm, but not so warm that you are uncomfortable. Great to get a little sunlight. And just a breath of fresh air. Markets are not giving us much to go on. Chips are down. Intel's trying to bounce right now. Semiconductors, I would assume any bounces are just shorts covering, not new money coming in. That's what I would assume right now. That's my thesis. I'm sticking to it. any bounce in the SPY or anything like that. I'm just looking at it as short covering. Semiconductors, trying to turn a little bit here. Semis, a big day down on the semis. A lot of people are going to make a big deal out of the 21 day. Volume is similar to what we saw last time we pulled back. We had a pretty decent day. What was that? That was a Monday, that big red candle there. Back on May 18th, we pulled back, and then again on May 19th, we wound up bouncing after 2 days of significant selling. We got 1 day now, not to make much of it. I don't know. I mean, you just think about it. It could be just as simple as people taking profits like we've been doing over the last couple of weeks into this 10th week. I didn't think we'd make it past a 6-week higher, much less a 9-week rally. Finally, we're starting to see maybe some consolidation up here. So I'm not trying to call a top or a bottom at this point. I'm just waiting to see what price action is going to tell us. Just from a logical standpoint, after 9 weeks of a rally, just makes sense to be taking profits off. See what the next move is, a rotation, if you will. What is the next move? Is it going to be into financials? Financials have been looking okay. XLF. Okay, this is Bollinger Bands is trying to open up. Some of the retailers are showing signs like Walmart, Costco, TJ Maxx, breaking out. Ross stores. I mean, it's summertime. Ross stores, TJ Maxx, they should get business, right? Walmart, I have Walmart December. What do I have? I want to say 110, 120. Let's see, Walmart. 120, 130. Okay, 120, 130. Okay, so we're at 120 right now. 130 is a move up to the 50-day, 200-day held. So rotation into some of these names makes sense. And we've got stochastics, MACD, RSI all turning from oversold. It's exactly what you want if you want to think about a bullish trade. You look at the 60-minute time frame. You're above the 20 MA 60 minutes. So this is pretty good. Although it's just gotten started, day 3, we have an immediate trailing stop now at 119. It's only $1 lower in the 10 EMA, which is climbing. 10 EMA on the 60-minute time frame. So if we were to drop below this level, we'd start thinking, okay, maybe this is over with. I doubt it, but if we did take out 118, definitely. $2 stop, can we get $4 upside? Absolutely. Look how much upside we could see here just to get back to the gap. So $2 out. If you started right here, right now, which I don't recommend, a $2 stop, a $4 upside, definitely if we got to 125, 126. Okay, $4, at least $4 to $5. So you got 2 to 1. I don't recommend buying right here now because we were buying Friday into Monday. When did we buy Microsoft? When did we buy Walmart? View trades. That one, no. View trades. The 3rd. Okay. So that was Wednesday. All right. Wednesday we bought on the 3rd right here on that first candle. That's right. The first candle, as we started to rise up, that started to hit the 20 EMA on the 60-minute time frame. We started to get long. Walmart closed at the high, gapped up yesterday, pulled back to the 20 EMA. 10 EMA, and now we're bouncing again. So it looks like that's going to follow through. So there's rotation into some of these consumer staple related retailers. TJ Maxx as well. TJ Maxx. Summertime, people buy lots of, swimwear and different things. They get very active. TJ Maxx, home goods. There's not a symbol for home goods, right? Home goods? No, home goods. Synchrony Financial, their credit cards are tied to Synchrony Financial. That's not moving much. Some of these credit card companies pull back. SoFi pulled back into the base. Wells Fargo, that's climbing again. Wells Fargo, all right. So it's respecting the 10 EMA, moving higher. Wells Fargo, not too much further to get to the 200-day. That's probably Monday. We'll see that on Monday. Morgan Stanley and Goldman Sachs, those look like they could come back a couple of days. The biotechs like Amgen, those are doing okay. Amgen. Nice breakout. Bollinger Bands opening up. RSI rising. MACD stochastics turning up. Volume increasing. 60-minute trending. I would not buy it way up here. I'd wait for it to pull back a little bit, maybe to 350, or if the 10 EMA catches up and bounces. That's where I would buy. Already looks like it's starting to bounce right now. Looks like it's starting to bounce right now. Amgen, Biogen. Biogen pulling back. Okay. Exelon, EXC, Exelon. Conventional electricity. That's probably going to make a new high. 50 days overhead. Okay. I wouldn't recommend buying it at this particular moment as it's at the high of the day. It already gave you a dip earlier. A couple of dips. Pretty strong. EXC. Okay, S&P looks like it wants to keep moving a bit higher. All right, Apple's turning up. Apple, Doji.
How will demographics redefine the future?
What is the secret to facing off against the Trump administration?
At Bloomberg Invest Hong Kong, Bloomberg journalists ask the questions shaping
Okay, SPY.
and markets.
Semiconductor starting to show signs. A little bit more short covering. Now, if I was looking for a bounce on a Friday after pulling back to the 21-day, after 10 weeks up, 9 weeks up, if I were looking for a bounce right now, I'd be looking for volume to really pick up dramatically and for price action to move more aggressively. This isn't doing anything. This is just sitting here. So my guess is this is just short covering. Micron, pretty big drop. Oracle, software, Oracle. Okay, so continuing on with the idea that some of these stocks are going to rotate in like consumer staples, XLP. Okay, XLP. Okay, RSI rising, XLP. Price above the 50. Volume tapering off a little bit, but MACD and stochastics are turning from oversold. So this has probably got a couple of days of upside in it. What are some of the big names in XLP? Archer, Daniel Midland, ConAgra, Colgate, Clorox, Coca-Cola. All right, all these look good. Keurig, Dr. Pepper, KDP. Pilgrim's Pride, we saw that one moving yesterday. Pilgrim's Pride, still below the 50-day, but this is a consumer staples, food retailer, food supplier. You've got Kroger, Kroger, that's bouncing. Kraft Heinz, KHC, Kraft Heinz. McDonald's, I guess you could call it consumer staple, right? Double bottom, consumer staple. Can you get 50% out of McDonald's? I would think that would be okay. What's the what do we got going on here? SOXS, Broadcom, these are down. All right, so these are moving lower. That's why it's on the list. Apple starting to turn up. Apple. You can see the relative volume hasn't moved much. Okay. Looking at Apple, coming off the low. Apple.
And also get ready for heightened security presence and some concerns. So we're going to tackle that part of the event with Dan Arnold. He's Senior Vice President of National Operations at the security firm Proto Security. Our own Vanessa Perdomo is going to be
Intel turning.
of course, co-host of the Business of Sports.
All right, it's a slow move. Slow move. Apple.
First up, though, checking the day's trade and top business story. Charlie Pellet holding on the floor in New York. Hey, Charlie.
Indeed, looking at a down day, Tim and Carol, with the Dow, the S&P, Nasdaq very much in the red. Going to get right to the numbers here because we got some fast-moving markets. Keep it locked in to Bloomberg to find out how things shake out ahead of the close, ahead of the weekend here.
All right, Apple. Apple. I had some 315, 320s. I took those off in the morning session earlier. I still have Apple calls that I'd like to see appreciate with the market being down. You can see Doji on the daily. Tight price action compared to Tuesday. Apple. I'm going to watch Apple for a second.
NVIDIA down 4.9%, Broadcom down 6%, and Advanced Micro Devices down 8.8%. The stocks, as Tim mentioned, the Philadelphia Semiconductor Stock Index down 7.5%. All of this with the VIX now at 18, a 10-year 4.54%, a 2-year 4.16%, and the 30-year 5.00%. Gold down 137 the ounce, 43.37. That is a drop now of 3.1%. West Texas Intermediate crude 90 even a barrel. It is down by 3.3%. Brent 92.95. Global benchmark down by 2.2%. Interesting day for Bitcoin. Was trading below $60,000. Bitcoin now at 60,781 for Bitcoin. That is a drop right now of 4.4%. One bright spot, Dow Transports. They are advancing. Dow Transports up today by 1.3%. Being led higher by FedEx Freight, Union Pacific, and Northern Southern. Chicago Bears planning to leave Illinois. They're heading to Indiana. After over 100 years, team intends to build a new stadium in Hammond, Indiana. The exact site, though, yet to be selected. I'm Charlie Carrington. That is a Bloomberg Business Flash.
Great, thanks for that update, Charlie. Do appreciate it. Just a quick correction. I was talking about the Sox earlier, Carol. I was saying it's having its worst day. It's actually having its worst day, just going back a couple of weeks. I was thinking of Broncos, which is having its worst 2-day stretch ever.
Yeah.
Shares are down about 20% in the last 2 days.
Well, it's kind of hard to get track.
Okay, well, no.
These names are on the move, and they've definitely been some outperformers. But for Broadcom, it's certainly a very different trend over the last couple of days. All right, as you know, folks, as Charlie just mentioned, we are seeing stocks and bonds. They are falling after that Solomon Johns report. And it really added to speculation that the Fed's next move would be a hike in interest rates. I got to say, we have had guests, and we've talked about whether or not the markets are underestimating the possibility of a rate hike later this year.
Yeah.
Just call that.
Okay. Kudos. Congratulations to you and to our guests. I won't take any credit for this.
I don't know. It's Friday. I'm tired of making some credit. Hey, as for the numbers, U.S. job growth, topping all forecasts in the month of May. The unemployment rate held steady at 4.3%, offering the clearest sign yet that the labor market here in the United States may be breaking out of a long period of lackluster hiring.
President Trump's chief economic advisor, Kevin Hassett, director of the U.S. National Economic Council, joined Bloomberg earlier today on the U.S.
We're getting positive jobs numbers because we've got high wage growth and native-born Americans are rushing into the labor market in droves. And so that negative story is gone. And finally, I got to say, we really love
SPY rolling over.
data. And we have this thing that I like to look at, which is the probability distribution of all the forecasts for the jobs number before it comes out. And when I looked at it after I got these numbers, I saw that the very, very top person was low by about 40,000 jobs, which shows that the Trump economy is surprising Wall Street analysts over and over again. They need to maybe think about getting the supply side of their model fixed.
All right, that, of course, is Kevin Hassett, Director of the U.S. National Economic Council, earlier on Bloomberg. Let's get more to our roundtable. Thanks to our roundtable, I should say, on jobs rates and the Federal Reserve. With us back home on the East Coast is Michael McKee, Bloomberg TV and Radio.
Hedge flows still down here at the low. Hedge flows still at the low today.
Interest rate strategist. Mike, of course, I'm set back in our Bloomberg New York headquarters. Ira out there at our Bloomberg Princeton Bureau. Hey, Mike, gotta set it up for you.
Let's see what the future looks like into next Friday.
Yeah, and then some. Walk us through the data, what it says more broadly about the U.S. labor market.
Okay, notice we're starting to see a lot more red down below. Okay, below 7,300. We got this pocket of positive gamma, but we're trading down into that now. Down near the, if we start to lose this level next week, you can see the days of the week. Okay, we start to lose this level, we get a lot more bearish looking. The positive gamma is overhead. We're starting to lose it. I would consider hedges, SPX, SPY. If at this point, VIX has moved a bit, so maybe SPY put spreads or put flies for hedges and VIX calls.
We're going to get to more of Kevin Hassett's comments that he made to Bloomberg earlier, Mike. I want to ask you something about that in just a few minutes. That's a little bit of a deep tease. And we're going to talk rates, too, with you, Ira. But before we talk rates, because we got a good bit of time with both of you, what stuck out, Ira, for you with today's report?
Yeah, well, one of the things that's, firstly, is that there's really only two sectors that really participated. And like Mike said, one of those sectors was leisure and hospitality. And we don't know, was some of that pre-hiring hoping that the World Cup is going to bring a lot of leisure and hospitality jobs to certain areas of the country? We'll get that when we see some of the detailed data at the state level. So that'll be pretty interesting to see if that's actually what's going on, or if it's a broader, rehiring for leisure and hospitality seasonally. The other thing that stood out to me was the fact that wages were still okay, right? One of my fears has been that, okay, we might be hiring more people in the healthcare sector, but maybe we're paying them less. So that just incentivizing companies to be able to hire more people. But you didn't quite see that. So the wage data was okay.
Hey, Mike, I promise we get to some of Director Kevin Hassett's comments earlier. Something stuck out to me from that clip that we played. He said, native-born Americans are rushing into the labor market. Is there data that shows that that's who are getting jobs right now and not immigrants?
No, there's not data like that. There is data on who holds jobs, the overall number of people who are foreign-born and the overall number of people who are native-born here in the U.S. But it's not a count month to month where they add up the number of people who have recently moved into those jobs. It's just a total, and one side balances the other. They have to divide the total number of jobs by that. So just mechanically, if one goes up, the other goes down. So we don't see any real evidence one way or another that native-born Americans are rushing into jobs that foreigners used to hold. What we do see is that the labor force has fallen by quite a bit. This was the first month in about 6 where the labor force actually grew, but only by 83,000. So we are seeing the impact of the immigration policies, but it's not something that suggests that we're seeing an awful lot of native-born Americans crowding out immigrants.
Is that narrative, though, Mike, the idea of native-born Americans getting jobs? Is that, I would imagine, and look, I think everything's political in this day and age, even numbers that we get in the commentary around numbers from officials, but it just seems like that to me is a politically charged statement, and I'm just wondering, as somebody who looks at the economics of this, what you make of that narrative that's emerging.
Well, there are two ways to look at it. One is an economic way of looking at it, which is that we need fewer jobs to keep the unemployment rate stable, and that's one reason it remains so low, because we don't have very many people coming into the labor force right now. And to the extent that there are being jobs created, that creates more demand for workers. The other side of it, though, is the political side. And although, as Ira mentioned, we didn't see a collapse in wages, the year-over-year annual rate of average hourly earnings fell to 3.4%. That's a four-year low. And that suggests that people's incomes are not keeping up.
Markets are not moving much. I'm just sitting here watching the markets. Lack of movement. All right, S&P looks like it's going to roll over again. Again, we got VWAP overhead, a bearish bias for today. We're below the 74.90 pivot. So that becomes more negative. Below 74.90.
But I'm just saying, it's on everybody's mind. Ira, you got to come back in, because I want to talk about what traders are expecting in terms of U.S. rates. Kevin Hassett, again, President's chief economic advisor, saying that investors are incorrect in interpreting the strong May U.S. jobs report, suggesting that Fed will have to raise interest rates this year. He says, I think that's terribly wrong. And he says, what you need to do is look at the impact of the oil price shocks on core inflation. The history of it is that they are temporary. They don't lead to lasting inflation. Yeah, we thought it was temporary back in February and March, but here we are in June, and we're still talking about higher energy prices. Is Hassett wrong on this?
Well, the market certainly thinks he is, and when you look at what's gone on with the front end of the yield curve, with 2-year notes up, as well as other short-term interest rates, the market is now pricing for an interest rate hike by the end of this year. I don't necessarily think that it will occur, because I think what the market's really pricing here is, let's just call it round numbers, basically a 50% chance that they might hike by 50 basis points, and a 50% chance they leave things unchanged. So the average of that, the weighted average of that, is 25 basis points. And I think that's where the market kind of is right now. And talking to investors after this call, there's a number who say, yeah, things are strong now, but look, it's low wage sectors, which is going into what Mike was just talking about with wages not growing very quickly. The jobs are in lower wage sector, as opposed to technology or financial services, which over the last year both have seen pretty big job losses. But the people are thinking that, hey, maybe the Fed will have to hike, because if the war is like low intensity and prolonged, and we continue to see gas prices over $4 at the pump, that is going to have an effect on people's expectations for inflation, and that's why the Fed would ultimately hike.
Ira and Mike, you both are super smart and always reminding us this is 1 month's report. We also get reads on inflation next week, CPI and PPI, and then we're coming up against the first Fed meeting that will be overseen by the new chair, Kevin Warsh. Ira, let me come back to you, though. You do remind us, 1 month's report, there's a lot that can still happen over the remaining, 6 or so, or 5.5, 6 months here of 2026. That's important to keep in mind. The narrative can change again.
Yeah, I mean, I think it can change again. And when you look at what the inflation swap market is pricing, they're expecting this next CPI report to be the high. So the market is pricing around 4.3% for this month, but then under 4% going forward on a year-on-year basis. So that means that the market is still anticipating somewhat lower inflation on a going forward basis, and that has to be driven by energy. And part of that is kind of very technical, because the oil futures curve is still backward sloping, right? So the market is still thinking that, hey, oil and gas prices are going to be lower in 2 or 3 months than they are right now.
Hey, Mike, come on in on it. Same thing for you. I mean, there's a lot that's going to happen still potentially over the next 5 to 6 months. If I look back at the first 5 to 6 months of this year, there's a lot of things that were not on my expectation list. A good reminder, and take us to the first Fed meeting of Kevin Warsh. There's nothing he can do but leave rates alone. Is that fair to say as well?
That's fair to say. And I would just add, what I have always said is, you can invest in Fed funds futures if you want, and they go up, they go down, you make money off of the movement, but they don't tell you anything about what's going to happen until you get maybe a day or two out of a Fed meeting because everything keeps happening and we get different economic data and it changes the market's mind about what they think the Fed will do. Now, as to Kevin Warsh, he's coming into a difficult situation because all of the economic data now is pointing in away from the direction of rate cuts. The job market that is strong like this is suggesting that there's not a problem with the overall economy that needs to be solved by lower interest rates. And higher inflation, in theory, if it starts broadening out beyond energy, would call for a rate increase. We had Beth Hammack, the Cleveland Fed president today, put out a statement that said, great news about the jobs numbers, but if we don't see inflation come down, we're going to have to act soon. Now, she's one of the more hawkish people, but you do see this idea that we're maybe looking at interest rate increases starting to gain some power, some attention in the markets and among Fed people. So Hassett comes into his first meeting. If he wanted to cut rates, he'd be in the minority. And so I assume that he will not vote for rate cut and dissent at his first meeting. And so basically what we'll have is the Fed takes the forward guidance about rate cuts out of the statement and not much else. And then it'll all be about Kevin Hassett. It'll be like a movie review. How did he do in his role as Fed chair? Did he defend the institution? Did he stick up for the other people on the Fed? All that sort of thing, rather than the market trying to decipher what it means for interest rates going forward.
I'm already getting my popcorn ready for that first Fed meeting. I can't wait with Kevin Warsh. Having said that, there's this narrative going on in terms of the U.S. economy, and then there's the AI Fed, which we spent a lot of time talking about at Bloomberg Technology yesterday, our summit, our annual summit. We've got a headline from the FT, Meta raising tens of $billions in a new share sale. So
all right, S&P just dropping off here.
Assume that we are now seeing these big hyperscalers, Tim, these big tech companies, they've been tapping the debt markets to fund the expenditures when it comes to building out the AI networks. Now they're also doing equity plays.
You're actually seeing Meta shares take a hit right now, just falling substantially down 9.5% as a result. Once again, that headline crossing the Bloomberg terminal that Meta is raising tens of billions of dollars in a new share sale reminds me of
In Mike, just 30 seconds before we go, AI productivity.
Meta just dropped off.
Addressed it yesterday. She's, looking at it. 20 seconds here. Is that a big deal yet in terms of the labor force? Real quickly.
No, as she said, it's not yet. You really don't see a lot of evidence of it in the data. It's the main reason that Warsh argues you can cut rates going forward, because productivity will go up, but we don't see it yet.
All right, Michael McKee, our Jersey, you guys rock. Hey, coming up next, folks, we move from the economy to the markets and all of this. John Flood of Goldman Sachs joins Tim Mead right here on Bloomberg Business Week Daily.
SPY continues to move a bit lower. $7,400. Not a whole lot to do today. 7,400. The indices, 7,400. There was a level there, right? 7,000, 7,400. It was a pretty big level at 7,400. I would think we have bounced at 7,400. These intermediate levels that we looked at today, as we continue to drift lower below 7,500, this 7,400 level, we get there, look for a SPY to bounce at 740, 7,400 on the S&P. If we don't bounce there, then we have a pretty decent move to the downside in store. Make sure you're hedged, whether you're using SPY put spreads at this point or SPY butterflies, or you might buy something like, say, the 740, sell two of the 730, and buy one of the 720s for a butterfly. So you have one on each side, the wings, and then two in the middle, you're short. You're looking for a drift lower, 740, 730, 720, something like that. Or you could do put spreads, or you could do SPXS. Okay, SPXS. Or you could do nothing. Like my son is just waiting for a pullback so that he can get long into the summer. Okay, notice that whenever the SPXS turns up, it only lasts a few days. It only lasts for a few days before it resumes the trend down. SPX. Okay, so we could come down here to 73.33. 7,400 is a nice round number. Okay. Let's look at hedge flows. Hedge flows, 7,400. It's a 99 percentile, 7,400 now. They keep shifting those lower from this morning. 75, what was it, 75.40, 75.50, whatever. Then 74, 75, and then 7,400 now. Okay, if we continue to move lower, S&P. The bias is down. Trying to get cute with a bounce. You can see these little bounces were very mediocre. The volume didn't pick up until the selling came in. The volume picked up dramatically then. First big down day in a while. After 9 weeks up, we're down more than 1% now. Okay, so we're down more than 2%. So we gained 20%. We gained 20% over the last 10 weeks. On week 10, we are pulling back 2%. Been a pretty decent run. Been a pretty good run this last 10 weeks.
All of this as losses intensify. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down by 8.5%, and the VIX closing.
Okay, let's look at the New York Stock Exchange again. NYSE. NYSE doesn't look as bad, right? Still above its 10 EMA weekly. Doji inside week. Trying to hold the lows here. SPY. At the low of the day, SPY.
Chicago Bears planning to leave Illinois and head to Indiana. After over 100 years, the team intends to build a new stadium in Hammond, Indiana, with the exact site yet to be selected. But a source tells ESPN it is not a done deal yet, and Illinois can, quote, still get back in the race. Recapping S&P down 150.
They got to get rid of that mayor first. Anybody live in Chicago?
Once again, your hosts, Tim Stenevik and Carol Messer.
Wait, did you forget?
The Lake Drive up near Northwestern University. That's a nice area. Nice homes.
Well, you are always glorious. Our lovely, lovely Charlie Pullipack at Bloomberg headquarters in New York City keeps us honest. Hey, as you know, trading news, a lot of things keep us honest, and all bullish things must come to an end. We're certainly seeing that in the trade today. Tim, or at least a little bit of a breather.
Yeah, as we've been reporting, as you just heard from Charlie, Wall Street's historic weekly run poised to come to a halt. Stocks and bonds falling after that solid jobs report, adding to speculation that the Fed's next interest rate move could actually be.
All right, so let's get into the trade now that we know what the backdrop is right now. Natalia Kimijevic is with us, Bloomberg News equities reporter. She's back at home base at Bloomberg headquarters in New York City, along with John Flood, he's Goldman Sachs partner and head of America's Equities Execution Services, as we said, both back in New York City.
Hey, John, Natalia, good to have you both with us. John, I just want to get your thoughts on where we are in maybe a cycle here. And I'm I'm struck by the news of Meta Platform shares down right now. The company made a big equity raise after that blockbuster Google deal we got earlier this week, $85 billion in a share sale. John, I know I'm not going to get you to comment on an individual company, but comment on what it means to you when you have huge mega cap tech companies doing share sales or possibly doing share sales like this. What signal does it tell you?
Signal tells me that it's a very healthy market right now in terms of the supply and demand that's out there in the marketplace. And I think that we've seen, I speak with institutions at Goldman Sachs, institutional investors, and there's never been more robust demand for these offerings. And my expectation is that trend continues.
Okay, futures dropping more. Futures dropping more. Here goes the SPY. Headed towards 740.
Low tick alert minus 800.
Low tick alert.
Just a case of FOMO and people just chasing with so much money, so much momentum in terms of the AI spend and build, debt side, equity, tapping markets. We heard from the Bloomberg Technology folks yesterday, a big conference, lots of major players in the AI space saying demand is incredible. They've just the momentum. How do we know, though, that it's not just kind of a major FOMO trade and that there's going to be some kind of reality or reckoning coming in the near future?
Because from the institutional investor perspective, we actually still see a lot of discipline out there. There's still, I think, a wall of worry left to climb higher in this market. What we look at is our prime brokerage data. And one of the most important pieces out there right now, I think, is gross exposure. So essentially, hedge funds are still long a lot of their single stocks, AI, tech exposed names. They're also more short macro products against these longs than they ever have been in the history of our data.
Futures, lots of negative signals.
I want to hold my longs, but I want to make sure I'm hedged.
Okay, I got a minus 563 Grover. I don't know if Grover's listening. Minus 563. What's your max that you usually see?
We hear lots of conversations about some market participants, taking products off the table because they're prepping for this huge wave of big tech IPOs. So what is your take, and what does Goldman also think? Is it a buying opportunity? The time to buy the dip?
I think there have been few and far dips to buy so far this year. So yes, when you have a 2% sell-off in the S&P 500, it has paid to buy those dips, and I think it continued, and I think that will continue. I think today you have some profit taking into the weekend ahead of what is likely going to be continued supply, as evidenced by the news that just broke. But really, we had a strong jobs print this morning, and I would say, what are the fears that people continue to list as top concerns? It's inflation, it's Iran, it's private credit. And this morning's jobs print, has rates moving higher, and people now think that we will get a rate hike and by year end. So I think it's healthy. I do think it's a buying opportunity, and I think that there is still a significant amount of worry, cash on the sideline, short exposure out there for the market to climb higher.
Got it. I also wanted to ask you about one indicator tracked by Goldman Sachs. It basically tracks all positioning across hedge funds, long-only investors, retail funds. It is interesting because the stock market is at all-time high. At the same time, positioning is still at a neutral level, which means that there is more room to run. So first of all, please tell me, why is that? Why positioning is still so low, and what it means for the stock market direction?
It's likely a tailwind, and that's exactly what we said. Despite us being close to all-time highs at the index level, from an institutional investor perspective, there is still concern out there. We see that through gross exposure being at all-time high, expressed through a lot of short hedges and macro product, and from mutual fund cash balances. If you look at notional dollars that remain on the sidelines for mutual funds, we are still at we're still at a long-term average. It's not like it's not an outlier. So when you look at hedge fund exposure, you look at mutual fund cash, there's still plenty of skepticism left out there. That's why our sentiment indicator is showing healthy positioning, not overextended positioning.
John, that makes me happy that there's some negative sentiment out there. I get very nervous. We're just at this tech event. We talked a lot about AI. Haktan, I'm Broadcom was here. I mean, all of the major players, and there was a lot of enthusiasm. I think it's safe to say, with some cautiousness, but a lot of enthusiasm. Having said that, because of what you were seeing, particularly among institutional investors and hedge funds, do you think the retail investor and markets overall are not really thinking that we could see some kind of pullback or mini correction as a result?
I think that there is a slight disconnect between the retail investor right now and the institutional investor. That being said, I think that retail will continue to buy the equity market as we have some mega cap IPOs likely in the pipeline between now and year end. We'll see how that plays out. But these are high profile companies that typically grab the attention of retail. And once retail starts buying, they don't really stop unless there is true job loss. Our data shows that retail bid disappears when there is job loss. And the last time that we saw retail as a net seller of the US equity market for more than a consecutive week was back in March of 2020 during the depths of COVID. So really, like, you have to watch employment, you have to watch jobs, and until we start to see job destruction, that retail bid will likely remain a healthy constant in the marketplace.
Well, we certainly got a positive print today in that arena. John, I'm wondering though, what would give you pause apart from job losses? What would give you pause with an equity rally such as this?
If we started to get disappointed in earnings, and frankly, we continue to see companies clear these hurdles. Last quarter, earnings were solid. We are optimistic about next quarter. If you start to see earnings holistically across the S&P 500 disappoint, that would be highly concerning to me. We haven't seen any evidence of that. We aren't bracing for any evidence of that in the near term.
I have to ask you, John, about systematic funds because as we remember in March, this market was really driven by different factors. What does your data tell us right now about how positioning looks like across CTAs, well-controlled funds, and what does it mean again for the stock market direction?
Systematic funds have had a solid year of performance, and right now they are relatively full in terms of S&P 500 exposure. This is an incredibly momentum-driven community, and right now, as the market moves higher, they will continue to add. That being said, the highest velocity of buying is behind us. If we do take a turn lower, have several more days of what we're going through today, you will see that CTA community start to sell the equity market. That being said, the systematic positioning in the marketplace is very small relative to retail, relative to corporates, relative to hedge funds, asset managers, sovereign wealth funds. So that would be one noteworthy piece of supply. We think all the other sleeves of demand outweigh that in a move lower.
I agree, but at the same time, when they sell, you really feel it because they do it so quickly.
Correct.
So again, regarding today's sell-off, we see that the S&P 500 basically is now trading P/E ratio closer to long-term average. So do you feel that the market right now is fairly priced in ahead of the next earnings season?
We don't think it's overly expensive. We get this question in terms of, are we optimistic on earnings? Yes. We get this question within memory space all the time. And we still think memory, one of the highest momentum sleeves of the market right now, is still relatively fairly priced. And we see that with our institutional clients right now. There's a ton of focus in Korea, in Taiwan, outside of the U.S. And there's still real value to find, even though some of these markets appear to have gone up and to the right. There's still room to run because the fundamentals back it.
Mm-hmm. Hey, John, oh gosh, go ahead, Natasha.
No, please go ahead, Carol.
Hey, well, I just got to ask, John, we just got about 30, 40 seconds. We obviously want like an hour with you because this is all incredible. The IPO, Cerebras IPO, that was the biggest. We're getting ready for the SpaceX IPO, Anthropic IPO. Just watching. I know you can't talk specifics, but does any of this smell a little bit like a top of the market, or does it all feel justified and fundamentally justified? And again, just got about 30 seconds.
As of right now, we still think that fundamentals justify what we're seeing go on in the equity market. So yes, we are constructive on our desk. We think S&P 500. We think these dips are buying opportunities, and we think that there's a clear path to 8,000 and beyond this year.
All right, John Flood, thank you so much. Goldman Sachs partner, head of America's Equities Execution Services. I hope you will grace us with coming back again and joining us. Natalia Kanijevich, of course, too. And really appreciate it. She is Bloomberg News Equities reporter back there at Bloomberg headquarters. Coming up next, we talk FIFA and security, what you need to know.
Netflix turning back up. Shorts covering. Netflix is down so much. Let's see, what's Walmart doing? Walmart, I want to add to Walmart. Walmart at the highs of the day. Walmart still gaining. Okay, Walmart looks good.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, and we have got the Dow, the S&P, Nasdaq very much in the red. Do want to begin with spot gold, though. We've got gold slumping now 3.5%. Ounce of the precious metal at 43.20. But the key takeaway here: spot gold has wiped out this year's gains as jobs, fuel, Fed hike bets. Right now, spot gold, as I mentioned, down 3.5%, 43.20 the ounce. Year to date, as we check the column there, it is up by 0.01%. All of this, as Wall Street's historic weekly run comes to a halt, stocks are being hit hard today by a tech sell-off. Bottom line here, we got Nasdaq down 1,010 points, down 3.8%. The Nasdaq 100 index down more than 1,200 points. On that index, a sell-off now of 4.2%, with the stocks now down by 9.4%. Putting it all in context, the S&P is down 169, drop there of 2.3%. Dow Industrials had a record yesterday, now down by almost 500 points, a decline there of 1.
All right. Well, it looks like one more shot to the lows, maybe.
The 10-year, 4.54%. The 2-year, 4.16%. The 30-year, 5.0%. Gold bears repeating down 3.5%, wiping out the year-to-date gains. West Texas Intermediate crude, $90.57 a barrel, down 2.6%. Barrel of Brent, the global benchmark, $93.13, down by 2%. And Bitcoin just above $60,000. Indeed, did see a brief print below 60,000 earlier today. Bitcoin right now is now down by 5.4%. Lululemon Athletica shares now at their lowest level in 8 years after the upscale yoga wear company cut its annual forecast. Lululemon down now by 8.4%. Saks has won approval to exit bankruptcy after reorganizing. And sports, the Chicago Bears planning to leave Illinois and head to Indiana after over 100 years. Team intends to build a new stadium in Hammond, Indiana. The exact site yet to be selected. Meanwhile, though, a source tells ESPN it is not a done deal, and Illinois can still get back in the race. Recapping, S&P 500 index down 170, drop there of 2.2%. Spot gold wipes out its gain for the year. Tim and Carol, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Well, the FIFA 2026 World Cup kicking off next week across Canada.
Did you get your tickets?
I did not. I don't know that I can afford them.
I know somebody who's going to 5 games.
Somebody.
I'm not joking. A friend of mine is going to 5 games. He's been saving up.
Did he mortgage his house?
He said, I remember I was 7 years old the last time this was in the U.S. in North America. I am going to go. He's going to 4 games that he paid for, and 1 for work that a client is taking him to.
I get it. If you're
all
really
over
into
Seattle, L.A., New York, all over the country.
Also going to games are, of course, our team here at Bloomberg who covers sports. Bloomberg's Vanessa Perdomo Maglione will be at some of the games as well. And she's been reporting out on what to expect, some of the controversy, because it's not inexpensive to go see some of these games. And there's a lot of issues at play, including security. So Vanessa joins us. Vanessa, of course, she is Bloomberg News sports business reporter and host of the Bloomberg Business and Sports podcast back at Bloomberg headquarters in New York City. Also with us is Dan Arnold. He's Senior Vice President of National Operations at the managed security services provider Proto Security. He joins us from Omaha, Nebraska. Dan, great to have you here with Tim, Vanessa, and myself. Security is a big issue.
Okay.
You've been in the industry for like a quarter of a century.
Yeah, trying to buy the bounce today. I kept thinking about it, but then gave myself a little time to think about it more. Days like today, where we've been up for 10 weeks, on the 10th week we reverse. It makes so much sense, right? In a market that doesn't usually listen to logic. Futures continue to move a bit lower now.
This is like 11 sites across the country, right? In the United States alone, it's 11 simultaneous Super Bowls. And the challenge of security for those environments at 11 at one time is a major strain on public and private, municipal and federal security partnerships.
Dan, I think the interesting thing here is how differently each city is handling it. We've had a lot of cities come out against the funding that wasn't released right away. But how are different cities, in Kansas City, how is it being handled differently than New York? How are each city and the size of those cities go into play here?
Yeah, the funding certainly is controversial and some challenge, but I know what the local folks are doing, and you get private security companies and the public law enforcement, the municipal leadership. I know well over a year, right? There's been very detailed planning, and those groups are very tight and very coordinated. And while they always will want more funds, setting up communication, understanding where forward operating will be,
Capitulation.
technology in and around the venues, different routes, different patrols. How are we going to get people safely in and out of these environments? So the coordination has been very strong, and it's been very exciting to watch these private-public partnerships.
And just so we know, because of how differently everyone's handling it, is it up to each city to decide how much they want to invest into security? Every city, like we said, it's different. Getting to MetLife is completely different, and having to deal with potentially a Knicks NBA Finals overlap there is going to cost a little bit more if you have a little bit more people. So how are the budgets decided there, and how do they spread out this money?
All right, so we continue to move lower now. All right, capitulation is going to set in pretty soon. You'll hear extreme high tick, extreme low tick.
So these venues have a lot of expertise and experience and understand the funding it does take to provide safety and security for these events.
Low tick alert minus 800.
It's not one plan fits all, and I think that's what's been very good about the local jurisdictions and the local venues to say routes like you mentioned to get to MetLife or get to Arrowhead, wildly different.
All right, looking for extreme low tick. If you hear it, that's going to be capitulation. Everything pushing lower.
Safe, solid security plans, in all of these local markets that really fit the local.
Dan, I don't want to give any secret sauce here, but in an age of where we're seeing drones deployed in ways that were kind of unthinkable in the last few years, it does seem like sort of airborne threats are potentially some of the biggest challenges around the country. How do you think about that and sort of drone technology?
Yeah, I think with drone technology, with the advancements of some of the AI with camera systems and operations in the security space, it has become much cheaper, less expensive to
All right.
chaos or cause some frustration.
We got an hour, and 11 minutes to go, and we're still drifting lower.
Cool videos and something for socials, but they don't understand what disruption it causes. And so it is certainly part of the plans, right? There is counterintelligence teams, there are teams with technology trying to monitor, there are flight restrictions around these facilities, and all those are in place to try to prevent, but it doesn't mean it's 100%. And so the teams have response plans and have been working hard understanding that some of these technologies and the cost of these technologies have made it a little bit easier to cause those disruptions.
Dan, one thing I want to ask you about that I've been hearing about because of the inflated prices on some of the transportation is that some fans are going to try and find ways to walk to the stadiums. How do you plan for something like that?
Well, it certainly depends on the market, right? A little harder to probably walk to MetLife than it is some others, but you have major issues with all the just transport in general, right? With the public transportation routes, like you mentioned. But as we're talking about pedestrian traffic, the choke points and
Okay, we got a little bounce here.
Guide paths that you need to be able to do that safely and securely.
All right, somebody just took some shorts off. Took their shorts off.
They are working very hard to allow pedestrians and others to get to these facilities. It is not.
All right, what's VIX doing? VIX. VIX. There goes the VIX. Okay. VIX 22s are up quite a bit right now. Okay, the VIX 22s, I just took some off. VIX calls, I just took some off. You recall I had the VIX June 22s, and then I guess about a week ago, I took the VIX 22s for July as well. The June's is the 17th. Yeah, Captain, thanks. I know it helps. I don't like broadcasting on dates like today because I just stay with my puts or stay with my positions. The July VIX 22s, those are doing well. I might even hit. I might actually go on the money next week. That's why I get redundant when I start talking about taking profits into strength up in here. Okay. Take profits into strength, reduce your risk, take profits into strength day after day after day. And we finally get the day like today, and it all pays off because now you got lots of cash. And I'm in no hurry to put the money to work. If we see like a 3 to 5% pullback, which wouldn't be too difficult at this point, it'd be a good time to start thinking about buying a little bit. We're not going to get the exact day it bounces. Maybe we do, but all right, there's your extreme low tick. Extreme low tick.
Certainly when it comes to the tech trade, really feeling the pain. But you're looking at a decline of about almost 4.4% on the NASDAQ 100. And you can see the momentum picking up as we get into this last hour of trading, down about 1.2% on the Dow Jones Industrial Average, and we're down about 2.5% on the S&P 500.
Yeah, I'm just looking at the NASDAQ 100. Even though we're down right now by more than 4%, it's still the only the worst day going back to April of this year, or excuse me, April of last year, Carol. And that was Liberation Day, April 4th, 2025. That's when the NASDAQ 100 fell by more than 6%. So the worst day in more than a year, but still only down to levels last seen since May 19th. So just a couple of weeks ago.
I just got to mention some headlines that are out there because we have been SpaceX crazy as we get ready for that IPO next week. And there was a headline that crossed SpaceX entering a $920 million a month cloud services pact with Google. Let that settle in. 920. We're talking about almost $1 billion a month. That's a lot of money.
We're going to be all over the SpaceX IPO next hour.
What's interesting is after the end of the year, so after December 31st, either company can end the deal on a 90 days notice. If the company can't deliver GPUs by September, Google can end the deal. I mean, this certainly mirrors what we've been hearing yesterday at Bloomberg Technology, the annual summit. All the voices involved in the world of technology. AI was obviously a dominant subject, but we kept hearing demand. Supply can't keep up with demand, and I just thought it was kind of interesting.
Well, let's talk about some stocks that are on the move this afternoon. I'm Jim Stanback along with Carol Nasser. Let's take a look at some stocks on the move today. With us is Bloomberg News Equities reporter Avalon Cornell with today's stock movers. Avalon, I'm guessing you have a few decliners today.
I sure do. We can go ahead and start off with Meta. That's probably the most frequently named right now. Meta Platforms is ticker Meta. definitely falling about 5.4%, most since April. And that's after the Financial Times reports that Meta is considering raising tens of billions of dollars in a stock offering to boost the tech company's AI infrastructure. Obviously, this is still in the early stages, and Meta has not yet hired banks to issue the stock, so it's not guaranteed that they will actually pursue this plan. But really interesting to see how big tech companies are really pursuing this AI situation. Alphabet actually at the start of the week also announcing plans for an $80 billion raise to fund its AI spending. And now potentially Meta may be following in their footsteps.
And I guess some would say, though, listen, they have so much cash on their balance sheet that they have the ability to do this equity raise, right? I mean, if they had to, they can certainly tap into the cash coffers. There's some of that at play, but nonetheless, the amount of these offerings that are being entered into, are pretty eye-opening. Let's go on to Lululemon. We've been talking about this name a lot in the last 24, 48 hours.
Yes, Lululemon dealt another blow today. That's ticker Lulu. Currently down about 8.2% to hit the lowest intraday level since 2018. And that's after the athleisure maker slashed its annual forecast amid weaker sales trends. The print led several analysts on the street to go ahead and downgrade the stock and also cut price targets. BNP Paribas writing that Lululemon's product launches just aren't working and that the comparative sales remain negative, which makes it tough to remain positive about the stock. Worth noting, though, that Lululemon will be bringing in a new CEO.
Low tick alert minus 800.
So it'll be interesting to see how she deals with this situation since it's looking like a pretty challenging setup.
She's got her work cut out for her in just a few months when she takes the helm of that company. Okay, you have Meta Platforms, you have Lulu, what else?
Oh boy, we got an hour to go. With an hour to go.
Most intraday since November, and that's after Reuters reports that several U.S. states are considering and preparing a lawsuit to block Paramount's acquisition of Warner Bros. While it does remain unclear which states would actually want to participate in this, it is worth noting that Reuters did have an interview earlier this week with California's Attorney General, and that person did say that his office would make a decision on whether they would pursue potential action soon.
All right.
Sorry, Carol, there were no gamers.
I have to say, that's exactly what I was listening out for. I'm like, is she going to give me a gainer?
Nope, the answer is no.
I know. It's a bunch of selling on Wall Street, and we're seeing it really around a lot of different sectors, tech though in particular. All right, Avalon, thank you so much. Really appreciate it. Bloomberg Stocks and News Equities reporter.
All right, we're gonna bounce, folks. All right, it's unpleasant at the moment,
Check out our conversation.
but we will bounce.
Episodes of Big Winners and Losers in the stock market. You can find it on Apple, Spotify, or anywhere.
Hey, if you're sticking with us on Bloomberg Business Week Daily on radio, on YouTube, on Bloomberg Originals, we got a great 2 hours coming up here from the West Coast. We're out here in San Francisco. It's perfect to be talking about tech and the way that tech is leading these markets lower. Tom Giles is going to be joining us in just a few minutes, fresh off some great interviews yesterday and Wednesday at the Bloomberg Tech Summit, including with the CEO of Cerebras and
Yeah, and Hot Tan and Broadcom. I mean, talk about a name that has certainly been in the news this week. What a timely interview. So looking forward to catching up with Tom. We're also going to talk a little bit about just the week that was. A very different direction we're wrapping up here on this Friday for the S&P 500. We had 9 weeks of consecutive gains, but it's going to be maybe a different week when we wrap up here. Hey, if you're watching on TV, as Tim mentioned, the close is coming away in just a moment. Tonight, continuing on Bloomberg Business Week Daily.
All right, still looking weak. We got plenty of time, an hour to go. Yikes, a whole hour.
Low tick alert minus 800.
President Trump is calling for incoming acting director of national intelligence Bill Pulte to further downsize the intelligence community, telling reporters the amount of employees has been way too high for way too long. ABC News White House correspondent Karen Tracker says he's comparing D&I to the Department of Education.
The president brought that up and compared it to that, saying this
this maybe shouldn't even be terminated. He wasn't specific about what his plans would be, but certainly indicating he wants to see Pulte go in there and shake things up and limit the size of this sprawling office right now that, of course, oversees spy agencies.
A federal appeals court in D.C. heard arguments today over President Trump's plans to build a new White House ballroom. ABC's Stephen Portnoy has more from Washington.
Much of the 2-hour appeals court proceeding focused on whether the National Trust for Historic Preservation has standing to sue over the ballroom project. A lawyer for the Justice Department put forward the administration's view that courts cannot stop the construction. In response to a hypothetical question posed by one of the 3 judges, the government's lawyer said if the president suddenly decided to bulldoze the Statue of Liberty, no one would have standing to sue once the damage has been done.
An appeals court in Colorado has overturned the convictions of 2 paramedics in the death of Elijah McClain. They were convicted in 2023 for a 2019 encounter where they were accused of giving McClain a fatal dose of ketamine in an effort to sedate him. But Dion Schaffner of advocacy group Epitome of Black Excellence and Partnership calling on elected officials to speak out.
This is not a time to be bashful. This is not a time to be political or politically correct. You don't get to count yourself out. We will be watching every single.
Oh, shut up with your politics, people. Jeez. Politics are so tiresome.
Sectors in the green, but technology really such a drag today.
Yeah, exactly right. This is, the markets were down overnight. I think the markets really pivoted or adjusted their tone yesterday after Broadcom sell-off. And Mike Prime was down and other tech names. And then after being down overnight, I think the jobs data that sparked a rise in interest rates really gave the downside a little extra push on the downside. But you're right. Really, as we get to an hour left in the trading day, 5 sectors of the S&P 500 are higher and 6 down. But within those 6, information technology, communication services, and consumer discretionary, those are the 3 biggest sectors. And those, you mentioned information technology now down 5.2% on the day. That is simply a move that the rest of the S&P can't overcome. Now, if you're looking for some good news,
Just looking for more downside, some capitulation. We already got one extreme low tick.
Retail here and talk about these earnings we got from Lululemon because Lulu has been under pressure and arguably rightly so all day long. They're down more than 8% right now. They I guess technically beat on the. But I can own it where I see earnings estimates going higher, and for bringing it back to Meta, I mean the numbers actually did go higher on the revenue line, but the operating margin numbers are going in the wrong direction, and then people are not going to spend on or they're not going to invest in companies where earnings are going down or at least stagnant.
Hey, Tom, what do you think of this news? Certainly in light of the Alphabet news earlier this week, is this a good sign or a worrisome one?
Scott, I think Meta's movement isn't surprising because Google had a lot of success raising $45 billion in a very short underwriting period. And I think it's a reminder that these AI companies are building basically, huge real estate infrastructures that aren't fully funded today. And that's why not only will SpaceX need to raise more money beyond its IPO and OpenAI and Anthropic and, of course, Meta and Google, but I do think they're showing a lot of promise in their investment today because there's been significant breakthrough. So I think investors are going to give them grace. But you're right. I think Stephanie's right. This is not Meta's sort of financial profile is changing. It's changing from a free cash harvesting from their prior businesses to one where they're building land that could end up being beachfront property.
What's this sell-off about today, Tom? Is it did Broadcom spook the market? Did they start this? Is it positioning ahead of SpaceX and the biggest IPO we've ever seen? Is it something else? What do you think?
Scott, I think a lot of this, for instance, memory stocks are down, but they're back to where they were 8 days ago. I think the market did have a parabolic lift in the last month. And now I think there's some sobering taking place because expectations are higher. But I also think that SpaceX, $75 billion is a lot to ask the public to fund. So I think it is a big lift in terms of how you're going to fund that purchase. And so I think now when the stocks wobbled a little bit, I think people are raising cash. I don't think that this is the start of a broader correction yet, but as you know, we do think that later this year there's going to be something that feels like a bear market. Today's not fun though.
But Steph put something out, tongue in cheek, obviously, I think, on social media a little while ago that said, "Did the Knicks wreck the Qs?" $10,000 just to get in the door at MSG on Monday night.
That's very funny.
Got to raise capital from somewhere to afford those tickets at the highest part of the Raptors over at MSG. But in all seriousness, like Michael Hartnett today, B of A, said the risks of a June swoon have been rising anyway, and that his bull bear indicator numbers continue to rise. The third week of sell signals. Mark Newton, who does technician work for
Looking at VIX.
over at Fundstrat, says it's
This is VIX.
from growth to value. Is that what's happening now? Are these the earliest stages of a violent shift?
Well, I think if you believe the economy is stronger than expected, which it is, and today's jobs report posted that, then you don't necessarily want to own long duration assets, which technology is, as interest rates rise, and interest rates have been rising. Now, I'd say interest rates are rising for the right reason, because growth is better than expected. But also with that comes a little bit more inflation. It is definitely a rotation. You can see it today. You saw it yesterday. I also think that there's opportunity, though, within tech. We'll get to that later. But what makes me bullish long term is that what I just said about Meta spending so much, Google spending so much, and the four big players spending almost $800 billion this year on AI CapEx, and it going to $1.6 trillion next year. That is great for the food chain. That is great for the data center makers and the data center companies that put some of the stuff inside the data centers, and then also the grid and power. And the backlogs we talked about, they're so amazing. So maybe we see a pullback. That's totally natural. I think you want to make your shopping list for sure. I just don't necessarily want to own in a broad way the big four that are spending so much.
Well, those big four, firms have been speculating, Tom, and maybe you alluded to it already. The idea that the source of funds for a SpaceX and whatever else is coming down the pike needs to be funded from somewhere. Now, there's a ton of money sitting in money markets, as John Waldron of Goldman Sachs pointed out on this very program some 48 or so hours ago. A lot of capital all over the world that wants a piece of these IPOs as well. Jeffries today says that the Mag 7 are the most likely source of funds as we look towards these big events. Do you buy that?
I do. One of the things that's happening is, the order book is being built for SpaceX. And as you know, institutions want to get good allocations, so they're going to put in large orders, bigger than what they expect to get, because I'm sure we'll have a 3 times or 10 times oversubscribed.
735. That's a nice round, odd number.
Want to raise some cash in case they do get a big allocation.
We see a lot of puts down here at 735.
And of course, there's $7 trillion in cash on the sidelines, so there still is a lot of firepower. But I think one of the things we have to keep in mind is that, as SpaceX gets held and people own it, and then they start to think about Elon Musk is telling them about the future of data centers and space and power, I think it's actually going to be very good for SpaceX stock and this whole AI trade. So I think in some ways, I think there's a mechanical selling today And it's not surprising, but I don't think that this is the start of a bigger correction yet.
I don't know. I mean, it sounds a little, frankly, contradictory from you, only in the sense that you've been predicting a big swoon in the market to begin with. So why are you reticent now to suggest that this might be it, initiated by parabolic moves that are reversing in a more violent way?
Yeah. Scott, I mean, part of it is when we looked at the largest IPOs in the U.S., the 10 largest since 1935, only AT&T Wireless marked the top, and every other big IPO was actually mid-cycle, meaning markets didn't sell off on that. I think the bigger test will be when the longer expirations happen, which in SpaceX's case are phased over the next 3 to 6 months, depending on how it accelerates. And then, later in the summer is when the market tests the new Fed, and the market has to deal with the shortages that are coming in petroleum products, et cetera. So I think that the cadence of news is still going to be good enough that, the next couple of weeks, market should be fine.
Yeah, NASDAQ's now down more than 4% to almost an 1,100 point decline. Semis, they are the epicenter of what's taking place within the tech universe today. Christina Partsinevelos joins us now. As you watch what's happening here, it says dramatic, they say escalator up, elevator down. So we'll see whether this is, the beginning of something bigger, but it's pretty jarring to see some of the declines anyway on a single day basis.
Yeah, the elevator down is, 2 straight days of down, specifically for chips. Broadcom earnings, stretch valuations, memory concerns, all just doing the damage. When we speak specifically about the SOX ETF, it closed Wednesday roughly 75% above its 200-day moving average. That's the most extended the index has been since the early 2000s. We're coming from a high point on that elevator. Then Broadcom delivered disappointing revenue guidance. The stock fell roughly 13% yesterday. You can see extending losses almost 8% today. Mizuho is saying they're not seeing, quote, meaningful buyers step into Broadcom just today. Maybe that'll change next week. AMD, TSMC, Intel, all lower. Supermicro among the worst performing components of the S&P 500 right now. And it's been a rough overnight tape in Asia as well, dragging down SK Hynix and Samsung memory makers. And that weakness combined with concerns that maybe NVIDIA may reduce certain memory content in its Vera Rubin chip, the latest iteration. It's weighing on Micron. Those are some of the reasons. And we just mentioned NVIDIA, not spared either. Over the past 3 months, the SOX ETF is up more than 60%. NVIDIA just up about 12% in that stretch. So it's the second worst performer in that particular ETF. Scott.
Christine, thank you very much. Man, I was just looking at, we're looking at the board. Show SK Hynix again. Because as, what Micron has been doing.
Andrew, let's see.
Korea has been doing there.
Yes, sir. 7380.
Morning in a pretty nasty looking place. I mean, the memory chip space is really where we've been focused over these last, feels like now 2 months of parabolic moves almost, if not every day, every other day. I'm wondering as people look at that, like, where are my buyers at, right? I've got one of them, not for memory, but chips in general. I've got one next to me, Broadcom, which seems to have started this, or at least made people think about something that they wanted to do in this space.
Yeah.
You bought more today.
I did, and I actually trimmed Marvell because it became a huge position, and I'm up 240% in the name, but I still own it.
Parabolic mover, craziness in the price action.
Yeah, 7380 is where it is now, and we're passing that.
I would say that Marvell really did deliver, and they exceeded expectations on guidance, and they could do $10 a share in earnings power by 2029. But the stock had a heck of a run, so I just took some money out of that, put it into Broadcom because I thought Broadcom's quarter was great. And anybody that knows this management team, they have always been conservative. You're gonna
Okay, we're dropping pretty hard here.
fiscal 27, they're gonna do $100 billion in AI. They just didn't raise that number. That's up 100% year over year, and the whisper number is like 150.
S&P 500. Below that now.
But wait, it doesn't have to give higher numbers than 100% growth. And oh, by the way, earnings grew 54%, revenues 47%, semi total revenues in the quarter 78%, and AI semi total total revenues was 143% growth, and they guided to 200%. Software, they're guiding to 31%. So they gave you a lot here. This is a great company, and now the stock is only up 13% on the year, and the valuation has come in. I'm probably not going to get the bottom, Scott, but I will be buying and taking the Meta money and just continue to buy it on.
Well, what has been, at least, for most of the day, 2/3 of the trading day today, a primarily tech-led sell-off is obviously a little bit wider now when you have the Dow's down 740. So, you're getting to the point where you have a lot of the big names in market cap, the larger ones within the market that are down, quite a bit. You got a lot of the infrastructure plays around the AI story down too. Let's bring in the Wharton School's Jeremy Siegel, professor of finance. It's good to add you to this conversation, Professor. What do you make of what you're watching?
Well, Scott, you stole my thunder because one of the oldest sayings in Wall Street is up the staircase, down the elevator. And that's exactly what happened when you have these super moves like we've seen in the chip stocks, the memory stocks, the trend follow, the momentum players. They're just on it. They have, stops. Whenever it goes off the trend, they're out. They're just riding that train. And that's what
Wow.
that's rarely the top. It could be the top, but usually it's a very short-term top, goes down, and then tries to build up, and that's the point where you kind of look, can it break the previous high? If it doesn't, then that could be the start of a more major downturn. But this is a very, very common.
Look at RSI is oversold now. Last time it got oversold like this, it did manage to flatten out. Looks like 735 is very close now.
Jeffrey Gunlock was sending me in earlier, and I spoke about on halftime. When you start to get into the 40% concentration ballpark, you start retracing certain other periods of time that have had bubble-like activity. Not all of them have necessarily ended badly, and there's not yet evidence that this one will. A couple days doesn't make anything other than a pullback, right? But I'm wondering what you make of that, the fact that we were just simply ripe for something like this.
Well, I remember bubble proportions of the S&P 500 back in 1980 in energy, when we know what happened. OPEC restricted the price, and the price of oil soared. That disappeared quickly. And then, of course, the other one where technology went way up was, of course, the internet bubble of 1999-2000. Now, again, as we all emphasize, this is a very different situation. And this AI.
All right, let's see what the VIX is pushing a bit higher now. VIX is pushing higher. Getting close to those 22 calls if you got them. Wow, your weighted indicator is minus 800, Grover. All right, looks like we're going to bounce now. Bounce coming.
spending a large portion of your free cash flow, it morphs into something else. Is that a worrisome signal or just the cost, literally, of doing business?
Looking for a bounce. Let's see what VIX looks like. All right, I'd like to take some more VIX off. I'd like to take some more of this VIX, these 22s off. Got a nice gain here. I don't want to give back too much if this drops off. Yeah, maybe it goes a little bit higher. Okay, Netflix, nice bounce in Netflix. Netflix going.
Professor, stay with me. We're obviously looking ahead to the big event 1 week from today, being SpaceX and the public offering at the NASDAQ. Retail is going to get a big slice of that. It's going to come at an interesting time, especially if you have a pullback of some degree, even more so into that. Brokerages that offer shares are doing so with some significant restrictions related to retail. Seema Modi joins us now with that story, and it's a big story that people need to be aware of.
I think so, Scott. SpaceX's unprecedented 30% allocation to retail investors is expected to open the door to many first-time traders who have not participated in IPOs in the past, and that's why brokerages are reinforcing their anti-flipping policy. For Fidelity, Charles Schwab, there are some consequences if you attempt to sell in the first 15 trading days that could result in being banned from participating in future IPOs. At SoFi and Robinhood, they're sticking to 30 days. The question is, does this policy actually help instill more stability in SpaceX shares after it goes public, or does it put some smaller everyday investors at a disadvantage? It's worth noting Fidelity is also lowering the minimum amount of money required in an account to participate in this deal from $100,000 to just $2,000.
All right, Seema, thank you. I mean, there's news on multiple fronts as we look towards this big event. Demand's going to be a key question around that IPO. But a move by the S&P not to include SpaceX, at least on a fast track, into its index could have far-reaching.
VIX certainly didn't look like this was going to be the case yesterday. We just stuck down to the lows. Big reversal today. I got the June and July 22 calls for VIX as a hedge, as I don't think the market's going to make too much more downside. I'm going to take some of these off. I took half off a little while ago. Maybe I should hold. I probably should hold some into Monday. They're a hedge, not a trade. So I got to resist the urge of taking the trading money off and negating the hedge that I originally took the trade for in the first place. So got to stick with it just in case this spikes up towards 25 or 26 or whatever, or certainly if it spikes up to 30, I need to have these VIX calls, this hedge in place. So I'll leave them alone.
Said on I think it was during halftime last week, we were going around talking about engaging demand from just our little, unofficial survey, if you will. You said you would buy this in a second. Still
That's kind of where I'm going to start, because Broadcom's dominates versus SpaceX. Shares getting crushed yesterday, down more than 12%. The company forecasted AI chips disappointed investors. Down again today. Really timely conversation. What did you want to hear from Octane and Broadcom? Well, the biggest thing, I mean, yesterday on the news was the fact, as you said, its shares were falling, dragging down some stocks. It's having another bad day today, and that's on the heels of basically a lighter than expected forecast for revenue in the current quarter. And remember that is on the heels of a huge run-up, adding hundreds of billions of dollars in market capitalization capitalization in a matter of days. What that speaks to is just how high the expectations are for chip makers like Broadcom in the AI era. And if you don't meet or exceed expectations, and sometimes if you don't exceed expectations by a lot, there's going to be disappointment. What people are worried about, and a theme that we kept coming back to during the conference yesterday, is whether end user demand will be sustainable. And that's demand for chips and the infrastructure needed to for these large language models that are basically changing the way we live and work and operate. And then whether there will be end user demand for the actual outcomes, the actual services that are being created by OpenAI and
Watch for a nice bounce here.
other large language models that are investing this infrastructure. So Tom, I want to jump in because I want to go to part of that interview that you had with Hock Tan over at Broadcom yesterday. This is him. There was a lot to choose from. This is him just weighing in, Hock Tan at Broadcom, on the AI super cycle and the hype cycle, the enthusiasm.
Yes, we are kind of like AI in a very surreal environment. Frankly, I don't think it's hard not to, but no, just focus on fundamentals, great value, and stop thinking about stock price. Trouble is very hard to do.
Yeah, I would imagine it's very hard to stop thinking about the stock price. That was Hock Tan on the Broadcom AI hype cycle from your conversation yesterday at the Bloomberg Tech Summit. I mean, it is hard to walk around San Francisco and not think about AI because it is everywhere. I mean, every single ad, every billboard from the legacy tech companies talking about how they're harnessing AI agents to startups that at this point I've never heard of. I mean, this is the environment that we're in right now. Yeah,
All right, looks like a nice little rally here, potentially.
San Francisco, it is surreal, and we are in something of a bubble. And I don't mean a bubble in terms of inflation of stock prices, although that may be the case. I just mean a bubble in terms of the fact that this is on everybody's mind. It's the topic of conversation, and there's a big conversation happening right now about whether we've experienced a paradigm shift from where the old values, the old adages, and the old truths about how markets operate, boom bust cycles, and whether we're breaking out of it. There's a lot of people who are very pessimistic about the idea that we are in a bubble, that there will be a crash, that demand will not meet these expectations. There's also people who say we kind of entered a new phase, and I just want to take one case in point. When I was talking with Broadcom, with Hock Tan, I asked about, this is a company that has built itself in many ways on acquisitions. Hock is known for big, bold acquisitions. Not all of them came together, but he made some really, really big ones, and that was very much a trademark of the way he managed it. Now, in the generative AI era, he has obviously embraced AI chipmaking, providing an alternative, a competitor to NVIDIA, which is the far and away leader, right, in designing these AI accelerator chips.
S&P is starting to bounce.
He's basically said we're kind of entering a post-M&A phase where I don't need to do that to add growth. What I'm doing now is doubling down on
Shorts are starting to cover. Shorts covering.
Google through 2031 to provide CPUs. Another one is that they're dealing with Anthropic.
Okay, the New York Fangs are turning up. You can see stocks like Microsoft turning up off the low. Microsoft shorts covering. Apple shorts covering. NVIDIA shorts covering. Tesla shorts covering. SPY shorts covering off the low. Okay. We're due for a bounce. Pretty extreme. We're going to have dealers close positions, so we could get a nice little bounce here.
Working to advance the frontier are just going to need access to capital, and I think the public market is very well suited to that.
Could be just a little short covering soft bounce. So I wouldn't get too excited about it, but it looks pretty good so far.
Raising tens of billions of dollars in a new share sale. That came from MFT, but everybody seemed to talk about the
multi-billion dollar deal whereby a company, whether it's the OpenAI and Anthropic side of the fence or the Googles, and the Metas, and the Microsofts of the world, these so-called hyperscalers, they all are looking for ways to raise the capital that they need to keep developing their models and to keep ensure that they have access to the computing power. It's very expensive. It's very capital intensive, as you said. Every couple of days there's another, multi-billion dollar deal, and we're talking about we're on the cusp of three major IPOs. Another big theme of the conference, another big theme out here in Silicon Valley is SpaceX, Anthropic, OpenAI, all of them looking to raise tens of billions of dollars in the public markets. And just when you thought it was safe to kind of get back into IPO mode, here comes Google, which IPO'd decades ago. They too are going to tap the public markets through an equity offering, again to raise tens of billions of dollars. But to get back to Daniela, one of the nice things about that interview was getting her to weigh in on the IPO. There's not a lot that they have said about their IPO plans. There's not a lot that they can say publicly. They did file confidentially, and they really need to be careful to not run afoul of SEC rules. But she did, to our delight, talk a little bit about the IPO and just admitting, like, yeah, we need this is another source of capital for us to buy those chips and those data centers.
Yeah, it's kind of a good segue to talk about an interview that you did too this week, Tom, with a company that did go public a few weeks ago. Carol was there for this.
It was incredible.
She's been raving about it. We're talking about the interview that you did with Cerebrus's CEO, Andrew Feldman. Let's take a listen to what he had to say about the idea of bubbles.
I think historically bubbles were characterized by a notion of if you build it, they will come. What is unusual about AI right now is the builders are so far behind the demand is absurd. We have a backlog of more than $25 billion of demand. That there are none of us, not us, not AMD.
Is Cerebrus CEO talking about demand?
Are driving. And that's sort of, in a lot of ways, the opposite of a bubble.
Andrew Feldman, Cerebrus's CEO, talking to you, Tom, earlier this week at the Bloomberg Technology Summit here in San Francisco. The demand question, I think, is a really important one right now. He pointed, if you're just listening to us on radio, he pointed to the audience and he said, your employees are driving, and he's referring to the executives in the audience there. But at the same time, we're hearing from some companies that they want to crack down on token usage at their companies. We had an executive at Uber this week.
Microsoft rising a bit more.
Well, the idea of all these employees using all these tokens and us spending so much money, we're not actually seeing a return on that. How are you thinking about that part of the conversation right now?
Mm-hmm. Yeah, we've talked to several executives about that, including the Verizon CEO, and there's two schools of thought. There is the people who say, look, yeah, we do need to impose limits. We don't want people, just willy-nilly using this computing power, which is so expensive. And so, yeah, they're being a little bit more choosy. They're putting limits. They're metering. They're throttling, whatever verb you want to use. They want to know that there's going to be a return on that investment. So in the earlier days of the generative AI phase that kicked off, late 2022, there were a lot of companies who were telling their employees, go, experiment, build, create chatbots, and now we're talking more and more about agents. That's still happening, but I think people are starting to get, and businesses are starting to get more strategic about how they're doing that, how much you can spend. And so it does make sense for people to be a little bit more choosy, be a little bit more, but impose some restrictions, put some parameters around that. So I think the other thing, well, go ahead, Carol.
No, you know what I love too is when you talk to Andrew Feldman and he said you're gonna see people shopping, I think, for AI, right, in different models or usages like we go to Costco. Like it was a really smart kind of analogy after how you think about it.
Yeah, I remember him talking about buying a big tub of mayonnaise. And, you just don't need it, so you gotta be strategic. The other.
Your note today says Apple's going to show a less ambitious but potentially significant AI plan after its attempt at Apple Intelligence.
Microsoft turning up.
Why do you think fireworks?
I mean, to me, it's really, look, when it comes to iOS 27, when it comes to
S&P turning back up.
it's the first time they actually are going to bring the goods in terms of you're going to have the iOS update, you're going to have the technology that's ultimately going to plug in terms of Gemini, Anthropic, and all LLMs that will now really be right sort of be foundationally on the Apple ecosystem. Last year it was void. 2 years ago they promised everything, as we know, never came out with this. I think it's actually the first time that they now put their hat in the ring and they actually get into the AI game from a consumer perspective, despite the last few years, obviously, some of the disappointments we saw.
You think he is overly ambitious on his expectations?
No, I think Dan sees it the way I see it, which is that they're finally going to ship some AI features that might work.
Well, that sounds like a ringing endorsement for a really exciting day.
Compared to what's happened, it does sound like an endorsement. But what I'll say is, in the past, so I'm comparing this to the Apple Intelligence rollout or announcement, because it never really rolled out the way they expected. It was all about the vision, the omniscient AI on your iPhone. Now you know exactly what you're going to do and get things done for you. And that never materialized. I think what Apple's doing this year is taking a much more realistic perspective into what the technology can do. And they're leveraging their operating system in order to deliver that experience. So instead of the app letting you know when your flight's going to depart and pushing you a notification, it's simple. When you're opening your iPhone and you pull down on the center, you'll get a search and ask functionality that's going to help you tap into AI, so you don't necessarily need to tap in.
Microsoft continues to rally off the low.
To me, that is
Shorts covering, maybe some new money coming in for next week.
Significant enough to keep the stock moving, because I mean the stock's already moved. Yeah, the stock before this little sell-off that we're in the midst of was at an all-time high.
Sure. I mean, look, to Dallas's point, if you didn't have 2.5 billion iOS devices, 1.5 billion iPhones, it would be a sort of, okay, this is fine but not great. The reality is that they have an unmatched consumer ecosystem. And now this is going to be the start of monetization. They're going to be essentially a toll collector on the consumer AI highway. We talked about $400, $75, $100 a share for AI. Maybe some of that's starting to get factored in. But I think also service is going to come out there. And this is really it. I mean, we're going to double down on services.
20 minutes to go. A little more than 20 minutes to go. 20 minutes, 30 seconds to go.
What's going to be the monetization of AI, and we believe 20% of consumers in the world will ultimately access AI through an Apple device.
This will be the most public event, if you will, the most important one for the baton pass, right? Not an earnings call where that happened a little bit, but this is now wide open in front of us. Tim Cook passing the baton to John Turnus. What do you think that means for how important this event is in Tim Cook's mind, given it's the last WWDC that he's going to bring to market, so to speak?
Imagine if we, not going to happen, but imagine if we put in a hammer. Guess it wouldn't really matter because it's inside price action. It's not really at a pivot low. We could produce a pivot low here. Don't see it happening though.
Even though I would say that AI is important, it hasn't made a major dent on the iPhone or the smartphone market yet. And Apple is up 53% over the past year, not because of AI, but because they've sold a lot of iPhones. Even that being said, Cook wants to leave this in Turnus's hands, saying you're on the road to this AI transformation, and I've left you in a good place.
Does that factor into what happens on Monday? Just knowing that is on the table?
No doubt. And look, it needs to be that Jalen Brunson moment for Cook, because ultimately it's handing the baton. But as Alex, and we've seen it firsthand, you need to make sure this does not disappoint, importantly for development.
We'll see. I'll see you again out there at Apple Park on Monday for both halftime and closing bell. We look very much forward to being out there once again for that big event, the biggest of the year for Apple. All right, we are, as you know, under significant pressure. The Nasdaq's hanging out
That's true. Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Bob for a long time. Jim, but then program that 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference. I'm kind of great. I track options flow daily.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths stacked with content curated to fit your unique goals, you can spend less time searching and more time.
At GMC, you may rest in 10 seconds.
Welcome back to Market on Close. Qualcomm is lower today despite a price target hike from JP Morgan. The firm boosted its target on the chip maker to $265 from $160, expecting it to outline targets for data center revenue of more than $3 billion for 2027 and $35 billion by 2031 at its investor day on June 24th. JP Morgan placed Qualcomm on its positive catalyst watch, but maintained its neutral rating as it awaits evidence of execution. Of course, it's time for Options Corner. Joining us, Rick Ducan, our lead market technician, here to take a closer look at Qualcomm. And despite that positive note that I just mentioned there, we are seeing Qualcomm under some pressure today, more so than we are seeing the broader market. But how are we seeing Qualcomm stack up against the market?
So, I mean, even with today's decline, it's still up almost 48% during the past year. SMA semiconductor ETF still up almost 129%. So, you know, these experiences may feel quite painful at the time, especially if you got in near the top. But it's a common situation that happens, especially after these explosive upside moves. Volatility cuts both ways. It's much more fun to be on the positive end of it, I guess. But you know, this is just kind of something that happens. But Qualcomm, not really the strongest performer of this group here, and kind of what we're focusing on here is data center infrastructure.
Low tick alert minus 800.
Right now, these AI data centers.
Another low tick.
Computer clusters, need all kinds of equipment, networking, software and hardware, fiber optic cables, all kinds of stuff here to make them function smoothly here. So this is a kind of a picks and shovels type of category here for this new ecosystem that's developing here for these names here. So Qualcomm Investor Day also coming up on June 24th later this month. So investors may be looking for more use of their diversification efforts into this space.
Yeah, and you can see we've seen some huge moves in some of these names, but you know, a 48% move to the upside is not anything to shrug your shoulders at. As we look at Qualcomm, though, on its own and its technical setup here, 17% of that move has come just in the last month. So what are you seeing here?
Yeah, a very sharp rally here. So even before we had earnings, you can see we had a notable gap to the upside here. Kind of pales in comparison to what's happened since then. But still, another gap was formed shortly after our earnings event there. From there, you could draw this very steep upward sloping trend line here. We had our 52-week lows come in just shy of 122. From there, we're up more than 78%, almost 79% still, even with today's decline. So again, when you kind of put it in perspective, you know, we're still up very strongly here in a very short amount of time in this name. So you could also say that we have a corresponding boundary line going down across a couple of notable highs. 259.92 is where we topped out a little more than a week ago here. It can be tricky to find areas of support when you have such a rapid climb here. One thing you could say is, well, we had a small gap here that's around where we had some low points around 228. That could be one area to watch now for upside resistance if we do start to recover. In terms of support, 206 stands out. All the way back here, we had a notable intraday high. It wasn't really a strong source of support or resistance down the road, but that is one area you could also possibly consider here. 191 also marking another extreme low point that helped form our trend line. When we think about our moving averages in this case here, we are finding ourselves quite close to the confluence of our 21-day EMA and TO representing a month of trading activity and our trend line here. So those come together around 219.50. 250 or so, 220. We have given up our shorter term 5-day EMA in dark blue here representing 1 week. So this is an early warning sign of
All right, we had a little bit of short covering there. We've got 13 minutes to go. A little bit more short covering. Okay, SPY continues to rise here. SPY.
So in terms of open interest, June 18th, in this case, is our yellow box here. So that is our expected range over the next 13 days, plus or minus 13.5% roughly here. One big trade I saw, plus 498, September 18th, 270 strike calls, and a 2550 debit, $1.26 million bullish play. Looked like it was an opening trade flow.
All right, Rick, we really appreciate you breaking down those moves we saw in Qualcomm today. Again, down about 10% for Qualcomm, trading at right about 219. Thanks to Rick Catterley, market technician, for breaking it all down for us. Rick, have a great weekend. Coming up next, we've got Overland stocks coming your way. George Tillis has Planet Labs today. An earnings beat was not enough to save the company from its sharpest single-day drop in almost 2 years. We'll talk about it next.
Tesla turning off the low. Microsoft, just a little bit more short covering. Apple, Amazon, Google, all showing some signs of short covering. Coming into the last few minutes of the trading day, we got 10 minutes left to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. A rather bearish day today. We haven't seen one of these in a long time. In the last 10 weeks, this is the first big bearish candle we've seen. You have to go back to February to see a candle that big, a range that large. All right, starting to rally now. All right, we got dealers covering, traders covering positions, shorts, new longs coming in, people scalping. Last few minutes of the trading day, looking for a bigger bounce. Futures look pretty good, turned back up. We're pretty stretched on the weighted index. Weighted signal was down at minus 800. That was really extended. Haven't seen one of those in a while. Netflix going a little bit more now. Netflix, nice little rise here. All right, S&P, spiders coming off the low. Got just under 5 minutes to go. Three minutes.
investors, prop firms, speculators of all forms were getting paid to basically gamble on far out of the money calls. And that hit a wall today. So volatility is going up. But the catch is it was already up a ton in those stocks. So traders here are really having to scramble. So much so that it's spilling into the broader market. If you're wondering why today, bonds are not helping.
Netflix continues.
But the key message is that unlike stock prices that usually go up, volatility metrics stay range bound. And coming into this week, we were way off the ranges, Scott.
Oliver, great stuff as always. Thank you for a good week. It's Oliver running for us with the options action. Speaking of crypto, Mac, tell us ugly there, no doubt.
Not looking good. Bitcoin briefly breaking below 16,000 today, touching its lowest level since October of 2024, down 18% on the week. Ether's getting hit even harder, off more than 20% in the past 5 trading days. A part of this, it's technical. You're seeing cascading selling pressure after roughly 1.5 billion in crypto liquidations over the past
EWC pulling back in. EWC Canada, no follow through.
Bitcoin spot ETFs have seen about 2.9 billion in net outflows over the last 9 trading days, and a corporate treasury trade, long treated as a leveraged bet on crypto, is losing steam too. Strategy down.
All right, EWC, I got stopped out.
The second time it's ever done that. Bitmine immersion, the Ether treasury proxy, down more than 10% on the day. Scott?
Okay, Mac, thank you very much for that. All right, Carrie, you got about 2 minutes to take us towards this close, and it's going to be an ugly one. We know that. What do you make of it?
Look, we can't have markets go up every single day, as nice as that would be. So I see the correction today as a really healthy part of the market. We have a number of names that have done absolutely extraordinary, despite a fair amount of headwinds, right? Like conflict overseas. So what we're seeing today is that some of those expectations had gotten a little bit ahead of themselves. Also, a lot of money had come in onto these names. So I think it's healthy that people are looking to take a pause here.
You think it's the start of something bigger, at least in terms of the rotation out of tech and potentially into other areas?
Yeah, and we think, I mean, this is the playbook that we've had for a while, where yes, AI and technology is incredibly important, but eventually those benefits start to migrate to other areas of the economy. That means, going down cap, going to other sectors. We think this is a trend that will continue over some time. That doesn't mean that other names are going to plummet. It just means others are going to benefit as well.
What about the dip buyers?
Got stopped out of EWC.
They still say, you know what? We're big believers in the AI story. Alphabet and Meta don't go to market if they're not still big believers in the story. So why shouldn't we be?
Well, think about it. We've had $800 billion of new money coming in from the retail side into ETFs today. That's on pace to be one of the best years ever. So there is still money coming in. Now, the thing to remember, though, some of those names that you mentioned need to come to market in a way that they haven't in the past, right? This CapEx needs to be funded in some way. So you're right. In order for them to fulfill their CapEx streams, they're going to rely on this incremental dollar coming in. So it's important that they continue to tell that story.
All right, that's it, folks.
You have a good weekend, Kara. We'll talk to you soon. Thanks for that.
All right, have a good one. I know it's been a nasty day. Hopefully you could navigate some of this and you did take some profits off in the strength. Getting ready for next week. We'll probably have an opportunity at some point next week. I don't know if it's going to be Monday. It could be anywhere. It could be any day next week. Looking for maybe 3 to 5% pullback in the markets, maximum. I'll send out I'll send out the video somewhere around Sunday, around 2 p.m. So be sure to look for that. Otherwise, enjoy the rest of your weekend. Looking forward to it. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday, June the 5th. Straight up 4 p.m., the closing bell. Have a good one. Take care. We'll see you on Sunday. Ciao.